Okay. Oh, I think my mic's on. Yeah, there we go. Here. All right, we're good. Hey, good morning. Thanks so much for joining us today for day 5 of our 6-day super mega awesome traders conference. We really appreciate you guys attending this week. We've had a super awesome turnout. It's been our biggest event ever, and today shall be no different. We have some great speakers. I know Price Headley's waiting in the wings right now to come out, and I'm coming at you from Texas, Southern Texas. Jeff Gibby is coming at you, who's hosting the event from Salt Lake City, and Price Headley, I think, is somewhere like in Kentucky or South Carolina or something. I'm not honestly sure. Anyway, we are MetaStock. If you haven't heard of us, I'm going to play a little video for you right now. Oh, but I'm not sure if I remembered to rewind it, so give me 1 second, please, before I do that. No, I didn't. I didn't rewind it. That comes with age. All right, here we go. Oh, that's not it.
Hi there. Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
All right, I hope you enjoyed that little presentation about who we are, what we do. We are sponsoring this event, and the funny thing is while the video was playing, I was going to jot down a few things to remind me what to say before event started, and I didn't do that. I went around and got some water, and then I spilled the water. So now here I sit with a blank brain, not remembering what I was going to tell you. But I do know there's one thing I was going to tell you. If you want to register for today's event, just go to metastock.com. There's a banner at the top, and you can register for, it'll take you to the landing page where you can register for today's event. You may be asking yourself, why would I want to register for today's event? I'm watching it right now on YouTube, and I haven't done any such sort of thing. Well, you can still watch it on YouTube even if you register, or you can watch it and go to webinar. It's essentially the same experience. However, when you register, you become eligible for the door prizes that Jeff gives away, I think, about every hour throughout the event. Things like books and free services and education. It's, obviously the value varies, but it's pretty good stuff. And it's very simple. You just go and register and you're set to go. Also, if you go to that page, you can see today's schedule, and you can also see the schedule for tomorrow. And I think that's a lot of good reasons why you should register. Also, what we'd really appreciate is we're cruising right up to about 80,000 subscribers now on YouTube. If you go ahead and like and subscribe and ring that bell, that would be so awesome. We'd really appreciate it. And that way you will receive notification whenever we have a live event. We have multi-day events like this about once a quarter. We have all-day events about once a month, and we have hourly events once or twice a week. And if you go ahead and notify yourself, or I should say, like us on YouTube and hit the bell, you'll be notified whenever that happens. Okay. Also, while we're going throughout the day, we really encourage you guys to be very vocal on the chat on YouTube and go to webinar. It makes it a great experience for everyone. We try to be pretty casual here. We really encourage any questions you have or any comments. They don't have to be nice comments, but just be respectful of the presenters and your co-presenters. I see right now we have already Ciao Vincenzo from Italy. I see Anton. There's a lot of people here, but no one's really being very vocal. Go ahead, give us a shout out right now. And say hello. We really appreciate your interactivity. I think that's really about all there was. I know that, there's another thing. Right behind me, you probably can't tell, but the previous day's recording is going. I think that's day 3 on my TV here in my studio. If you're wondering, you can, of course, watch all the day's events. There's 6 whole days. We've gone through 4 already. If you want to see anything you've missed, just go to MetaStock. Go to YouTube-Metastock. YouTube/Metastock? YouTube.com/Metastock. I'm pretty sure that's the one. And you can see all of the day's events. I'll go ahead and, if you're on YouTube, obviously you know where it is because you're here, but I'll go ahead and put into chat the playlist where you can see all 6 of the days all lined up for you, and you can go through them. And we haven't had a lot of time yet this week, but I know Jeff usually goes through and sets up all the chapters in the video so that you can quickly find whoever you're looking for. All right. I'm going to give you about 1 minute and 30 seconds to listen to some jazzy music while I make sure that Jeff is doing okay on the other end. And thanks so much for joining us again in Successful Trading.
Hey, everybody. Good morning, Neil. Good morning, Vincenzo, Anton. As you're coming in, make sure you say hi. It's good to see you today. Day 5 of the conference. And thanks for coming. All right. So as you know, or probably know, I'm Jeff Gibby. I'm going to go ahead and kick us off, read a legal disclaimer, talk about our guests, talk about our sponsors, and just kind of keep everything rolling today. So it is good to see you. Let me go ahead and kind of do this. Today's demonstrations are designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. I'll also tell you that we're not paid to promote a security. We don't promote securities. We don't encourage you to buy securities. That's not part of the business model we do. So in any case, I do want to say thank you real quick to our sponsors. Stocks and Commodities Magazine has been sponsoring our MetaStock conference since the very good beginning. We do appreciate all the work they do. If you're not familiar with stocks and commodities, you can find them at traders.com, www.traders.com. They've been publishing since 1982. They've done 17,000 articles. They've got 1.3 million subscribers, and they do a great job. So our appreciation to them. Also want to thank the CMT Association. You can find out more about the CMT Association at cmtassociation.org. If you want to either work for a bank, or you work for a bank and you want to get more assets under management or more responsibilities, a CMT designation after your name might be very, very helpful. You should look into it. You can find out more about that if you go to cmtassociation.org. And last but not least, the AAII, the American Association of Individuals Investors. They've been a sponsor of ours for a couple of years now. They're great to work with. If you're not familiar with them, they do all kinds of, if you've heard of the AAII Investment Sentiment Survey, that's a thing that they do. They've been a nonprofit since 1970s. They've got millions of members, and they do a really, really good job. So if you're interested in finding out more about the AAII, go to AAII.com. So, good morning, everybody. All right, and of course, we're MetaStock. MetaStock has been rated #1 in its price category 31 years straight. We've talked a lot about how you can scan markets, test ideas, forecast and find probable price movements, get real-time signals, commentary alerts, all that kind of stuff. Starts at $69 per month. If you buy a month, we'll give you a second and third month for free. That can be as low as $23 a month for 3 months. Find out why it's rated #1 31 years straight. Go to metastock.com/conf promo. Give us a call, 800-882-3040. Or go to metastock.com/sales chat. Good evening, Udom. It's good to see you. Anton, hello. Vincenzo, hello again. David says 140. I don't think that jives well, but okay. Good morning, Neil. And also, good morning, David. It's good to see you too. All right. Moving straight on, Price Headley is a good friend of mine. Top market timer, used to submit, and Traders Hall of Famer. The one thing I'll say about Price that I could say a lot of things about Price, but the one thing I'm going to talk about Price is really kind of like the attitude that he takes to the analysis that he's been doing for research. One of the big things that he looks at in terms of stock trading and stocks and options trading is ignoring and focus or ignoring smaller opportunities and finding those stocks that are moving with momentum and moving with big opportunities. It's the subject of all of the research that he does. He does a great job with it. And I'm going to go ahead and kind of make him the presenter. Price, how you doing today?
Jeff, good morning. I'm doing great. How are you, sir?
I'm good. I can hear you. And I just set the screen share over to you.
Let me make sure that I'm coming through loud and clear, and on the screen share look good there.
Looks great, yeah.
Fantastic. Well, thank you so much for having me. It's always a pleasure to be with you on these awesome MetaStock summits. I'm truly amazed with the commitment that you and your team have to basically a full week plus of content through today and tomorrow. I know day 6 tomorrow. So I'll kick us off for day 5. And basically, folks, glad to have you with us. Talk about small account strategy. Well, I love strategies where it can be a small account strategy, a medium account strategy, even a large account strategy. But the big part of trading success in my 35 years of trading is you've got to prove to yourself that it works, and start small and know that your methodology is scalable to more and more money coming in as you gain confidence, as you gain conviction, and ultimately understanding about what you're trading and why you're getting in, and more importantly, why you're getting out. I'm going to share with you those themes here today. Talk about how we do it with our low price option strategy here. It's one that's been very popular with active traders. As I get it started, let me just remind you that the information I provide you in today's presentation is based on our proprietary research. It's intended for illustrative purposes only here. As you know, it should not be considered specific advisory recommendations today. Stock and options trading have large potential rewards, but also large potential risk. The past performance of any trading system or methodology is not necessarily indicative of its future results. Do see our terms of use on our bigtrends.com homepage for more information. If you don't know me, like Jeff said, he and I have been working together for more than a couple of decades. I launched Big Trends back in 1999, almost 25 years ago. So I caught the trading bug while I was at Duke University as a student, and saw the power of not just stocks, but options early on. And then basically went on to found bigtrends.com to share my systematic approach to the market. So as Jeff mentioned, I'm looking for the bigger fish here. I'm looking for the bigger moves on any time frame, right? We're not talking, when I launched bigtrends.com, somebody said, oh, you're going to hold for many years, right? I said, no, big trends happen even on intraday time frames. So you can really focus yourself on how to leverage this with this trading system mentality and methodology I'm going to share with you. And of course, MetaStock is, for me, one of the ultimate tools to basically test any idea, go scan for those repeating patterns, and find new fish that you're feeding yourself with, not just looking to be given fish, but to ultimately find your own trades and make your way into the future with plenty of new opportunities. So 3 tactics I want to talk about today. Trading same week options. You know, there's this thing called weekly options out there. And it's interesting because when I saw the power of options in the 90s, I was even talking to the exchanges and saying, hey guys, you know, having a month by month option is nice, but it'd be great to have a week by week, maybe even a day by day option. And I kind of snickered when I said that and said, that just sounds excessive. Guess what? 0 days to expiration options is now accounting for almost half of the options volume out there. Now, we're not going to go 0 days to expiration today. We're going to talk about week by week, every Friday being an expiration Friday with the weekly options that are now out there on basically every major stock. Any major stock that trades enough is going to have options on it, because you have a lot of people that don't just want to speculate, they want to also hedge existing equity or other positions out there, right? So the idea is that this gives you a way to kind of take any approach to week by week adjustments based on recent market volatility. You know, that's well worth your time and effort. So, but for us, we only trade on certain days of the week. You know, we're not going to trade every single day in front of a weekly expiration. You want to increase your leverage, but you also want to manage, you know, that you have some time left and make sure you can take advantage of this. So one of the ways that we do this is what we call double confirmation here. So double confirmation is basically where we want to try to minimize fake outs off of just one indicator with 2 techniques happening at the same time. A lot of people tell me, oh, I'd rather just trade price action. It's more pure. There's no lag to price action. But you know what you also get with trading pure price action? You get a lot of whipsaws. Let me get you a neck brace for all the whipsaws you're going to face if you're just trading, especially on a short-term intraday chart. You'll see a lot of fake outs, a lot of ups and downs, and we want to try to minimize that kind of fake out situation there. So when we look at that, we say, okay, we're really focusing ourselves on how we can use these strategic stops and targets, set up a favorable risk-reward ratio, and minimize those fake out signals. So with that understood, let's walk you through these top 3 tactics to allow you to start to harness the power of these same week options. So the first rule is, which days of the week should we focus on? We don't want to trade these every single day. We don't get started on a Monday or a Tuesday trying to trade these. We typically will actually say, let's wait for the first couple of days to shake out in the markets and say, let's focus on typically a first new trade can come in on a Wednesday or a Thursday in the afternoon in both cases. Now, think about this. We're trading and recommending to buy an option on a Wednesday afternoon that's going to expire at the Friday close. For a lot of people, this is too aggressive. And so definitely it's not a widows and orphans strategy, right? We're talking about something that you got to use this with risk capital, but say that that's where your ultimate leverage is the greatest. I mean, sure, it could be the very greatest if we were trading it, say, here we are on Friday morning, trading options that expire at the end of the day. That's the zero DTE, 0 days to expiration mentality. I don't want to do that. I want to focus myself more on, okay, what's the better approach to say, how do we get focused on kind of the best type of situations out there in the markets. Okay, so when I do that, I say, okay, I know that I can focus myself on, okay, where we're going to get a quick trade opportunity, and also where we're going to be able to manage risk intelligently, right? Because if I don't manage risk, I won't stay in the game very long. That's really the key. That's why I've been able to stay in the game for 34 years and counting, is because it's all about kind of thinking first about risk and then about reward. So we're going to show you some examples here, but first, why should you care about the strategy? Again, anytime I talk about dollars, I always want to kind of caution that we're looking backwards here. We can't guarantee the future. So past performance will never guarantee future results. But you see, it's been a lot of fun here, basically since the pandemic year of 2020, right? I mean, going back to the beginning of 2020. So you count up, of course, a lot of up and down moves in this last several years. And you say, well, look, if you started with a $10,000 account, you could have grown it to $47,000 and change. So you have a $37,340 gross profit, adding up all of your winners and losers before commissions, before subscription investment. This assumes that you would allocate up to $2,000 into each new options trade that we call out, which will typically have about a trade a week with this strategy, either on a Wednesday afternoon or a Thursday afternoon. So and you can see it's updated through today, right? So the idea is that on all closed trades, anything that's open doesn't count. So the idea is that, look, it's about stacking the odds in your favor across a large number of trade examples, right? So we don't do any compounding with these numbers. The future will vary, right? Could be better, could be worse than this. But the idea is that you should expect some variance, but expect that our system will stay the same. So let's talk about the system, how we find these trades. And first, I want to talk about, too, the concept of what is the system based on. It's based on not one, but two indicators or oscillators. Now, usually I won't give this out for free, but I'm going to share with you as we get into the charts what the two of them are. I can't give all the parameters and settings, but I can kind of let you start playing around in your MetaStock platform with these indicators, so you can kind of get a sense of what I'm talking about when you start looking at it on the charts yourself. But we call out trades for our subscribers in this system. It's called Lightning Options Trader, and more on the system, how you can get some of those trades yourself down the line. But the idea here is that, of course, like two heads are better than one. Typically, two indicators are better than one, assuming that they're both useful indicators. But now we're coming up with a requirement that both of the indicators have to be giving us a fresh, new bull or bear signal when we get that trade opportunity, right? So we're looking at something, we're saying, okay, we want to take advantage of that. Both of them are showing us that we should be getting a more powerful signal if they're both firing at the same time. It's like two rivers flowing into one much more powerful river. That's where they put those power plants and stuff, where there's just a lot more power at those junction points, if you will. So for us, it gives us not just twice the confirmation. For me, it gives me twice the confidence that we know we need to be getting those trades out to subscribers when they set up and signal, because now we've got the kind of the extra power opportunity in our view. So let's talk about some of the success stories, the case studies. Here's a recent winning trade example. We'll talk about winners and losers today. And here's a great example of, like, you don't have to be early in a trend to make good money with options, right? The idea is that a lot of people think, oh, I've got to catch this low point on Royal Caribbean Cruise, RCL, the cruise liner. Well, the idea is that, look, we were catching it as both of our indicators here. This is the RSI with some unique settings here, not the traditional settings, RSI. But here's the big breakthrough idea here, is that most people think that overbought on RSI is a bad thing. Look at how long RSI effectively stayed overbought through this phase. This was back into early November, all the way through the latter part of last year. pretty much staying in that overbought top 30% of its readings. Second indicator in light blue in the bottom panel, the percent R, Larry Williams percent range indicator. Again, most people assume overbought in the top 20% of its readings would be bad. Well, guess what? When they both signal together here, this is right before Christmas time, just days before Christmas, you can see where both of them are crossing up, having been below their overbought thresholds. They're what for us is very bullish thresholds when both of them cross back up. We actually don't say that's a bearish thing. We say that's a sign that the institutions, who, let's face it, are the ones driving the markets, are actually showing us that indeed we're getting more buying power, right? They want to get on what's working. They want to get off of what's not working, right? So the idea here is that we're positioning ourselves for a nice pop to the upside over the next day to 2 days. Okay, so if we get in on a Thursday, we're only playing into the next day. I think this was one of those where we got in on a Thursday. We bought notice where the stock's trading here. It's trading about 127, and we're buying the 126 calls. These are slightly in the money calls. So if you're new to options, the idea of buying a call is that you're buying a right to buy the stock at 126. It's already at 127. So that 1 point in the money, $100 a contract in the money, isn't called intrinsic value, and whatever you pay on top of that, it's called the time value. So if it's a point in the money, we might pay $1.50 for those options. And you can see that then as it popped up to the high 120s, we're cashing it out when it doubles, right? So if we paid $1.50, when it's worth $3, we would cash it out, and that would be intrinsically up at 129, assuming the time value goes away as we get into the expiration. So we don't want to pay a lot of time, but we want to be real careful about getting that bang for our buck here. So we got the double. If you invested $1,000, you made $1,008 in profits before commissions on all these examples. Just the very next trading session. Now, if you're a smaller account trader, one of the things you're concerned about is, I don't want to get locked up with a bunch of day trades, right? If you do too many day trades, your broker will lock you up and say you've got to put in a bunch more capital before you can start trading again. Now, the idea here is that we want to focus ourselves on how we can do this and zero in on that we're going to do this by really even on a small account basis, and we get in one afternoon, the earliest would be out is the next morning. So that's 2 different trading sessions. So when we say one trading session, it's from one day to the next, basically in less than 24 hours. But it was technically, it was 2 trading sessions from one afternoon to the next morning. There's a lot more like that where it came from. So you don't have to worry about day trades with a strategy. So how about a bearish example? This is one we did on Best Buy that got to its double target. If we can get a double in a day or two, we don't try to sell part of the position and keep riding for a bigger gain. When we're trading close to the expiration, the double target is our target on the whole position. Okay, that's kind of counter to a lot of my other trend trading stuff where if I've got more time, sure, I'll try to let it keep running on part of the position. But here you don't have more time, right? It's in the next day or 2 max. So we're saying, look, take the bird in the hand of the double. We'll talk about stops here in a minute. But the idea here is that this is one where we were getting in right near, it turns out in retrospect, the end of the bear move. But the key is the momentum was now signaling that it was still in a fresh opportunity on the downside as of the close. That was August 31st. Now, August 31st, both the percent R here and the RSI are breaking down underneath their oversold thresholds. When that happens together, that's where we get interested. And you can see, so that's happening near the close. Stock's trading near $71. We actually bought a 71 strike at the money put, paid $1.07. These days, we probably prefer to get something a little bit in the money. But back then, we're saying, look, we're willing to kind of say we should catch some quick pops to the downside here. It went from just under 71 to almost 69. And again, that's what allowed us a chance to take that $1.07 up to $2.15 the next morning. We're cashing out right near those intraday lows, it turns out, in retrospect. We can't promise that. Obviously, there's times where we get a little bit of move in our favor and then our trailing stock gets hit. So we'll talk about that as well. So, but the point is that catch that quick pop, and then you don't care literally about what happens after that. I don't know about you, but in my early days of trading, whenever I would get into a position and then I would finally get out of a position, whether it was for a win or a loss, I would find that I would go back after I was out of the position and keep checking what that position did in real time and trying to make myself feel better about my exit, or maybe make myself feel worse if I exited prematurely or it turned around and I shouldn't have gotten out, right? If you do that, this is a good little psychology tip, then your ego is too involved in your trading process. Okay, you have I had it a lot in my early days of trading. You have a desire to be proven right. Okay, we all have that desire. And so one of the things you got to kind of check yourself on if you're a fairly active trader looking at stuff intraday and whatnot is, okay, execution is your number one goal. If you focus on how you've got a system that you can execute off of, how did you do on the way in? Did you follow the rules to get out? And whatever happens after that, you should not care. You can always go back and care and study it as what I call a post-mortem, which I do about once a month on my trading systems to make sure things are operating like they should be. If anything needs any tweaks, then fine, do that away from trading hours. I like to do it on a weekend where it's away from all the typical day-to-day noise of the markets, right? But the idea is that if you're doing that and checking a lot intraday, your ego's too involved in your trading decisions. You should say, I'm not going to check that once I execute, get out of the trade, then I'm not going to waste that time. I want to put that energy into new trading opportunities and executing the next trade, not rehashing the last trade and getting that energy that I need focused on the next opportunity used up, right? So that's a very important point about how you can maximize your energy during the trading day for the active traders out there, and then do your analysis of your system and its effectiveness after the trading hours, away from that time where you could be taking action in your next trade. So with that said, we got in, got out at that point, don't really care what happens after that, hit it the next morning. Now, as you can see, this strategy is going to be buying calls or buying puts. We're not doing any spread trades. We're not doing any type of exotic combination strategies. It's just we get into a call, we tell you when to exit that call with targets and stops. Same thing when it's time to trade a put, we'll trade a put. We'll take whatever the market's giving us. There's going to be bull and bear opportunities. How do we decide which one's our favorite? We go back and look at the history of which one has done the best on our system, usually looking back over at least 10 years worth of market data. So when we do that, we say, okay, now we've got an opportunity here to focus on kind of what the best of the best type of situations here. Here's an example we did using put option on Wayfair, the online retailer, ticker symbol W. Okay, and so again, we're not early, right? And again, you don't really want to be early, especially with the leveraged short-term options trade, right? You want to catch a momentum move. So here we go. We've got both the RSI in the middle panel and the percent R in the bottom panel, both crossing underneath their respective oversold thresholds together on the same bar. When that happens, right near the close here, the stock trading just over 50 bucks, maybe 50 and a half. We're buying the 51 strike put. So again, if you're new to options, a 51 put means you have a right to sell Wayfair at 51. If it's trading 50 and a half, it's about a half point in the money. I think we might have paid $1 for that option, give or take. And then when it dropped down here, pushed towards 49 bucks, I think it got to 48.98 on that chart there. At 49 bucks, what's a 51 put worth? You've got a right to sell 51. It's down at 49. It's worth $2, $200 a contract. If we paid 100 bucks, there's our double. If you're putting in $1,000 at $1 a piece, that would get you 10 contracts. You sell out all 10 contracts at $2 a piece, and there's your $1,000 in profits before commissions the very next trading session. So in one afternoon, out the next. That's very typical of what we're looking for, is that quick momentum, the quick opportunity, typically into the next morning is really where we're going to see the best bang for our buck. Now, let's face it, not every trade is going to be a winner. Anybody that tells you their strategy has all winners, you should not walk but run away. Everybody's got to learn how to deal with losses. And here's how we do our stops with this system. If we're targeting a double, our stop shouldn't be more than, on a growth-oriented trend trading system, it shouldn't be more than 50%. And that's what it was. Now, in this case, sure, we get a little slippage. Our stop's at 50%. By the time we get filled, we're down almost 53%. We got in, this was on semiconductor. And I thought, man, this is about as good as it gets on a setup, right? We're breaking out to new highs, closing near the highs. It doesn't get much stronger than that, right? Its history is good on it. Everything looks good to go. Guess what? Sometimes it can be everything's good to go and it still doesn't work. This is why you never average down. You never keep putting more capital in the next morning thinking, oh, this is a gift to buy into it the next morning on the dip. No, if it's not falling through like it should, usually that thing should have gapped up the next morning. When it starts to open lower and starts reversing, we're not even waiting to the end of the day like it suggests on this chart. We're actually getting out fairly quickly that next morning as it starts ripping down, because we had the 75 straight calls when the stock's trading about 76 and a quarter. We paid $1.53, 153 bucks. Most of that was intrinsic value. But the problem is, if the next day is the expiration and you are passive and you hold it and it finishes at 75 or less, you've got a total wipeout, right? So of course we took about half of that. We took a 53% loss. That's halfway there to the wipeout, right? But the point is that, okay, that happens. That's also why capital allocation is so important in your trading strategies. You cannot get too high or too low. You cannot put yourself in a position to be overreactive to, hey, it's been on a hot streak, I'm going to load up on the next one. Hey, it's been on a cold streak, I'm going to take a pause. I'd rather see you taking a slow but steady allocation to each and every trade so you can benefit from the systems, hopefully more ups and downs, but regardless, so you can continue to follow the systematic trader way of continue to execute through uncertainty, continue to execute and not getting too worked up about any one trade, not getting too reactive on any one trade. So we're stopping it fairly quickly that next trading day, down 53% and at least avoiding the minus 100%. So the idea is that, okay, everything looked good and still it didn't fire. That's just part of trading. Sometimes that's just going to happen. Could have been the market took a major turn. As you know, the market can be what I would call on a day-to-day basis very manic depressive, meaning some days everybody wants more risk and more pile on the upside, and some days, even after things have been working pretty well, they just want to rush out based on fears about the Fed, fears about the economy, fears about whatever the next inflation or jobs report is, you name it. So anyway, don't get caught up in that manic depressive cycle. Just execute your system through the uncertainty on a slow and steady wins a race on your capital allocation. Number 3 key tactic, finding a favorable risk reward ratio. We've alluded to this. We're targeting a double and then we're dealing with 50% stop losses. Okay, so obviously if you could double then 50% stop on each and every other trade, you know, that's going to stack up, you know, $1,000 profit on one trade, $500 loss on the next. That would, if you're doing that exactly that way, obviously there's going to be variability, but if it was exactly that way with a 50% win rate, 100% target, 50% stop, keep trading off back and forth, that'd be an average gain of $250 on each trade, because you've got to look at every 2 trades would net you $500. Now, again, we can't guarantee that. There's going to be times where it's working better, times where it's not. But the idea is that it doesn't take that many doubles to generate some pretty impressive net returns, if I do say so, over time. If we look back just over the last 24 months, so the thing about that, that's about 104 weeks. This strategy had doubles 31 times over that 104 weeks, right? So you're talking about nearly in the 3 out of 10 double target. Okay, but that doesn't mean that the other ones were all losers. It means that there's some that went on to smaller gains, some that went on to smaller losses in the 50% stop, and some that went on to the 50% stop loss. But the point is that it's about stacking, right? Stacking up and consistently participating. That's why I say, right, don't want to see you get too high or too low. I want to see you be consistent in how you continue to execute the trades. Sometimes trades will gap past our 100% target. These are definitely what we would call outliers, so don't expect this to happen. But it's one of the benefits of options buying that got me interested in options purchasing over 30 years ago, is that outliers, right? This is one we had on our system on First Solar, FSLR. It's coming in late July, prior July, where you say, look, guess what? We were getting a signal. We're getting that fresh crossover point on both the %R and the RSI in black. So that's happening. The stock's trading near 77. We're getting a signal to buy the 77 calls. Pretty aggressive, but it's 2 days away, not 1 day away from the expiration. This is on a Wednesday afternoon. So we said you could buy them for 2.49, up to 2.5. And you can see then if you're putting $1,000 in, that would get you 4 contracts. In this case, in on average for $996. And you're looking for that double. You're looking for that move up to $5. Guess what? There's a Joe Manchin was a key deciding vote in this Renewable Energy Act that came out of the blue and was announced that night. Guess what? Do you think anybody knew about it as the stock was starting to break out before that? Probably a few people knew about it, right? My view is that as a trader, I don't need to know every kind of insider move. I need to be able to follow what the institutions are doing, their pouring the gas on here. This is a fresh breakout. We want to be on the wagon before the close. So we called it out, said, okay, our system said, look, it's want to buy it, 77 called, $2.50 off the open. The next morning it's turning into up near 90. What's a 77 call? It's about 89.5 actually. At 89.5, it's worth $12.50, right? That's basically a 5-bagger, right? 2.5 to 12.5. So that's why it shows a 407% gain cash in soon off of the open that next trading morning. And you say, man, if you'd held it to the close, it would have gone to 100. That thing could have turned into a $23 option. But you know what? I'm not in that game of playing for the woulda, coulda, shoulda of riding out. We want to take that double or better. In this case, we get a wonderful windfall. That's like 4 doubles all at once, right? So you're saying, look, thanks very much. We'll take that and run with the 407% profit the next morning. That's not going to happen very often. It is a true outlier, but the idea is that we want to be ready for that. Sure, it could gap and be worse than a 50% loss too, but we want to be ready for being around for those. Most people are in line here, as this chart shows, for the magic indicator. Very few people want to follow the disciplined trading plan, trading system methodology and say, okay, good trading involves work. We obviously do a lot of that work for our Big Trend subscribers, including our Lightning Options Trader folks. But let's face it, everybody's looking for the Holy Grail. You don't have to be searching for the Holy Grail. You just need to find something that's had an edge and then be consistent about executing, not getting too high when it's working, not getting too low when you go through a little drawdown phase. That's the key. So we don't want to rely on the news for hot names. We don't want to waste hundreds or thousands of hours of back testing if you can get a shortcut to the front of the line about a strategy that has worked and allows you to focus on just being a good, consistent executor of your system. If you're putting $1,000 in, you say, okay, whether it's trading at $1 a contract, you get 10 contracts. Whether it was trading at $5 a contract, you only get 2 contracts. We're not trading for maximum contracts. We're trading for maximum results while executing through the ups and the downs of the markets. So this is really where it's about just being focused on how you can be consistent, how you can follow these tactics, and have some core rules where you don't have to watch the markets all day, every day. We know that we're only going to enter trades in this strategy. It's called Lightning Options Trader on a Wednesday afternoon, about 3 o'clock or after, usually between 3 and 3:30 Eastern time. So we're in the last 30 to 60 minutes of the trading day. We want to be on the wagon when we get a signal. If we don't get a signal on a Wednesday, we could also take it instead on a Thursday afternoon with just another 25 hours of trading time left, including the overnight. So trading hours are less than that. But the idea is that, look, if we're in on a Thursday afternoon, we got to be out the next day on Friday. Why would we do that? Because we know we're paying the minimum amount of time and we're getting kind of maximum leverage. If our system says, yeah, this one has a really nice historical edge for us, we're going to want to participate in that. How do we generate our edge? It's not with one indicator. It's a double confirmation, right? The 2 indicators both giving us fresh breakouts at the same time. We're talking about the %R, Larry Wynn's percent range indicator. I used Larry's technique in a very different way here, and then also with the RSI combined. And both of those are, if there's one big lesson I want you taking away from what I'm sharing with you today, and I want you to go look at it on your MetaStock charts, is that you want to focus on the unconventional wisdom of that actually going overbought is not a bad thing. Going into that strong buy mode, it's going to go overbought. And guess what? The institutions, if they're putting on the pedal to the metal and starting to put more and more capital to work into that name, that, you know what, when they both signal together, that's telling you that you're getting a rocket ship potentially taking off, right? You want that power if you're on the rocket. You don't want a weak launch that's going to crash back down to earth, right? One of the 2 indicators would be a weak launch. We would not trade that unless both of them confirm together on that same end of day basis. That's actually why we wait for the end of the day action. And then adjusting your risk reward, so you allow yourself the chance to double on the winners at the double point. We do take it off because it is a time limited asset we're dealing with a short term, 24 to 48 hours or so before expiration type of a situation. So it's something where it's not for widows and orphans. This is definitely something, if you want slower and steadier, you probably would take some of this philosophy and actually stretch out your time horizon. And you would give up some of your upside, but also give up some of your downsides. So you could throttle it back down if you wanted to once you learn the system on a shortest term basis and apply it for some other kind of intermediate term strategies But let's just remind you again, I always remind you when we show these past histories that it is a past history. Past performance does not guarantee future results. Future results are going to vary. This goes back to the beginning of 2020 with this Lightning Options Trader system. It says, look, if you have a $10,000 account, you're putting in $2,000 a trade. That's fairly aggressive, right? 20% of capital per trade. But in this system, you're not typically holding more than a trade at a time. The most we could ever hold at a time would be 2 trades in a given week. And then we'd be back out and back to silence. So you're always going to be at least 80% cash. That helps to mute some of the effects of whatever the leverage you might experience on the existing trades that we're looking at. And if that's too much for you, you could go with $1,000 a trade and 10% of a $10,000 account, just cut your effective return in about half, but also cut your risk in half. So keep that in mind. Whatever your relative risk and reward ratio is, you can adjust it. And I always encourage traders to start small, right? You could even do this with as little as 1 contract just to test the waters. Most of these contract prices will be somewhere in the $100 to $200 a contract range. So you look at that and say, okay, yeah, it generated $37,000 plus gross profit before commissions, before subscription investment, and know that it's going to vary in the future. It could be better or worse. But the idea is that what's not going to change is that we're going to continue to follow the system. So you say, okay, how can you take advantage of this? How can you get opportunities to lock in these really quick options, these lightning strike type of situations that can hit from one afternoon, and the last hour of the trading day can hit as early as the open on the next day's trading. Sometimes we'll carry them on through into that next day and possibly even into the second day, but most of the time we'll be getting out the next day after we got in. We call it Lightning Options Trader. We're going to give you access today to 3 months of these trade alerts from Lightning Options Trader. I don't want you to just think about it as a month by month. I want you to think about, okay, lock in some time where you don't feel like you have to panic. Start small on your capital allocation, on your number of contracts, and just test it out. Let the system prove it to you. Don't just take my word for it. But when you get started, you get some extra bonuses. We give you all the settings and rules that we follow so you can actually configure it on your trading platform at home to see what we're seeing. You also get a weekly video training from me. I post them every Monday at 6 p.m. where I recap the past week's trades, but I also talk about what my expectations are for the market over the next week as well. And then you also get access to me and my analyst team via dedicated email address. As an active Lightning Options Trader subscriber, if you see a trade, you're like, why are you recommending this? What are you guys thinking? I don't understand it. If you're looking out on your side and you don't see what we see, let us know. We'll walk you through what we're seeing. Obviously, we just tend to reinforce we're not doing any kind of personalized investment advice. It's basically just an educational support for our subscribers to Lightning Options Trader. If you bought 3 months off my website, $297 a piece, that'd be $891 you'd pay, but you're not going to pay that today. I'm going to give you what I call my flash options trading special here. So you're going to get 3 months of the trade alerts from Lightning Options Trader with the educational resources. I'm going to knock it down as part of the MetaStock awesome event here this week to just $247. Now, when you think about that, you say, well, hey, if you're putting $1,000 in, the chance on one trade, if it hits its double target, you can make $1,000. So obviously you could get a tremendous ROI off just one trade hitting its target. We can't guarantee what the next trade is going to do. Obviously, the next trade could be a winner or a loser. So be sensible. Don't overcommit your capital. Don't try to get it all back in one lick. But basically say, look, it's about focusing on where the opportunity is best. Members, the link on this site, by the way, is members.bigtrends.com/LOT. It's a letter O for Lightning Options Trader 3. It's a 3-month special. Members.bigtrends.com/LOT3. Now, also, if you say, okay, you go back and look at what would happen if you're only allocating $1,000 per trade on, say, a smaller $5,000 account. Interestingly, the return actually went up a little bit. It went up to over a $20,000 profit. So your $5,000 would have grown to $25,000 and change. This is before commissions, before subscription investment. Looking back to that same 2020 period, this one is only updated through last fall for whatever reason. But basically, you get the idea that it's about in that line of about half of the $2,000 a trade when you go in for just $1,000 a trade. You could go in for even less than $1,000 if you want. You could start small and build, right? So that's the objective here. Now, I'm going to show you that order page in a second, but we do get a lot of questions about how do I get started? What's this all about? And so basically, again, when we look at this, we say, okay, we're going to give you a lot of education along the way. I want you to understand the system. I want you to understand the methodology. And let me actually show you that page here before I go into this. Then I'll come in and answer some other questions and talk about some other kind of philosophies of trading success here. But the idea is that we've done actually an extra special thing on the order page that we've even given you an extra bonus, which is that usually my boot camps for this kind of training, if I'm going too fast for you, because I know I've covered a lot of ground here to kick things off this morning. But the idea is that we'll also give you a multi-hour, 3+ hour trading boot camp about how you can trade these quick weekly options. And you'll get lifetime access to that boot camp if you want to add that to your order today for just $77. It's usually $295 for more than 3 hours of training that you get lifetime access to for just $77. You can just hit the add to order button if you want to do that. So instead of $247, it would be $324. But if you don't want to do that, obviously you can basically take that off and you can just do the $247 3-month trade alert only special, right? So you can remove that if you're thinking about it. Like, I think I'll just do the trades. You'll get recurring weekly training from me as part of that, kind of recapping what's working, what's not. All in, instead of $891, you're getting it today for just $247. That promo discount has already been applied, so there's no other promo codes that apply. And also what's cool about it is in addition to on that secure page, in addition to the credit card information that you got to put in with your billing address for your credit card over here on the left, you can just go straight to PayPal, right? And PayPal is a way that I usually go to make it really simple and easy. And what I'm purchasing is all linked up with my payment information. I don't have to fill all that other stuff out. We do ask you to agree to our terms and conditions. We're on our 25th year here at bigtrends.com. So we're there to serve you and make sure you're a satisfied subscriber, but walks you through if you ever have questions, ever have any concerns, how to reach us, contact us. Of course, also, if you have questions, you can call us toll free at our 800 Big Trends line. That's 800-244-8736, or you can email clientcare@bigtrends.com. Now, I've gone a little bit faster than I expected, so I want to actually kind of go answer some questions, but also kind of go back and just kind of remind you on these charts, if you came in a little bit late, what we're looking for here, right? So let me just come back in and talk about a couple of trade examples, because again, I think a chart's worth 1,000 words. And so one of the best examples is this one I was showing you back here of this. I mean, First Solar was a great example. That was probably one of the most fun ones here, but it's not the most typical, right? The idea is that you've got to get in a situation here where you say, okay, what are we looking for to happen? We're looking for, where's my first one here? This one's even better. Okay, Royal Caribbean. Okay, what I love about Royal Caribbean is it just reminds you, because this is more the typical result, right? I don't want you to just talk about outliers. So it could be bigger, but let's talk about what's expected to happen of about a double when we get our target. RCL, we've got an uptrend, right? So how did we get back on this wagon? Well, part of what happened here was that you got the pullback in both the RSI and the %R back underneath their overbought thresholds. So that kind of turned off the prior little breakout attempts that it had made. You see, a lot of these weren't signaling on the same bar here. And then when they both surge up on this big price bar breakout to a new high here, you see that now the stock's trading up here near 127 near that afternoon. So why do we use a daily chart when we're using such a short-term strategy? Because we're trying to confirm that we're getting that end-of-day momentum. As it turned out, we closed right up near the highs. That was back right before Christmas in December. And the idea is that, look, it's breaking out, but more importantly, it's getting the freshness of both the RSI and the %R both breaking out over their respective overbought levels. You can see those are different levels. You get all those settings and rules when you become a subscriber. But the idea is that, look, at that point, we're saying we want to be in before this box at the end of the prior day and say, okay, at 127, we're buying the 126 calls. So it's pretty cool when you get those opportunities. And what's really also cool, I want to show you real quick while it says I have a few extra minutes, is I want to also show you how this looked when we called it out in real time. Okay, so what we'll do is we will send you a trade alert as a subscriber. It says, okay, we want to get onto RCL here. And this was, again, a past example. So it's already closed now. But here you go. This is what it looked like when we called it out. Lightning option trade, you're getting a real-time email. You also can get it through a WhatsApp update on your smartphone. So on December 21st, we were calling out, again, in the last half hour or so, 33 minutes left until the market closed that day, right? This is why you want to make sure you're not missing out on a trade. This was on a Thursday. We're saying we want to buy the options that expire the next day. And as I said, I thought we got in at $1.50 or less, and that's what it was. $1.50 or less, we were buying the 126 calls for $1.50 or less. And as I said, they're about $1 in the money. Okay, so basically we guide you there, right? So that's the first thing we tell you. And the official entry point for that trade was actually a little bit less. It was $1.24 was the average fill price over that next several minutes right after we called it out, right? So we give a little bit of room to make sure you get in. A lot of services will not give you room, and then you feel like you miss out on the trade, or they feel like, oh, you're always late. We give you some room because I've been doing this for a long time, right? So the idea is that 30 years or so of calling this kind of stuff out for subscribers. And so the idea is that, okay, this is what we told you the next morning. So this is key because you're never left hanging, right? Right off the open, you know that we've got a 50% stop. We got in $1.24, so we're saying we're targeting 250. Okay, so that 931, we said, get your stop orders in there. If it trades under 65 cents or less, we're going to get stopped out, right? That's about our 50% stop out compared to our $1.24 entry, right? Officially, that would be what? More like 62 cents. We're being just a hair tight there in case we got a little slippage. So just saying, okay, if it's not going for us, we want to wait out of this trade. And at the same time, if we can get the double, take it. That was coming right off of the open. A lot of times those can come out a minute or two before or right after the open. We're never going to leave you hanging, okay? And if you got questions, we're standing by to answer that. And then we got the fill soon off of the open. In this case, we closed it at 250 at 942, right? So the stock surged in the first minutes, 10 minutes after you get your trade alert on where to get out. Once you get in to put it out there at a double. But the idea is that, look, we'll remind you so we don't leave you hanging. If it hasn't doubled or hasn't hit its 50% stop, what's our ultimate final exit strategy on that last day of the expiration? You will get an exit at 3 o'clock with an hour to go before the options would close. So you never have to worry about being assigned stock, exercised on positions, what have you. It's saying, look, we're going to guide you through and tell you exactly how to manage the trade each and every trade that we call out. So you're never left hanging. But yes, that early burst, it not only gapped up a little bit, but it continued on. And then, of course, ended up closing near the high of the day as well. But, of course, we were already out at 250. If you'd held it to the expiration, it looks like it finished at 128.11. That would have been worth 211. But this is why you don't hold it to expiration, because if you did nothing, I've got to caution you on this, if you did nothing and just fell asleep or weren't paying attention, and then the market closed on the expiration day and it's $2.11 in the money, you would be exercised and you would own the stock at 126, and it would now be, you'd be long 100 shares for each contract you had. People worry about that, but that's why I say, look, we're going to keep reminding you so you don't have to worry about that. You're never going to be left hanging. Like I said, you should always get out of the trade in advance. Of course, if you did acquire stock, we would just tell you to sell it on Monday morning. Win, lose, or draw, wherever it opened on Monday morning could gap up or gap against you. You never know, or be open flat. But the point is that we're not in this game to acquire the stock. We're in this game to help you to leverage a short-term momentum pattern using not one but two techniques, both RSI and %R together, and then look for them both to be crossing up for bull trades or to be both crossing down. You say, well, isn't that a cross down there it had on the %R right before? Wouldn't that be bearish? Well, look what's happening on the RSI. It's not crossing down under its lower threshold. So the last time it looks like they both crossed down was back there in October. And you see we did get some continuation down that next day, but that might not have been on a Wednesday or a Thursday, right? If that happens on a Monday or a Tuesday, we just say pass. And you say, why wouldn't you take the Monday and Tuesday trades? Because we're looking for that optimized leverage in the last couple of days of the weekly expiration cycle, okay? So hopefully that's answering some questions. And like I said, so if I go back to, so how do you start taking advantage of this? Like, let's actually go back, and I know some people might have missed the early part of this. So let's go back and look at a bearish one real quick. So again, the bearish one was, this was Best Buy example where we were buying a September put. It was on a Wednesday afternoon, a couple days before the September 2nd expiration date here. And you can see you don't want to hold these till expiration. If they're not moving, right? You want to get the chance to get the quick profit. If it's not moving, you're dealing with the risk of theoretically 100% time loss at the expiration. So typically the best profile is to get out quickly that next trading morning. If we're getting that leverage, we're getting that double opportunity. This is why we don't hold past the double, right? If we'd held past the double, whatever trailing stop we would have had would have been stopped, whether it was to trail back to break even, trail to whatever, would have been stopped. So we just took the double out and said, look, take that bird in the hand. When you get the double, you take it. So at $1.07, we were obviously getting out there just over 214. 215 was our exit on that trade, 100.9%. So what if you hadn't gotten it and it reverses? You're probably going to get stopped out, and you'd be looking at a minus 50% stop out, certainly by the next morning. And even when it gaps up here, it could have been worse than that, right? So you got to prepare that it always could be worse for what your stop is, just in case it gets hit worse than that. What if it gaps against you and it's down 75%? We would take it out at a 75% loss. If the stop gets violated, you just salvage what you can and you move on, okay? But the idea is that sometimes gaps work for you, sometimes gaps work against you. You just want to be consistent and sensible in how you're managing your trades and saying, okay, we know that the risk reward should be in our favor over time with the way we've structured this. Now, also, I want to just remind you one more time on our special offer, but then I want to give Jeff a few extra minutes because I want him to talk about our toolkit. Like we said, whether you're trading $2,000 a trade, you can see the past history. Again, past performance never guarantees future results. You can see that it resulted in a very healthy return over the past, more than 4 years. But you can see here that even on $1,000 a trade, did very nicely. And as I said, if you came in late, where you go is you go to this link. It's not a www page, I got to point out. It's a members.bigtrends.com/LOT3. L letter OT 3. $247 instead of paying $891. You get it for just $247. That gives you 3 months of trade alert access. And as I said, that order page is pretty cool because it also shows you that you can tack on a nice little extra bonus today. I didn't know my team also included, which I'm fully in support of, is you can add lifetime access to the Quick Options Bootcamp. You can get over 3 hours of training on these quick option strategies for just $77 when you tack that onto your 247 order. Just hit the add to order button there. But you just want the trade alerts for the next 3 months. Try it out for the next 90 days. See how you like it. We'll never leave you hanging. I think you'll be very pleased with that. But like I said, Jeff, I want to have him come back in too, because I want him to talk a little bit about the Big Trends toolkit for MetaStock. He and I worked on this, several iterations of this over the last, I want to say 20 years plus ago, and he's updated it a couple of times for our Big Trends community and all the MetaStock community to benefit from a host of different indicators. It's not just like one system. It's literally up to a dozen different techniques that are on that Big Trends toolkit. So I want him to show you a little bit about that if you can, Jeff, so you can remind people about how well the Big Trends tools integrate within MetaStock. And thank you for including me. It's always a pleasure to be with the MetaStock community and share kind of our latest and greatest here at Big Trends as well.
It's good to have you. We have a ton of questions.
Okay.
Let's see. Number one, let's see, what is the best time of day to trade? Is from Bark City Media out of YouTube.
Yes, great question, Bart. Bart City Media. Bottom line is that, as I said, we're getting in, whether it's a winner or loser, here's a loser. We're going to get in the last hour of that trading day, okay? Whether it works or whether it doesn't the next day. Why do we wait for the last hour to half hour? Because we're trying to make sure that close is confirming that, yes, if you're looking at a daily chart, in the morning, this was not breaking out, right? We were still kind of hanging below those recent highs. And so you have to wait on any time frame. In this case, we like the daily because it says, look, you get the daily chart momentum, should work. In this case, it didn't, okay? So bottom line is that over time, you're playing a probability game. So last 30 to 60 minutes is what we're looking for the entry. The exit, of course, can come as early as the next morning off the open. So we're definitely going to adapt that to whatever is the right way to continue to follow a trend that's working. And if it's not working, if we get a 50% stop loss and while holding this trade, we're done with the trade. You preserve capital and say that one didn't fire, you move on to the next one. But that last half hour to hour at most is the earliest we would enter is an hour before the close.
All right. Kim wants to know what is special about Wednesday and Thursday.
Great question, Kim. What we like about it is that as you get closer and closer to a Friday weekly expiration, the time value is diminishing, right? So as you lose that time value, you can construct a trade where you basically want to buy something that's a bit in the money, it doesn't have a whole lot of time, and gives you a ton of leverage against the underlying stock, right? So you're talking about that your leverage ratio is increasing the closer and closer to expiration. That means it's a double-edged sword of leverage, right? You're getting more opportunity on the upside for smaller moves in the stock can get you there, but also the smaller moves against you can also work against you. It's a double-edged sword of leverage, right? So we want to manage that carefully. That's why we put the target that's twice what our stop loss is. So we're talking about plus 100% versus minus 50%. We feel like that gives us an edge over time. If we can keep our win rate even in the 50-50 zone, we should have a lot of happy subscribers, and we have historically had a lot of happy folks following this approach in recent times.
Travis asks, how many signals do you estimate are sent out on an average week?
Yeah, on an average week, I would say typically one a week, but we can hold two. We could get into a Wednesday. If that one's working, we could get into a Thursday trade. If the Wednesday signal is not working, I don't go with the Thursday signal. I don't try to, if the market's wins in my back, I try to keep on looking for new trading opportunity. But if it's not, I'll typically just kind of retrench and say, let's wait for things to settle down for the next week ahead. So no more than two trades in a week, but I would say expect one a week on average.
Richie wants to know what settings do you use for Williams per Centaur and RSI?
Yeah, and I would love to give that out, Richie. When you become a subscriber, I do give that out, but I don't give it out for free. Unfortunately, we can't give it all away here. But basically, when you sign up for that special at the members.bigtrends.com/LOT3, you will get and the resources we mentioned. If you came in late, we mentioned one of the settings here is the settings and rules sheet here. So the settings and rules sheet gives you the specific parameters, what you plug in for RSI and %R, but also some other little tweaks that I haven't been able to share here about things you want to look for to manage your trades once you're in them.
Cool. Let's see. Kim wants to know, is that a 343% per year return for 4 years?
No, that's a cumulative return. So whatever time frame you're looking at, that's a combined 4-year return, whatever time frame it is from this date to that date on the bottom left. So basically you're looking at, okay, how much the portfolio grew. And remember, it's before commissions. So you got to take your commissions into account. So the growth will be somewhat diminished once you take the commission into account. But really, commissions have come down so much. There's never been a better time in my 34 years of trading options and right now to keep the vast majority of what you make. I remember paying ticket charges, and even for a one lot, paying $30 or $40 on a commission when I got started in 1990 in option. I'm like, I got to figure out how to keep these commissions down. Now I don't worry about that. You shouldn't be paying more than $1 a contract on a commission, and if you're active, you can often pay 50, no more than 60 cents a contract. So it's no ticket charge. That's key. Even if you're trading a one lot, it can dramatically keep your commissions way down. So, but yeah, it's a cumulative return gross before commissions, before subscription investment.
Cool. Let's see. We're going to have more questions than we have time for. Is there a way that people can reach out to you or your team to get
absolutely them? I'm thrilled to hear all the questions. Let me remind you folks, here's how you reach us a couple ways. Best way to reach us with questions is send an email to this clientcare@bigtrends.com email address. Send your question to us. We'll be happy. That'll get forwarded to me and my analyst team, and we'll be happy to answer any questions you have about the Lightning Options Trader system. And of course, if you have any questions on this special offer, taking the $891 down to just $247, you need to go ahead and act on that quickly before that goes away. But the idea is that, look, you can also call us if you're having any problems with your order page. You have any other questions before you order, we've got representatives standing by at 1-800-BIG-TRENDS. If you can't remember that number, 800-BIG-TRENDS is the way to remember it, but it's 800-244-8736, or you can email my clientcare@bigtrends.com team. But the email is a great way to get your questions answered. I know we're tight on time with our next speaker ready to roll.
Are you, and then the last one I'll throw at you, are your trades typically 1 day to expiration?
Typically 2 days. Typically Wednesday afternoon is my preference. It's a good question. I like having that extra bit of breathing room, that extra bit of time, right? But sometimes if it's like, hey, the history is saying that even on Thursday afternoon, trading it the next day. I've had to get myself comfortable with trading at that close to expiration. But when you see this happening again and again, like, hey, the odds are in our favor. We're playing this game for probabilities. So that's why you're never loading up on any one trade. I don't care how much money you've made on your last 1, 2, 5, 10 trades. You've always got to stay consistent in your capital allocation. So, but the Wednesday afternoon is my preferred setup. But if we didn't find one there and we find one on Thursday, we're going to still take it if it's got the odds stacking in our favor.
All right, very cool. Price. This one I'm going to take. So, but before I do, he wants to know how can we use MetaStock to find good trades?
Yeah, well, I mean, you
I'm going to
know
show that a little bit. Before I let you go, though, I want to say thank you for coming in. Appreciate it. For all of you that want to take advantage of that, go to members.bigtrends.com/lot3. Thank you so much, Bryce.
Appreciate it.
All right, very cool. And as we kind of alluded, I'm going to do this as quick as possible. So let me go ahead, make sure I push all the right buttons, make myself the presenter and just show my screen, and turn on my camera too. So we have, and it's kind of cool because like when I initially started MBD, the first big project I worked on was Big Trend Toolkit. And I learned a lot about kind of the process and kind of made a lot of it as we went along. This has been, the Big Trend Toolkit has always had a special place in my heart just because it was that first big, huge project that I took on, and also was has been a very, very popular add-on. Anytime you get 3 after the name of something on as a MetaStock add-on, it's because there's been enough interest in it to have 3 different versions. So what we did when we created the toolkit was we took all of Price's methodologies that he talks about it in his training, the ones that are in his book, Big Trends on Trading, and we put them into the program to really take advantage of the program. And over the course of the 3 different versions that we've had, I'd say that we have probably the most inclusive of Price's work. In terms of what's included, all of these methods are actually included. And one of the things that we did for the last one that I'm just going to show you real quick was an idea that Price had around scoring his favorite indicators, and we call that the Big Trend score. And so if I'm coming in and I want to find stocks that are kind of primed for those really big moves, I can actually come in here and I'm going to run this scan real quick that's called the Big Trend score setup. Okay, I'm going to go ahead and start it right now. Actually, I'm going to move it up here so that it runs first. What it's going to do is it's going to go through Price's indicators, the ones that he likes the most, and he's going to figure out which ones have the most bullish score and the most bearish score, and it's going to rank them accordingly. And also, based on that, rules for you to go in and buy. So you'll notice it's running rather quickly. It's about 96%. Well, actually, it's almost done. It's rejecting about 96% of the stocks that we're throwing at it. So of the for every 100 that we're sending to this scanner, we're only going to look at about 4 of them, and it's already done. So if I kind of look here, if I'm looking for like a buy opportunity, it's going to have a 1 in this column. And if I'm looking for the Big Trend score, it should have a score that's either 80 to 100. 100 would be perfect. Minus 100 would be perfect on the bearish side, but anything over 80 would take. So if Dollar General is one of those, Dash, actually I'm kind of interested to look at Dash. Let's open that one up. And this is a good way that you can kind of go in and find stocks that are kind of primed for that bullish move, right? If I go ahead and open this up, it opened up, here it is, DoorDash. Actually, I have a pretty good move here. I'm going to apply the appropriate template for this, which was the Big Trend score. Everything in here starts with BTT3, so I should be able to find it pretty quickly. Okay, we'll just do the Big Trend score system here. Well, I'm going to kind of make this a little bit quicker, but you can see in the past where it's had different sell signals on Dash. You can see it's had some exits and entries on Dash as it's kind of been on the way up lately. But if I wanted to kind of actually zoom in a little bit, if I just click on the right button here, I can see where we have a setup. You'll have a little bit of a diamond on the chart. Okay, and so we have a setup today. I'm going to go ahead and kind of click this over. And right now, or actually I'm going to kind of marry it to the very back, just to kind of give you an idea of why this came up on the scan, is we are getting a setup. The big trend score is a combination of prices favored indicators. You can see what those are. You've got Williams percentar, 2-day CCI, efficiency ratio, and it just goes through here. Right now, it's crossed above 80. So yesterday it was below 80. This is kind of the combination of all those. When above 80, that signals a long potential opportunity. What we're looking for, and what this is going to tell us that we're looking for, is we're going to look for a penetration of the high on the next bar. So tomorrow, we'll be looking for a penetration of the high. If that happens, we'd actually get a buy signal. And we'd also have a stop loss at that point. The current stop right here would be 109. So all of the systems that are included in Big Trend Toolkit are, all of these methodologies have these different expert advisors. They give advice in terms of how long the trade would last, where you should put entries in, where you should put exits in. But this is a comprehensive, really collection of all of the studies that Price has worked on over his years. And again, something that has been very, very popular among the users, the MetaStock users. It's one of our more popular add-ons. So in total, it's got 17 different methods you can play with. Those 17 methods all have exploration, so you can go out, just like we did with that score system, and find a good opportunity. They have tests, so you can go in and test them, and then templates, and then we actually came up with 18 unique indicators that are unique to the Big Trend Toolkit, just to kind of help put everything together. And what we're doing here with this add-on, it also has a huge comprehensive manual, probably one of the biggest. I remember when we initially, we don't put them on CDs anymore, but when we initially put them on CDs, it was so big that we had to like shrink wrap it to the outside of the jewel case in production just because it wouldn't fit in. So it's a fantastic value. It's certainly a collection all of Price's great work. $6.99 is normally what we charge for this as a one-time cost. We back that with a 30-day money-back guarantee. We're going to do $4.97 here at the event. And we're going to back it, like I said, with a money-back guarantee. If you haven't used MetaStock and you want to use MetaStock, we've been talking about the fact that it's been rated #1 for 31 years in a row. Give it a go. So you can call us. Give us a call, 800-882-3040, metastock.com/sales chat, and metastock.com/conf promo. So looks like we're one speaker in and already 7 minutes late. We'll do our best. I do want to say thank you to Stocks and Commodities Magazine for sponsoring the event today. They do a great job. We really appreciate all the support they've done over the years. You should get an article, or you should get a magazine subscription. You can do that at traders.com. Very, very quickly, while I've got your attention, and I need you to do this in the chat right away. Give me a number. I want a number. We're going to give away a prize, and I just need a number between 1 and 99.05. So right now, type a number in the chat, 1 and 100, 1 and 9,905. You're going to get a prize. The prize that we're going to give away is a couple of great books from Steve Bigelow. Here's one that's called Candle Profit Systems, Eliminating Emotions, and High Profit Candle Patterns. Two great books from a great technician. We're going to go ahead and send these over to you with a mouse pad that'll remind you of what all the major signals are. So very, very cool. Bernadette, thank you for giving me a number, and thank you for being quick about it. Also, Neil, thanks for the number. Also, Barb, thanks for the number. Also, Andrew, thanks for the number. We're going to go ahead. Topsy, MetaStock. I know with the YouTube, there's a little bit of a delay, so we'll probably get numbers. I'll use them next time. Bernadette picked a number of 4671. Let me figure out who that is and who we're going to be sending this to. So, 4671. I'm sure I'm not supposed to say a first and a last name, but I'm going to this time. I'm going to give these to Rocky Trader. If you've registered under the name of Rocky Trader, I'll drop you an email to your Comcast address and get the prizes sent off to you. But thank you for registering. Thanks for being part of the event. Thank you, Price. Thank you, everybody. Okay, it's been great. I hope you're enjoying it. I hope you're learning stuff. Thanks for being part of it. Also, if you're watching on YouTube, like and subscribe. Do those good things. We're trying to get to 70,000, and it would help a lot. So our next speaker is Buff Dormeier. Buff Dormeier is a very, very good volume technician. He actually won a Dow Award. The takes that he does on volume are very, very interesting, and you'll want to stay and see what he has to say. So let's go ahead and get you started. Buff, how are you doing? All right, I can see you. I mean, I can see your screen. I can't quite hear you yet. I just sent a microphone request over to you.
Hey, can you hear me now?
There you go. I thought I was going to have to call you for a second. How you doing, Buff?
Doing real good, Jeff.
Good. We can hear you. I can see your screen. I'll get out of the way. It's all your turn.
All right. Well, thanks, Jeff, and I'm looking forward to talking to the audience today about the volume factor, and specifically, we're going to talk about the volume factor offense. And when we're thinking about offense and using volume, we have to remember, you probably know, the volume is not only a valuable piece of market data, and maybe to you it's already an indispensable indicator, but also it's the undiscovered market factor. And it's just not any factor, though. Volume is the factor that rules them all, because volume is the force that empowers price momentum and sustains trends, making volume the monarch of factor investing. Volume is the missing piece bridging goals-based financial plans to technical analysis via tactical asset management. So volume is the unknown investment factor, and I'm a volume evangelist. And so as an evangelist, I'm going to provide you with 4 rational points, all starting with the same letter, the letter R. These are the 4 R's of my volume sermon. Number 1, first R is responsiveness. Volume provides quicker signals. You may have heard the term volume leads price. That's because changes in volume generally occur before significant price movements. Next R is reliability. Volume not only leads price, but also volume simultaneously confirms price. So if price is the market's testimony, volume is the market's polygraph. Volume validates and substantiates and brings meaning to price. The more investors that participate at any given price, the more that price point is validated. So in this way, volume may not only get you into a trend movement quicker, but simultaneously increase the probability that that trend or that momentum will continue on into the future. Our third R is risk. If you can differentiate a legitimate trend from a suspect trend and identify trend weaknesses early on by employing volume analysis, you should be better positioned to reduce the risk in your portfolio. And the fourth R is what we're talking about today, the offense of return. If we're able to identify a trend earlier and have a higher probability of being positioned correctly, then we're putting the odds in our favor and positioning ourselves with an opportunity to make a better return. Now, generally, when I give 4 statements like this, I will prove these points out 5 days until Sunday. But today, I got some new content, and we're gonna specifically focus on how to add the volume factor of momentum into your portfolio's offense. But before we do that, let's cover a few of the basic fundamentals of technical analysis. So not only you know that it works, but how and why volume analysis works. So we're going to start with the basics. It just doesn't get any more basic than price. But what is price? So if I were to purchase a security, what is my opinion? Well, if I'm buying, I'm bullish, I believe the price is going to go up. Why else would I purchase? But in order for me to take ownership, that order must be matched on the exchange. And what is that person, the seller's opinion of that same security? Well, there could be multiple reasons to sell, but most likely they're bearish. They believe the price decline. Why else would they sell it? So price, therefore, is an agreement to disagree. It takes two parties with opposite views of the future, and their agreement is price in the exchange market. Price represents the conviction, the emotion, and the volition of investors. Price is truth. It doesn't matter what the talking heads on TV say, or what the analyst price target is, or what someone's view of intrinsic value may be. A stock is worth what it trades for, and that price represents all the collective knowledge known to the market. It's truly a beautiful thing. If you don't believe me, just ask a leveraged short seller that's caught in a squeeze. So why is the market going up today, and why did it go down last week? Well, if it went down last week, there must have been more sellers than buyers, right? That's technical analysis. Well, that's what I heard that's what they say on the TV. Nakam prapaha. That is, they do not understand. In an exchange market, the number of shares purchased always equals the number of shares sold, which is the total amount of exchange. So here's the simple formula on top here. B equals S equals T. The buy volume is the sell volume, which is also the total volume. So let's put this newfound knowledge into practice. And let's say I get a signal from my newly purchased MetaStock add-on. And so I get the signal, I need to buy it now. The moment I receive the signal, so I put an order in to buy 1,000 shares of, say, ABC stock at the market. But unknowns to me, there's also an institution, and they are selling 100,000 shares of the same security because it just reached their intrinsic value target. So I'm going to put my order in at market, suggesting urgency. They put their 100,000 shares in at a limit, suggesting complacency. Our orders are matched. So here's the question to you. Who's in control? Me, the buyer with the urgent market order, or but only 1,000 shares? Or the seller with 100 times as many shares to sell, but more of a complacent limit order? Well, the answer is we don't know until that order is executed. But if that trade goes through on an uptick, it indicates there's more demand, and that the demand is greater than supply. And if the trade goes through on a downtick, there's more supply than there is demand. And these interactions are happening over and over again, hundreds of times a day, a second, tens of thousands of times, 5 days a week, all through the week of the market. And so these accumulations of ticks over time, if they're moving higher, we know demand's in control. And if they're moving lower, we can surmise that supply is in control. And so what if there is a way to look at deep inside these trends of supply and demand to determine if volume is supporting the price? Well, that's what we're trying to do with volume analysis. So you can think of volume analysis like this. Now, you're the pilot of this airplane. You want the plane to go higher. So what do? You change the trajectory of the plane and aim it higher. But if you fail to also provide the plane with more thrust through increased fuel, then the plane is going to stall. Volume, my friends, is that fuel. It's the fuel of the market. It takes more and more people willing to provide more and more capital at ever-increasing prices to keep the proverbial plane ascending. Capital is what drives these trends. And if the market's moving higher with less capital and fewer capital flows, then the market lacks the fuel. It lacks the force to continue and may likely stall on its own. So let's review how to use volume analysis together. Okay, first a couple terms. An uptrend is represented by greed. Greed is needy. It always, like the song, it always wants more, more, more. Whereas a downtrend represents fear. Fear is like a herd mentality, get me out, hey, we'll figure it out later. When volume is rising, that means it has force or energy. Whereas when volume is falling, it operates under the laws of entropy. So we're going to look through here our chart to go through the 4 quadrants. We're going to start here in the upper left-hand corner. And here we have a trend that's up on rising volume. So this is greed with energy. And the market's in a state of invigorated greed. This is an issue under strong demand. The uptrend is being confirmed by the volume, and the implication going forward would be bullish. Next, we got a trend is up, but the volume is falling. So this is greed, not with energy, but with entropy. So this is a complacent bull market. It's under weak demand. The uptrend is being contradicted by fewer and fewer people willing to participate, and the implication going forward is bearish. Next, we have a trend that's down. The volume is rising. This is fear with energy, or invigorated fear. This is an issue under strong supply. The downtrend is being confirmed by more and more people willing to sell at ever decreasing prices. The implication is bearish. And then finally, we have a trend that's down. The volume is falling. This is fear with entropy. This is the market in the state of apathy or weak supply. The downtrend is being contradicted by fewer and fewer people willing to sell at ever decreasing prices. And the implication going forward is bullish. And so let's put this into action here. One of the indicators that is available in the MetaStock add-on is my volume price confirmation indicator. Jeff mentioned at the beginning of the show that I won the Dow Award. This is the indicator that I wrote the Dow Award paper on, the volume confirmation indicator. And what this indicator does is tell us is volume confirming or contradicting price. So here I have, I've laid out the trend, and the trend, of course, here is down. The VPCI turns up. This is the VPCI. It's crossing over a smooth average of itself. That's showing bullish momentum. This dotted line here is the zero line. At this point here, the VPCI crosses the zero line, and the stock, boom, starts to move up. Now, the uptrend is being confirmed by the VPCI that is also moving up. But at point 2, there's some poor momentum on the volume VPCI. And then here, it crosses the zero line. At this point, the uptrend is being contradicted by the volume that's contradicting the trend movement. Of course, the stock tops out here and starts to fall. It forms this V pattern. This is a VPCI V bottom. When you see this is a good indication that the market is capitulating. And then the VPCI starts to rise when the trend's still down, and then eventually VPCI breaks up, and the trend continues. This is again one of the indicators available on our add-on. So our volume factor offense. You gotta know when to hold them, but just importantly, we need to know which ones to hold. And in volume analysis, we want to own the ones garnering the strongest capital flows. So here's our game plan part 1. When the markets are up, we need to maximize return. This is the law of incremental returns. And I was telling my daughter the other day, she's on this this travel soccer team, and they have to practice 3 days a week, and then they have a game 1 or 2 days a week. And those days that they don't have a game or they don't have practice, they're supposed to put in 30 minutes of work on their own. And some of these girls do a lot more than that. Not my daughter, unfortunately. But the way I tell my daughters, if you work real hard at practice, you're putting in 100% effort. Then on those days where you don't have practice, you do this 30 minutes. You're now putting in 110% effort. If you want to get to the next level, and you want to put in 120% worth of effort, how much do you need? Much more work do you need to do? Well, like most people, she said 10%, but that's not right. Once you get to 110, you only need 9% more to get 20. And once you're at 20, you only need 8% more to get 30. And once you're at 130, you only need 7% more to get to 140. And once you're at 6%, 140%, you only need 6% to get to 150. This is the law of compounded returns or incremental returns. And so how do we take advantage of this is when the markets are up, we want to allow our returns to compound. This is how we run with the bulls. So when the markets are up, we want to run with the bulls. And what powers the bull is volume. Now, I like to think of volume as synonymous with force. And if we were to look up the definition of force in Webster's, it says force is a power made operative against support or resistance. Well, what is support? Support is an area where buyers reside. And what is resistance? Resistance is an area where sellers reside. And what is an uptrend? That is a rising support line. And what is a downtrend? It's a falling resistance line. This is technical analysis 100. Jumping to technical analysis 400, volume is that force required to sustain those trends. So if we were to look up at another dictionary, the physics dictionary, this is what the physics dictionary says what force is. Force is a vector quantity that tends to produce what? It's a vector quantity tending to produce an acceleration. This confirms another major tenet of technical analysis back all the way from the days of Charles Dow a century ago. Volume leads price, meaning that significant changes in volume precede significant moves in price. This statement also infers that volume plays a crucial role in momentum analysis, which brings us to the volume factor offense. So we can better understand volume's role in momentum analysis through the laws of Newtonian physics. So Newton's first law of motion, inertia. An object at rest remains at rest. An object in motion remains in motion at a constant speed and in a straight line unless acted upon by an unbalanced what? An unbalanced force. Yet most momentum analysis neglects force or volume. So if we were to rewrite this law of motion for momentum analysis, it would look something like this. A price trend in motion, momentum, tends to remain in motion at a constant speed and in a straight line unless acted upon by unbalanced volume. My friend Joe Granville might say on-balance volume, but to keep with the analogy, unbalanced volume fits the first law of motion. So another thing that my friend Joe used to say is volume is the cause and price is the effect. Yet if you're using momentum without volume, then you're solely focused on the effect and you're ignoring the cause. So the analogy here, volume is the unbalanced force causing price change. So let's start by looking at some momentum illustrations that don't include the unbalanced force or volume data. Those are pretty easy to find. Okay, the first we will study is going to be RSI. So Newton's first law of motion suggests the momentum and trends continue until volume changes. So by studying these momentum indicators that don't have volume, we can infer a few things. So there's two types of momentum. One is internal momentum. That is momentum relative to itself. The other type of momentum is external momentum. External momentum is relative to another security or another index. Okay, so perhaps the most popular of all the internal momentum indexes is RSI, or the relative strength index. Okay, and so here we have a bar chart on top and then RSI on our MetaStock platform. Okay, so shown here in this these results. Okay, this is research from S&P researcher Richard Tortello, who from 1992 to 2000 studied and backtested well over 1,000 indicators and fundamental ratios, and he published this in his book, Quantitative Strategies to Achieve Alpha. And with the vast majority of those indications, those ratios, those indicators were fundamental. However, of the thousands of indicators he tested, it was RSI that showed the strongest alpha. And here are results. He's looking at quintiles. So the top quintile stocks that had the highest RSI readings, on average, had 6% alpha driven, whereas the stocks with the lowest RSI going forward produced the lowest returns, losing 3% in alpha. See, there's a pretty symmetrical difference here between stocks with highest RSI versus lower RSI. So the higher the RSI, the better performance in his study, again, from 1992 to 2007. Now, here what I'm showing here is my own studies. And this was my own study on RSI based on the Russell 3000 index members. And it's from 2002 to February of 2023. Okay, and here are the results by decile. So you can see here that the stocks with the highest RSI actually underperform by about 2%, a little over 2%. And the stocks with the lowest RSI actually outperform. So these results are actually polar opposite of what we saw in Tortillo's studies, which were done a decade earlier. There's a little overlap, but most of those were done earlier. And so this tells us the internal momentum is really can shift, especially when it doesn't contain volume information. Okay, so the next type of relative strength compares a security's momentum to that of another security, usually like the S&P 500. And so that's what we have depicted here. We have our stock, Targa Resources on top, and its relative strength. That is its relative strength compared, in this case, to the S&P 500. Okay, is Tortillo's strength, or excuse me, is Targa's Resources strength stronger or weaker than the S&P 500? That's what relative strength shows us. Okay, so here we have an example here of the stock. Here is the RSI, and here is the RS, or relative strength, laid out for us on our MetaStock chart. So as investors, we should not be surprised that relative strength also was one of the very top producers of alpha in Tortilla's study. So this is the same study. This time he's testing not RSI, but relative strength. And relative strength produced over 3% of alpha on the first quintile, which is and the bottom quintile, again, lost over 3%. This is another study by famed technician Michael Carr. He studied relative strength from 1990 to 2007. This was published in his book, Smarter Investing in Any Economy. And he took 5 different ways to figure out, to compute relative strength. And all 5, or excuse me, it's a little more than 5, looks like six here, that all of them outperformed the market. So I did my own study, and here we find that yes, indeed, relative strength has consistently outperformed. So here, the top, this is deciles. The top decile outperformed the market. This is the market here by about 4%. But we also found another area where the weakest stocks of relative strength also outperformed by even more, but very consistently top decile. So now let's move on to Newton's second law of motion, force. Momentum is the definition: the acceleration of an object depends on the mass of the object and the amount of force applied. This is Newton's law of motion or force. So we can rephrase this in market analysis. The more volume or force being applied to price, the stronger the expectation of the momentum. So here's the analogy. Price acceleration or momentum is powered through volume. Just lost my mouse. Okay. So let's look at some indicators that include volume in the computation of momentum. One of those is MFI, the money flow index. MFI is simply RSI. It's a little bit more than this, but it's mostly just RSI volume weighted. So the difference between RSI and MFI is one is volume weighted, MFI, and RSI is not. And this is MFI on your on the MetaStock software on Floor Corporation. Okay, this is again the same stock. This time we added RSI, and then here on the bottom we have MFI. So you can see the difference between this one, which doesn't include volume, and this one, which is pretty much the same thing with volume. Okay, so before we looked at RSI and it lost money, but when we infuse it with volume, we take a strategy that lost 2% versus the market and created 2% of alpha. So we just flipped it on its head by adding the volume data. Now let's move to Newton's third law of motion. Okay, action and reaction, which is really price volume symmetry. And then Newton's third law of motion states every action has an equal and opposite reaction. So the analogy here, the difference between price and volume represents or exposes the asymmetry between price momentum and volume. This, folks, is the key data set. Of all the laws, this is the one that's the moneymaker. So here we have a stock on top, and what we have is as we looked at this before, the VPCI indicator. The VPCI is the asymmetry between a price trend and a volume weighted price trend. And when that volume of symmetry is positive, you see the VPCI rise. And when it turns negative, you see it fall. All this stock is well above the zero line. So the VPCI is not designed to be a standalone indicator. It's designed to confirm the other indicators. But here we did put it in as a standalone indicator. So what we did in the study is that the red line is buying the stocks in the top 10%, the stocks in the S&P with the top 10%, the highest VPCI scores. And then we sell the stocks in the S&P, or excuse me, when we own a stock, we then sell it after it falls out of the top 50. So we buy in the top 10%, and when it falls out of the top 50%, we sell it and then buy the stock, replace it with the stock with the highest VPCI that we don't already own. And doing this, you can see here the red line outperforms the market by about 3%. So next here, we have our chart, our stock chart on top, our RSI on the bottom, and money flow, excuse me, RSI on top, MFI on the bottom. And now what we're going to do is we're going to look at a new indicator. I haven't talked about this one on MetaStock before. This is a new indicator that's just been added into the toolkit. This is VMI, Volume Momentum Indicator. And what it is, very simply, is the difference between RSI and MFI. And when the MFI is moving up, it tells you that we have positive price volume of symmetry, meaning the MFI is showing stronger readings than the RSI. So here we did our test, same test again on the Russell 3000, 2003. And we buy the stocks with the highest MFI. And notice here, our historical returns go from over this period of time, 12.6% to almost 20% by buying the stocks with the highest VMI. Here's another study. Here we're looking at stocks from August of 2000 to May of 2022. And we are owning the stocks when VMI is greater than 0.5. Greater than means it's 0.5 being the middle mark. So when VMI is greater than RSI. And then we sell the stock only when VMI falls below 0.2. During that period of time, the red line, the S&P made 6.4%. The $10,000 grew to $291,000 in the S&P. Our strategy grew to 2.2 million. Average return 17% annualized return through this simple strategy. So let's review. Do this first law of motion. An object at rest remains at rest. An object at motion remains in motion at a constant speed, a straight line, unless acted upon by an unbalanced force. Volume is the unbalanced force causing price change. Analogy number 2, Newton's second law of motion. Price momentum is powered through via volume. Newton's third law of motion. The difference between momentum and volume adjusted momentum exposes the asymmetry between price momentum and volume. So what we're going to do next is we looked at 3 different indicators. We had a winner with relative strength, both on the top line, top decile, and the 10th decile. So we can look at this in the terms of absolute relative strength, which combines the first and the top decile, absolute relative strength. Next, we're going to add into that the stocks with the strong VPCI, and then we're going to add the stocks with the volume factor symmetry momentum, or VMI. So we're going to add all these three together. Okay, so we got here our stock. We want the ones with the strongest relative strength, the strongest volume price confirmation, VPCI, and the ones with the strongest VMI. And we're going to rank those stocks based on the combination of these three. And when we buy the top decile of these stocks, our returns go from 12.6% to 24.5% annualized return top decile. This is what it looks like versus the equal weighted benchmark. Put $10,000 in over that period of time, it grew to 123,584. In the Russell 3000 equal weighted benchmark, that does have some buyer biasship, by the way. But in decile 1, the stocks with the very top qualities of VPCI, VMI, and absolute relative strength, that money grew not to 123,000, but over $1 million. The annual APR is 24.5%, average annual return 31.7%. These are the annualized returns. So hopefully by now I've provided you with the compelling evidence that volume is not only a factor, but the factor that rules them all. But if not, let me leave with you with this one last volume factor nugget. The Fama-French model is the gold standard of factor investing. To be considered a factor, it must the factor must have a p-value of 0.05. That p-value is the null hypothesis, the probability of chance being 5. The p-value of 0.05 means it's 5% chance that these results are come by chance. Okay, so many investment factors struggle to meet this criteria, and generally the best, like momentum and quality, are usually the top tested strategies. They may have a p-value of 0.01. Now, Dr. Matthew Ludi ran the Fama-French model using the VPCI for his offense, and we're not talking about defense, but using my capital weighted volume for the defense. And he published those results in the JABE journal. And what it doesn't have a p-value of 0.05, doesn't have a p-value of 0.01, or even 0.001, but 0.0001. That's 10 times, 100 times stronger than the next best factors. So volume is certainly a factor. I ran the screen. So in your MetaStock add-on, you get my indicators, which I'm going to cover these here. But you also get some of the stock screens to pick to help you pick the stocks, and then also give you the sell disciplines. And so these are some stocks that came out on the screen here last week, I think it was. Floor, FLR. Okay, this right here, of course, is the chart. What I want you to point out here is particularly this red line. These red dots is my anti-volume stop loss. This serves as a stop loss for the system. So if it goes below the red dot, that's a sell indication. Okay, that is our stop loss methodology. It is made up of price trends. It's made up of volatility, and those are adjusted to the volume factor. So if volume's confirming the price, we're going to adjust this stop downward, so it's less likely that you'll get whipsawed out. But if volume is not confirming the stock, we're going to tighten the stop and bring it up so that it's easier to get stopped out. The next indicator here is TTI. This is a trend thrust indicator. Think about this, it looks like the MACD because it is very much similar to a MACD. MACD, the difference is that this is volume weighted, like my volume weighted MACD, but it also uses adaptive volume factor ratios, which basically put the MACD on volume analysis steroids. In testing the TTI, or excuse me, the MACD, it works, the probability of it working, its signals in and of itself, it works about a third of the time. When you use TTI, and you know, a third of the time people think, oh, you can't make money with that. You can. You can make money with a third of the time. But when you swap out the MACD for the TTI, it moves the reliability from a third to well over 50%, because volume confirms the price. And of course, doing that makes it a much better moneymaker. So the next one, we already talked a lot about the VPCI, and then we have the VMI here on the bottom. Okay, next one that showed up is HEI. Okay, this one is also moving up. Notice the TTI is moving up here. We got a VPCI is over 0. VMI is also positive. TRGP, Target Resources, we already looked at that one. Oh, hold on here. Here's another one you skipped over, Hercules. Look at this crossover on the VPCI and the TTI. VMI a little concerning here. Target Resources, again, nice crossover on both the VPCI and the VMI. Stock breaking out. I like stocks like this that have big bases. These are among my favorites. And finally here, Tenet, nice saucer bottom here. Nice breakout. When you see the red, that means we're out. When you see the green, we're back in. Okay. Again, we had a good TTI bullish signal here. This is confirmed by the VPCI going up. Also VMI headed up and above 0. This is a Tenet or TNC. Okay, last one, US Foods, USFD. Long base here, breaking out to new highs. Good, strong TTI with the VMI moving very, very positively. And the volume confirmation is above 0. It's hard to see it. It's not surging like the price we'd like to see, but still above 0. So my first book is Investing with Volume Analysis. That won the 2011 Technical Analysis Book of the Year. Coming out July 2nd is my new book, The Volume Factor. You can pre-order that at book.volumefactor.com/pre-order, or you can email me here at buff@kingsview.com. If you go to this link or email me, you can also get my white paper, my volume factor white paper, which explains the defense, which we didn't go over today with the volume factor. So our strategies in the volume factor, what we do is we pair a prolific offense, some of which you got the concepts of today, with a championship defense, and then where no one else does is we also have a dynamic special teams unit which is that transition from a bear market to a bull. Most systems that follow trends, those trends are late to the birth of a new bull market. So we use some volume analysis capitulation signals that identify where the market's bottoming out. That's the VBCI V bottom. You have the MetaStock toolkit for the volume analysis. You will see that you will get that indicator, the VBCI V bottoms. The last signal we had was September 30th, 2022. That wasn't a V bottom, that was a W bottom. That was published in my Volume Analysis Weekly newsletter. That was actually the day, the low point of the 2022 bear market. And it's not alone. We've gotten many signals that are not always on the day, but within a few days or the week of the actual bottom. You say you can't time the market. This is pretty accurate. And then we got the new book coming out, and then next week, March 7th, we had the volume analysis, volume factor ETFs being launched. So that was a volume factor dividend strategy and a volume factor growth strategy. Those are coming out March 7th for anyone that wants to buy the exchange traded fund ETF. So that concludes what I have for you, Jeff. Did anyone have any questions out there?
Yes, you do. And I'm trying to leave the screen up for a second, if you don't mind. I typed in the URL, but I got it wrong. So, but David wants to know how has your model shown similar? No. Okay, let me restate it. Has your model shown similar results in forward testing?
Has it showed similar results on what?
In forward testing.
What do you mean by forward testing?
Going forward, so when you backtest your models, it works very, very well. Have you had similar results when you're actually going forward in time? Is what I think what he's trying to ask.
Okay, so the live results are very, from when we've been doing the strategy, have been very similar to what we backtest. The one thing to keep in mind is that to get a positive outcome, there are times when your strategy will underperform and will have to go through drawdowns. That's true of this strategy. It's true of all strategies. I think it's less true of this strategy with using volume, because when you're investing in sectors and styles and all these things, they come in and out of favor. But when you're following the capital, those trends are a lot shorter, because you're always going into where the money's flowing. And so it's not that it doesn't have periods where it doesn't work. It does, but generally you don't have to wait years. Generally those things correct in terms of quarters as opposed to years when you're investing in like other factors or styles or sectors. But I can't talk about live performance in this type of session, but
Sure.
it's done its job.
Do you know what the tickers are going to be for your ETF? That's exciting.
Okay, so Monarch, volume is the factor that rules them all. Monarch, VF, volume factor, and then D for dividend and G for growth. Those are the two.
And those launch March 6th, so those are coming right up.
7th next week.
I know you've been talking about those for a long time, so congratulations on that. I know that's been
it's been a long time coming.
All right, so that's MVFD and MVDG.
Yeah.
Okay, I'll type those in the chat too. That'll be interesting to watch. Whitney wants to know: does this work with futures, commodities, etc.?
Yeah. So volume analysis is all about understanding and understanding supply and demand. So if you have good data, I personally am a stock guy. I look at stocks and I use it so I can tell you that it's been very successful in my career. But other people have used those other instruments, futures, currencies, even crypto have given me great feedback. But it's all about your data set. If you get good data that gives you good price that relates to the volumes, and that I use that word relate because it's really important they understand that how the volume and the price relate, because it's not one or the other, it's how they work together. That is the key pieces. And sometimes that data isn't really reliable. To give you an example, is if you look at volume on the S&P 500, and you pull the charts up on, or you get the newspaper or whatever you're looking at, it shows you the volume data. Generally, that data isn't any good. And the reason being is that if you look up going not the S&P 500, but the New York Stock Exchange. And then if you think about like the Magnificent Seven, how many of those stocks that control 25–30% of the capital weighting in the S&P even trade on the New York Stock Exchange? So it's giving that data on indexes is not very good. Then that's bad. But what's worse is that how those indexes are calculated. Indexes are calculated based generally on capital weighting, whereas volumes aren't indexed at all. They are tallied. And so what happens in a capital weighted index is that the weighting generally always goes to the stocks that have the strongest capital weighting, like for instance, Apple or Microsoft. But when you look at a tally, it's generally the penny stocks that are driving the volume because their stock prices are so low, they got really high volume. So they just don't match. So the point is that if your data is good, then volume analysis should work for you.
All right, let's see. And last one, just for time, we have tons of questions. But the last one for time, Kenneth wants to know, do you feel volume and volatility are closely related?
They don't have to be, but they generally are. And yeah, that they generally, as you get higher volatility, you generally get higher volume, but not always. There is times when the volatility could be lighter and the volume heavy, and vice versa. So they tend to be related, but sometimes they're not.
All right, very cool. Thanks again, Buff. Do you ever, let's see, would you be interested in speaking at an AAII chapter? David wants to know.
Yeah, I'm with the new book coming out, and I'm on the tour. So
okay.
So you got my email down
my
here.
Email. Or you can email buff@kingsview.com too. So there you go. Buff, best of luck with the launch of the ETF. And thank you for spending some time with us today.
All right, thank you.
All right, very cool.
All right, take care.
And if you do have questions, I know there were a lot of questions that we maybe didn't get to. Feel free to email buff@kingsview.com. So there you go. You go ahead and make myself the presenter. We're going to move a little bit. Before I kind of get into talking a little bit about what's included in this, we're going to do another prize. And what I want you to do is give me a number between 1 and 99.50. So any number, 1 and 99.50, is going to win a prize. I got another physical one. So I'm going to give you a copy of this Adrian Mance Around the Horn book. So give me a number. I'll match that over to our registration sheet in just a second. And while we do that, I do want to talk a little bit about the Buff Dormeier analysis toolkit. So with that, we sat down with Buff. Well, actually, he did most of the work on this, but he created 2 expert advisors, some scans, system tests, 2 templates, and actually 25 custom indicators. We just added another one of the indicators to it. Now, if you already have the Buff Dormeier analysis toolkit and you're already leasing it, go download the new version because it's available. It's a no cost update. You just have to grab it. Okay, so and you can do that at metastock.com/downloads. Okay, for those of you that haven't tried it, obviously, Buff's awesome. A Dow winner. He's creating his own ETF. He does a really, really good job. Here's a list of the indicators that are included. There's systems. That means you can go in and scan and see alerts and that kind of stuff. His add-on's normally $149 per month, and if you buy a month, you can get the second and third month for free. So it's about $50 a month to try it for 3 months and see if you like it. To add that to your account, give us a call, 800-882-3040. Go to metastock.com/ oh, yeah, I'll share my webcam. Yes. So I thought I already did that. Metastock.com / sales chat or metastock.com/conf promo. That'll be a great way to take advantage of that and kind of get ready. So there you go. And now my camera should be on. So very, very good. Let's do the prize drawing real quick. Let's see. Kim, Annie, Neil, Edgar, Andrew, Joe, Jan, Reed, Lewis, Mike, MetaStock. Thanks for all kind of helping me with the participation of it. I'm going to go with the very first number that came in, which was 99.49. So Kim, thank you for kind of contributing that number. If you haven't registered, if you're watching us on YouTube and you haven't registered yet, you should, because that'll add you to the list and you can win fabulous books, prizes. You can win the drawing. So if you haven't done that, the link, I believe, is pinned. Yeah, it was pinned at the top of the chat, which I think will be right there. So go ahead and get it. And the winner of the book is A99. Okay. Actually, it was 9,500 was the top. So I'll go with Annie's 1960. There's nobody that far down. A1960. So the winner of the book is John E. In the USA with an AOL account. So if that sounds like you, you may have just won. If you did just win and you happen to be watching live, most people watch the recordings. We love to have you live. You should stay here. But if you're watching live and you just won the book, say something in the chat. Let us know you're watching. So otherwise, I'll email you next week, get your address, and we'll get the book sent off to you. As we move on, I want to say thank you to Stocks and Commodities Magazine, AAII, and CMT Association, all for sponsoring the event. They're great. We love working with them, and they've been great partners, all 3 of them. I really do appreciate the sponsors. Such great reputations, well reputed, well respected. Thank you to all of them. So we have won 31 years in a row. MetaStock just won our 31st year. You can test the markets. You can scan. I just ran a scan. I could go look at the results as soon as Kevin starts. You can do forecasting. You can do real-time alerts, commentary. Pricing for MetaStock starts at $69 a month. And if you buy a month and get the second and the third month for free, that means you just paid $23 a month for 3 months of access. And I'd recommend you do it. There's a reason it's been rated #1 in its price category 31 years in a row. I love it. I wouldn't trade without it. I'd be lost without it. Metastock.com/conf promo, 800-882-3040, or metastock.com/sales chat. Any places like that. If you have questions about, hey, can I do this with MetaStock? Give us a call. We'll be happy to help you with it. So with that being said, oh, it still looks like we're only 8 minutes late. Our next presenter is Kevin. Annie, I'll answer you in the chat in just a second. So don't worry, I saw that. I'll get you the ETF symbols, Andrew, also in the chat. So there's a lot of questions coming in. Give me just a second. Kevin Nelson is our next presenter. Kevin, it's great to have you here. I really appreciate your coming in. Kevin's the only person that speaks this whole week that hired me to work at MetaStock. So that's something that's pretty cool. When I started, I remember there's a few things that he said to me. He's like, MetaStock's so powerful. It'll pretty much sell itself. All you have to do is just kind of make sure you ask the right questions and talk to people about what they're doing and where they feel like that they can improve. And I do remember that was really good advice, and it was correct, and it was spot on. And that was 26 years ago, and the program's only gotten better ever since. So, and since he's been the sales manager at MetaStock, he moved on and started doing a business that he calls LearnMetaStock.com. With LearnMetaStock.com, he does 3 live classes and has hundreds of videos that are available. Today, he's going to come in and talk about the Supertrend indicator. So, without further ado, Kevin, let's get you started. How are you doing today?
Good. Thanks, Jeff. I appreciate that.
Yeah, you bet.
That was some good advice I gave you years ago, wasn't it?
There was one good thing you told me. All right, just kidding.
All right. So let me know when you can see my screen.
I can see it. It's coming through. I can hear you. I'm going to get out of the way. It's your turn.
All right. Perfect. Thanks, Jeff. I really appreciate it. All right. As Jeff said, my name's Kevin Nelson, and I started a company back in 2008 called LearnMetaStock.com. And what we do at LearnMetaStock is we just help people with the program in just about any way that you can pretty much imagine. And if you go up to the website, you can see basically the different ways that we can do it. But what I'll do is I'll go through our website. I'll give you a quick demonstration of our website and how to move around inside it at the end of today's presentation. So what I'm going to be doing today is I'm going to be doing a presentation called the Supertrend indicator. Now, what we do at Learn MetaStock is we'll take different trading strategies and we'll show you exactly how to duplicate these strategies using MetaStock. And whenever we do something like this, we'll also provide the formulas that you can download directly into your program there as well. So these types of ideas and so forth primarily come from customers who basically just contact me and say, hey, here's a pretty good strategy. Maybe you might want to take a look at it. And that's exactly how this one came about. So we really love getting those types of ideas and so forth from our customers because, again, that's where most of our ideas actually come from. Now, so what I'll be doing today is I'm going to walk you through this particular indicator. I think it actually demonstrates pretty well. It's really easy to understand. And what I'm also going to do too is that if you're interested in this particular trading strategy, I'm also going to give you the opportunity to actually get the formulas from me as well. And what I'll ask you to do is just send me an email at the end of the webinar here and just request the formulas, and I'll be happy to send them to you. So I'll be showing you the different formulas as we're going through it. So if you'd like to get them, you don't have to write down or try to copy all the formulas as I'm showing them to you. Again, I'll be more than happy to send them to you there. All right, so this particular trading strategy here is a trend following type of indicator trading system. And for those of you that are familiar with technical analysis and basically been using it for quite a while, you know that trend following indicators do really well when a security is trending. And then when one of the weaknesses of a trend following indicator is when the markets start to trade sideways or get caught in these channels and so forth. And since this is a trend following indicator, it has the same strengths and weaknesses. But again, when you use it correctly and have the settings set the way that you want them and in tune with the market, you'll find that it actually works really, really well. And the nice thing about this particular indicator is that it's extremely easy to interpret. I'm going to show you how it works here, and almost immediately you'll know exactly how to interpret this thing. So super easy to understand how to work with it. One of the nice things about this indicator is that it uses an indicator that's built into it called the average true range. And the average true range will adjust for volatility. So the more volatile it'll adjust that way and actually get a little looser and then get tighter on less volume or volatility and so forth. So it'll automatically adjust as the markets adjust too. And another really nice thing is it's super customizable. So if you want it to operate a little bit quicker, you'll be very easy to actually make those adjustments or slow it down or whatever you'd like it to do. And one of the really nice things is that there's a ton of training available for this. So primarily how I got up to speed with it is just going up and looking at a lot of different videos and so forth that other people had posted up on YouTube. And as you'll see, if you go up and do some searches, you'll see exactly what I'm talking about. Now, in preparation for this, or when I created this, I actually created a number of different things. And the first thing I created was just an indicator that you can plot directly on your chart, an expert advisor that'll give you real-time buy and sell signals as the signals actually occur, 2 different types of system tests, and also an exploration that allow you to go out and search or scan the markets looking for buy and sell conditions. And these are the different formulas that I'll be happy to send out to you at the end of today's webinar if you'd like to receive them. So again, you don't have to worry about copying all the different formulas down as I show you. I'll be happy to just send those out to you. And as always, if you have any types of questions during today's class, just make sure and let me know. Just send me a message in the chat window and I'll be happy to try to help you out that way as well. So what we've got here on our chart right now is we just have a chart of the ETF of the S&P 500, the symbol is SPY or SPY. And when you download the formulas from the Learn MetaStock website, what you'll find is that all of our formulas are going to have the initials LMS at the beginning of them for Learn MetaStock. So just scroll down through your list of indicators and go down to the group of indicators that all start with LMS. And so just drag it directly on top of your price bars. And when you do that, what it's going to ask you for is going to ask you for 2 different inputs. Number 1, it'll ask you for the number of periods that you want to use in the average true range. And the second thing, it'll ask you for the multiplier. Now you'll see the defaults that I've got set up right now are just 7 and 3. So we'll go ahead and use that and click on OK. And now the next thing that it'll ask you to do is once you actually goes to plot this on the chart, it has to scale it and it has to be scaled correctly. So this is actually a pretty important point, and that is when you plot this indicator, it's very, very important that you merge it with the price scale. So in this case, over here on the right-hand side, this is our y-axis. So this is my price scale that I'm looking at right now on our chart. So what I need to do is make sure and merge it with that scale on the right. I'll click on OK, and that'll plot our indicator here. So as I was stating before, this is a pretty simple indicator to understand. All we're really looking at is that if the closing price of the security is above this line, that basically is going to indicate that you're going to be looking for bullish types of opportunities. When the prices drop down or close down below the line, then you're going to be looking to either get out of long positions or possibly even go short. So as I was stating before, is that this is a trend following indicator. So when the markets are trending, you'll see that this actually works really, really well. It keeps you in the right side of the market. Now, with trend following types of indicators, one of the biggest weaknesses with them is that when things start to basically get caught in a trading range or a sideways price move and so forth, this is where trending indicators really struggle because they have a hard time kind of figuring out, is it trend up, is it down? And a lot of times what happens is you get what's called whipsawed. So here's a pretty good example is like during this little section right through here, you see how the price is moving up and down, and you see the indicator also flipping above and below it as well. And those are the kinds of situations, again, that you need to be careful of and watch out for. So the nice thing about this, though, is that you can adjust this indicator depending on how you want to use it. All you have to do is just double click directly on it, for example, and this will open up the indicator property dialog where you can then adjust the parameters to whatever you need. Now, in this case, for example, I'm just using the periods of 7 and 3, but the question is like, so since I'm looking at the SPY here, are those really the best periods to use on this chart? So to help you kind of answer that particular question, again, I've created a couple different system tests that'll help you figure that out. So what I'm going to do next is we're going to open up the system tester. So I'll click on the green dollar sign right up here at the very top. And what you'll do again is when you install these programs, again, all the formulas will all begin with LMS for Learn MetaStock. So one of the nice things that they added in version 18 is a search feature up here. So I'll just type in LMS and that'll bring me down or basically show me all of my formulas. So in this one, you'll see that I've got two different Supertrend formulas here, or system tests. One is just called a regular system test, and another one is a system test with OPT, which is an abbreviation for optimization. So let's go ahead and open that one up, and I'll just double click on it. And what you'll see is that there'll be a quick explanation about what this particular system test will do and how to use it. And just a real quick shout out to William Golson there at MetaStock. William's actually the creator of this formula. He wrote this formula initially, and then what I did is then I took the formula and created the system tests and explorations and so forth. But the credit really needs to go to William for the creation of this. He does an excellent job over there, to say the least. So the way that you work with this particular system is that you jump over here to the optimizations tab. And in this optimization tabs, you'll see that there's two different choices to work with. There's the multiplier and also the length of the ATR. And you'll see that by default, I'll go ahead and open it up. You'll see that the multiplier is going to have a minimum test of 1 period, and it's going to have a maximum of 10, and it's going to do it in steps of 1. So what this means is that it's going to run through a number of different system tests. And rather than just saying, hey, I want to use a multiplier of 3, it's going to test everything from 1 period to 10 periods, and it'll show us the results of those. Okay. And then for the length of it, you'll see that we're also using optimization for the length of the indicator as well. And this time it's going to go from 2 to 40 in steps of 2. So again, rather than just choosing a fixed 7 periods, this is going to test all those different periods between 2 and 40. And then we'll be able to come back and sort through those results. Now down here at the very bottom, you'll see the total test that this is going to run through. It's going to run through 200 different combinations. So we'll go ahead and click on OK. And then what we'll do is we'll go ahead and run this real quick, and we'll see what this comes up with. So I'll go ahead and select that particular system test. And then up here at the very top, I'll put in my symbol of SPY, which is SPY. And then over here on the right-hand side, I'll tell it that we're going to just test going to the long side. We're going to try to keep this pretty simple and straightforward. And then we'll test it going back over the last 1,250 records, which is going to give us about 5 years of time. So just keep in mind, there's typically about 250 trading days in a year. So again, that's going to equate to about 5 years. And then for the trade options, let me just go through this quickly with you. But underneath the account, for example, you'll see that I'm going to run what's called a points only test. So this is just going to return back a raw number of points that when we test this. And I'll talk more about this here in just a minute, but I just want to show you some of these settings real quick. You'll see underneath the broker, I don't have anything for interest rates or margin requirements, and I've got my commission set to 0. And for my trade execution, you'll see that I'm going to place everything at the opening, or basically every trade is going to happen at the opening with a 1 period delay. So what that means is that if I get a buy signal on Wednesday, I'm testing end of day data, by the way. So let's say I get a signal on Wednesday. Well, this is going to simulate that I get into the trade on Thursday at the opening. And if I get an exit on Friday, for example, this is going to simulate that I got out of that trade on Monday at the opening. All right, so let me go ahead and just start this real quick, and we'll go ahead and get this going, because again, this is going to go through 200 different combinations. You'll see down here at the lower right-hand corner, you can kind of see how this is run through. Now, a second ago, I was just telling you that I'm running what's called a points only test. So this is just going to return back raw number of points. And there's another way that you can run system tests, and that is you can put in dollar figures. And you can choose to do this however you like, but what I've kind of have found over the years is that I really use the system tester as a real tool to kind of figure out whether or not I want to take a closer look at a particular trading strategy. And by using a points only test, what I've found is that it's very, very easy to compare the results of one system against another. And then once I kind of really get into it and say, for example, I find something that looks really interesting, then I might switch over to maybe testing it on a dollar figure as well. And the other thing about using a points only system is it also takes out of the account any type of like interest or margin that you could be trading on as well. And those are a couple other fields that could be important to add in afterwards, but what that does is it makes it really difficult to compare the results against each other. So what I'm going to do also is I'll show you some different ways that we can compare the results too that might be helpful for you as well. So I'll go ahead and click on View Results. And what we're looking at here is, again, remember we just ran this test on 200 different combinations of basically using it on the SPY, of using this particular indicator. And what we're looking at here are the results that we can then sort on any of these columns. So for example, like if I sort on the net profit, you can see that I can get the highest at the top and then the lowest at the bottom. Now, the first thing that you might be wondering about is that it looks like every single system that we just tested was positive, right? Or basically made money. And the answer is well, that's not necessarily true, because if you remember, we ran through 200 different combinations. Well, the most that the system tester will keep or allow you to analyze at one time is 100. So in other words, this is looking at 100 of the most profitable ones. So again, it's not necessarily saying that everything tested profitably, but it's saying that the top 100 did test profitably. So make sure and keep that in mind as well. So here we can take a look at some of the results, but here you can see, for example, like the net profit for the top one was a little over 230 points. It traded 8 times. There were 5 winning trades and 3 losing trades. And then the average profit to average loss was 3.87. This, in my opinion, is a very important number, because what this tells you is it tells you the average size of your average winning trade versus the average losing trade. So in other words, this is saying that your average winning trade was almost 4 times the size of your average losing trade. So the idea here is that when you're developing different types of trading strategies, in my opinion, one of the most important things that you really need to kind of work on is that your average winning trade is substantially larger than your average losing trade. And if that's the case, you can actually run these numbers, but you can be wrong a lot more often than you're right, meaning you can have a lot more losing trades. But if your average winning trade is larger, you can actually do very well with that particular trading strategy. So generally what I typically try to look for is somewhere in the neighborhood about a 3-to-1 ratio, meaning I would like to see 3-to-1 in my testing, because the idea is that if I then go and show this or basically try to trade this in the real markets and I only end up at around a 2-to-1 ratio, I can still do very well with that. And I can still be wrong more often than I'm right, and again, make pretty good money with it. Now, over here on the right-hand side, this will tell us the results or the parameters that it came up with for this particular system test. So the first one is 5. So that's the multiplier of the ATR that it came up with. And then 38 is the length. So in other words, it's saying that if I were to use that combination on this historical data set going backward in time, that's how well it would have done using those particular parameters. Now, in this one, you can see it generated 230 points. The buy and hold was 228, so just a little bit better than buy and hold. But then if we go and scroll down here a little bit, this will give us more information about that system. So there were 8 total trades. 5 of them were winning trades, and then 3 of them were losing trades. The average winner was 54.6 points, and the average loss was 14 points. So this is almost that 4-to-1 ratio. I mean, I think it was like 3.8 to 1, I guess, on this ratio of 54 in relation to 14. Now, the other thing I really like to look at that a lot of people kind of tend to overlook is this number right down here. This is what's called the out-of-market timing number. And this tells you how much you were actually out of the market, out of the data that you tested. So for example, this is saying that we were out of the market 425 bars. Now keep in mind, there's typically 250 trading days in a year. So that's not quite 2 years of time. But what this is saying is that in order to generate this 230 points, right, we were in the market at least 3.5 years. But in this one, for example, we had to be fully invested for 5 years in order to generate the 228 points. So again, that's another really important thing to kind of keep in mind when looking at these numbers, because a lot of times what you'll do is you'll run a system test and the profit might be fairly low compared to the actual buy and hold, but you might find out that you were hardly ever in the market. You had very little risk being exposed in the market. So that can really change these numbers here quite a bit. Now, if you want to take a closer look at it, then of course you can click on this plot on chart down here at the bottom, and we'll go ahead and close down this dialog, and we'll close this one down. So up here at the very top, this is the equity curve that for this particular security, and you can see generally it really looks pretty good. I mean, it actually has a really nice move here, and as you can see here, since this is a trend following system, that's where it really shines. Everywhere that it trends, it does very well. Now, where it has a tough time, of course, is then when it's not trending. Things get real choppy, and that's where it starts to move downward. So, okay, we'll go ahead and close that window down. And then in order to really kind of check these signals, what we want to do is we want to take a real close look by actually double clicking directly on the indicator and then just making the adjustments of whatever we came up with in our test. So for example, in this one, we came up with a 38 periods for the length of the ATR and then a multiplier of 5. We'll click on OK. And now we'll go ahead and zoom in here just even a little bit more. Kind of zoom, I'll go ahead and bring this volume bar down here just a little bit. We'll scroll over here. So the way that this system test worked is that when the candle, for example, closed above, for example, this line here, that indicates a possible long position. And then our system test, as you can see, then got in on the very next candle there. Now, to actually check the prices and so forth that it got in and out, then you can hover over this number, and this will give you more information. So here it's saying that on position number 8, it traded 1 share, 1 unit at 439.23. So to check it, if you hover directly over that candle, you'll see that the opening price is 439.23. So in other words, it got in at the opening of this next bar. And the reason being is because this candle right here closed above that line. See that? So now I'll go ahead and scroll back here a little bit. And for an exit, as you can see, this indicator here now, when it's below the prices, this could act as a trailing stop. And the idea is then when the prices trade below that line, that's going to indicate an exit signal. And that's exactly what happened at this point right here. It happened at a price of 433.37 because of this candle here trading below it. And if we hover over that candle, you'll see that the opening is 433.37. Okay. So if you're trading, for example, like individual securities like that, that's what you could do to help kind of figure out, you know, the right parameters that maybe you want to use for this particular system. Now, another way to go about this too, and another thing was that when I'm trying to figure out different trading strategies and working on them and so forth, a lot of times I'll test it on a basket of securities. So to help with that, I'll go back into the system tester. And you'll see I've created another system test here, which is just called the Supertrend system test. And we'll go ahead and open that up. And with this one, what you'll do or have the ability to do is you'll have the ability to set the multiplier and the length of the indicator to anything that you like. So in this case, again, you'll see the default is just 3 and 7. And that's for the buy order and also for the sell order and so forth. And also if you want to test it going short, of course, you can do that as well. But when you go to change these numbers, you can change them to anything you want. One thing I highly recommend, though, is that whenever you're working with any of the formulas inside of MetaStock and you want to make an adjustment to them or change the parameters, whatever it is, I highly recommend that you make a copy of it and then make your changes to that copied version. So if you want to make a copy of something, just right-click directly on it, choose copy, and that then will then create a copy that, again, you can make as many changes on that one, and then you have the original to fall back on if you make so many changes you can't get it back. So just kind of a little safety check there for you. So let's go ahead and run this particular one, just the system test by itself, and let's test it on a bigger group of securities. So what I'll do is I'll go ahead and select this copied version here, and then down here at the bottom, I'll choose, for example, like the NASDAQ 100, and then I'll go ahead and start my system test. So I'll keep all the parameters the same, meaning all the different trade settings. I'll keep all those exactly the same. And I'll actually run a number of different tests and explorations here as we're going through it. But if I make any changes, I'll make sure and let you know there as well. So as we're going through this, you'll see that down here in the lower right-hand corner, this will give us a status of how quickly it's running through and some of the different results that we can kind of go through. But as always, again, like I say, if you have any questions, make sure and let me know. And Jeff, if you want to interrupt me too with any type of pertinent questions, I'd be happy to take those as well. So, all right, we'll keep going. And this is almost finished here. And then we'll go ahead and take a look at this. All right, so let's go and take a look at this one. All right, so what I did here is I ran that system test on the NASDAQ 100 securities there. And same thing, I'll go ahead and sort, for example, like on this net profit here, and we'll get an idea of how it did just on the group overall. So as you can see here, the vast majority of the securities actually did well with this. We did have some securities that didn't test profitably. But then what we can do, of course, is then you can start to take a closer look at some of the different ones that did well. So for example, like the top one here, this ASML holding, I'll go ahead and open that up. You can see that this one generated over 810 points. The buy and hold was 763. There were 19 total trades with 12 winning trades and 7 losing trades. Scroll down here a little bit. Your average profit was 82 and your average loss was 25. So again, real nice ratio there. And if you look down here at the out of market timing, you were out of the market over 500, or you were out of the market 530 bars. So that's over 2 years of time. So again, that means that you generated this 810 points in being exposed in the market for 3 years. Whereas in order to generate the 763, you had to be a buy and holder, meaning you had to buy it on the very first data point and literally hold on to it for that whole 5 years in order to generate that 763. So again, by being, having less market exposure, that also gives you the ability to do something else with your money when you're not in a trade as well. Now, the other thing, of course, we can do is we can click on the equity tab up here at the very top, and we can take a quick look and just see how it did overall. Generally, what we're looking for is we're trying to find something that with as smooth of a line as possible from the lower left-hand corner to the upper right. And what we're, of course, trying to avoid are what we call drawdowns, where the account's just going against you. I mean, or the trade is going against you, meaning you're long, for example, and the market's dropping, and it's just keeping you in there. So overall, this actually looks pretty good. It looks pretty solid. So this is what we could do is we could go through each one and we could look at each one individually. But let me show you some other way that we can analyze this as well. So I'm going to go ahead and go back into this particular system. And by the way, real quick, if you close down a system and you want to get back into it and take a look at the results, if it has an R inside of a set of brackets at the very end, that means that there's a report available for it. So you can right-click directly on it and then click on the report, and that'll bring you right back to where you were. So we'll go ahead and select it, click on View, and again, we're right back to that previous report that we're looking at. So I'll go ahead and sort again, for example, like on the net profit. And when I'm developing trading strategies and trying to figure out if one is better than the other, one thing that I found that actually works pretty well for me, and maybe this will work for you, is actually to take this information and possibly put it into, for example, like an Excel spreadsheet. So let me show you real quick how I would do that. I'll just go into the report here. I'd right-click on any of the securities and click on Copy to Clipboard. And then we'll go ahead and open up Excel. I think I've already got it open, so let me take a look at that. And then we'll just go into Excel here, and I'll click on a cell, and I'll just paste in that information. So this is pasting in all the information that we were just looking at in that previous report. And this is the column that I really kind of want to take a closer look at. This is the net profit column. Now, when working with Excel, one thing we have to be careful of is that if we want to sort on numbers or average numbers or see the sums and so forth, we have to have something that we can work with. But in this case, when you copy and paste a system test that is a points-based system, you'll see it's going to have an abbreviation of PTS at the end, which is an abbreviation for points. So all we really need to do is we need to remove that from here so I can work with this column of data. So what I'll do is up here in the upper right-hand corner, I'm going to click on this Find and Select. I'll click on Replace. And then in this dialog, I'll tell it to replace PTS with nothing. Basically, just leave this second field blank and click on Replace All. And that'll remove all the PTS or the points abbreviation at the end of those numbers. Now, the reason why I want to do that is because now these are just numbers that I can do anything with. And what I like to do is I'll take this number and I'll just kind of scroll down here. I'll grab, for example, like every system that tested profitably, kind of scroll down here until it starts to go negative right there. So that's the last one. And then I'll take a look at these two numbers down here. So you can see that the count was 76, meaning that there were 76 securities that tested profitably. And out of those 76 securities, the average was over 115 points. Okay, so I'd make a note of that and then go down here to the systems that tested unprofitably and scroll down, highlight all those, and then same thing. So that means I've got 25 that were unprofitable. Excuse me. And the average loss was 33.3 points. So again, this is just a really nice way to very quickly grab all that information and take a look at it overall. Because one thing I've kind of found in system testing is that there's obviously countless different ways that you can do it. But if you want to test a basket of securities, what's pretty interesting is actually taking your system test, making small adjustments to it, and see if it helps that overall group in a positive way, or if it hurts it. But by taking and putting it into an Excel spreadsheet like that, it makes it really easy to identify, if it got better or your changes made it worse. So let me go back over here to the program. I'll jump over here. There we go. Okay, so I'll go ahead and close that down. Excuse me. All right. Now, another thing that I found when doing research for this particular trading strategy is I saw a lot of people were trying to add another component to this system. And as I was explaining before, the advantage of using a trend following system is that when something is trending, it works really well. And when we get in a sideways or choppy market, that's of course is where a trend following system struggles. So one of the things that I saw that a lot of people were doing, or I saw on YouTube, for example, is they added another component to this trading strategy to help identify whether or not it was trending or not. And hands down, the most common one was adding a 200 period exponential moving average to it. And just saying, hey, I only want to take the trade if the prices are above the 200 period moving average. And then, of course, then the prices trade through that indicator, for example. So how could you add that to the system? Well, this is the area. Now, this is a time where your formula writing could come into play depending on your level of expertise with MetaStock. But what you could do, for example, in this case, is I'm going to go back into this formula here, and I'll just kind of explain how I would do it. But at the very bottom of the buy order that we're in right now, this is the part right here that's going to generate the buy signal. And what this line is basically going to tell you is that when the closing price crosses up above that line, that's going to indicate a buy signal. Now, if I wanted to add a second component to it, saying like maybe the close also has to be above a moving average, I could add that to this particular buy signal. So just bear with me. I know a lot of people, aren't, super, knowledgeable with the formula language in MetaStock, but let me just show you how we could possibly do this if you are interested. So I could say something like, I want this to happen, and I also want the closing price, for example, to be greater than its moving average. And the way that you could write that is MOV for moving average, close, followed by a comma, the number of periods that you want to use in your moving average, and then the type of moving average. So in other words, this second line is saying that in addition to this to be true, meaning that when the close goes above that line, I also want the closing price to be above its 200 period moving average. And this is the example that I saw a lot of when I was looking at the different ways that people were using the system. So let's go ahead and test this real quick. I'll click on OK, and I'll go ahead and click on our Start System Test. I'm going to keep everything exactly the same. I didn't make any changes here to the trade options, and I'm still running it on the NASDAQ 100 securities. And we'll go through this and see if this makes any changes. Now, one thing I will state just very quickly is I know, or I've been doing this for a long, long time. And I love talking to traders and people who have also been trading for a long time and just kind of getting an idea of how they trade, what they find important, what they find unimportant, and what they do. but I will state that I have been very surprised previously. I'm not so much anymore, but the number of traders that have been trading for a long, long time, a lot of times have pretty simple strategies. They're not overly complicated, right? They have a strategy that they understand. It's straightforward, and it's something that, more importantly, they have faith in. And that is, if you understand what you're trading and you have faith in it, you're more likely to actually take every single trade. And that's really kind of what sets apart a lot of the traders that I've talked to over the years. And so a lot of times what I find is that if you've got a good trading strategy and then you always are trying to add something to it and so forth, more often than not, I personally have found that a lot of times it really doesn't help. So, but let me just show you how this works. So we'll go ahead and click on View Results. And let's take a look at this. So we'll go ahead and sort again on the net profit. And I'll right-click directly on one of these. I'll click on Copy to Clipboard. And it looks, pretty similar here, right? So it looks like pretty much the same results. So in this case, this would be a perfect example of how or why I'd want to go ahead and incorporate like an Excel spreadsheet in this case. So what I would do is maybe go to a new spreadsheet and then paste in our results and then do the same thing. Like, for example, I'll go to this net profit column here that has the points in it. I'll remove this particular field, or the PTS here. So we'll go to Find and Select, Replace, and then I'll replace the PTS with nothing, or basically blank, and click on Replace All. And that'll convert that whole column of data to just to numbers themselves. So now very quickly, I can just highlight the positive results. And I can take a look at this, and now I can see that by adding that particular, adding that moving average criteria, now I can see my count has actually dropped a little bit to 69, and my average is now 92.9 here out of the ones that were positive. And then we'll go ahead and highlight the ones that didn't test profitably. And now you can see the number is 32, and the average is 39.59. So these are the kinds of things that you can do with the system tester that make it extremely powerful if you want to go, and do that type of analysis. But I've found over the years, taking the information like that, putting it into an Excel spreadsheet, I think is actually a pretty good way to objectively look at the data. Because a lot of times you'll look at something like this and you'll say, well, is that better? Is that worse? I don't really know. So putting into a spreadsheet like that, I think has worked pretty well for me. And hopefully it works for you. Now, the other things that I've created here as well is I also created an exploration. So I'll go ahead and do a search again on LMS. Oops. And up here at the top, you'll see there'll be a Supertrend exploration. We'll go ahead and open that up. And the exploration is really pretty simple. It's taking the exact same formulas. And what it's going to do, it's going to give you basically that information for the buy and sell underneath column C and column D. So anything that comes up with a buy signal underneath column B, or basically have a 1, that means that particular security met that indication. Therefore, the price is crossing the line. And vice versa for a sell signal. Every security that has a 1 inside of this column is going to meet the sell criteria. Now, for the filter over here on the left-hand side, I just said, only show me securities that are coming back with either a buy or a sell signal. And the way that I did that is just put in, give me securities that are meeting the criteria underneath column C or column D. So we'll click on OK. And to run this, we'll go ahead and run that again on the NASDAQ 100. We'll go ahead and run it through the current exchange date and time. So the other thing to keep in mind here is that when you're running these scans, and you're running the real-time or professional version, you're running through data that it can get up to that point. So just keep in mind, if you're trying to find information or trades like right now, you need to be aware of whether you're looking at complete information or not. So again, in this particular case, of course, we're in the middle of the trading day. So at the end of, if I rerun this scan at the end of the day, I'm probably going to come up with some different results. But right now, I've got 2 different securities that are coming up. I've got PepsiCo and also Tesla. So let's go ahead and open those up. We'll go ahead and give you that one. And there's Tesla. And you can see that PepsiCo is giving us a sell signal, and Tesla is giving us a buy signal right now. So let's go and take a look at that. Go ahead and close those down. And we'll go ahead and drag that indicator back on there again. So this is for Tesla. We'll click on OK. and we'll merge it with a scale. Click on that. Now, the reason why this one is coming up with a buy signal is because this candle right here just closed above that line right there. And for that reason, that's indicating a possible bullish condition based on those parameters. So that's Tesla. And then we've got PepsiCo, and we'll do the same thing. And of course, when you run these scans, you don't have to run them on just the 7 and 3. You can modify or change those fields to anything that you like. So we'll go ahead and make that. And you can see that this one is giving us a sell signal right now because this candle right now traded below, or is trading below that, that lower line. All right. Now, in addition to that, I've also created, let's go ahead and close these down. There's a SPY. We can leave that one up. I've also created an expert advisor, and we'll go ahead and scroll down here and let me show you that. Just scroll down again to the LMS formulas and find the LMS Supertrend expert. And same thing, if you want to modify the length of the indicators, go underneath the symbols tab here, open up the buy condition, and you can adjust the multiplier and the length right there. And then same thing for the sell signal. Go ahead and open that up and you can adjust that as well. All right, but click on OK and click on attach and then close. And then this is going to give you, for example, those buy and sell signals. So let's go ahead and I'm going to go ahead and adjust our indicator. We'll make this, change this back here, for example, to 7 and the multiplier to 3. Click on OK. And since this is actually kind of hard to see these signals, I'm also going to double click directly on one of the candles. And we'll just change this, for example, like to a bar chart. And I'll make both the colors of up and down both white. And click on OK. All right. And here you can see the nice thing about creating an expert for these systems is that these will give you those real-time buy and sell signals as they occur on your chart there. So, and also keep in mind too, I mean, everything that you're looking at here is just a price-based formula. So one of the questions that I have gotten when doing this webinar before is, does this work on real-time data? And the answer is absolutely. Anything that it's going to have the open, high, low, and close, you'll be fine, you know, using this on anything that you want. All right. So with that being said, let me just show you, just give me a quick overview of our website, what we do at Learn MetaStock. And at Learn MetaStock, again, our goal is to really help you with your MetaStock program and help you in whatever way that we can do it. And we do this in a couple different ways. First of all, if you go up here to live classes, we do up to 3 live classes per week that you can scroll down. You can see what we're doing that week, that point. And once you become a member, all you do is just click on your join live class and that'll bring you right into the classroom at that time. So that's really nice, especially if you have questions that you want to have covered, and we can, you know, pretty much cover any type of subject you want having to do with the MetaStock program. But where the majority of the people spend their time is in this group right here. It is called the video library. And inside our video library, we have well over 100 different training videos in here that, that you can work on and kind of help you with your program. Now, if you're new to MetaStock and just kind of figuring things out and just kind of really want to put this thing together, where I recommend that you get started is this category right here called Getting Started. And the videos I highly recommend that you take a look at here is the Introduction to MetaStock Part 1, the Introduction to MetaStock Part 2, the Next Step into MetaStock, and then finally the MetaStock Advanced. And if you make it through those first 4 videos, that's going to give you a really good solid foundation of how to work with the program. And from there, then you can move around to anything else that you want. So for example, then maybe you do want to jump over to system testing, then you can jump over to that category here, and you can go through the different types of system testing classes and videos and so forth that we have. If you're interested in learning more about the formula writing, click on that category. That'll take you down there. One of the most popular categories that we have, though, is the trading strategies category. And this is the area where we take trading strategies from a published source. You know, Stocks and Commodities Magazine, by the way, is an excellent source. Once you actually become a subscriber to them, they have an archive section that you can search on any subject that you can imagine and pull up these archived articles. That is an excellent source of education. I'd highly recommend looking at that. But we do a lot with stocks and commodities, and then in addition to books and other magazines and so forth. But the thing is that when we take these different trading strategies, we literally show you step by step of how to duplicate that particular strategy. And then the other thing is then of course, then we give you the formulas as well. So for example, with this class here, you just scroll down a little bit and you click on this link here, and that'll actually download the formulas that we created directly into your MetaStock program. And if you, depending on your expertise with MetaStock, that can just be a huge start there for you and save you a massive amount of time, to say the least. We spent years and years doing this, and again, I can save you a lot of time by going through there and helping you out with this. The other thing we do also in these videos as well that might be helpful, again, kind of getting started, is that when you're working with these different videos, if you click on one, for example, a lot of them we have quizzes that you can go ahead and click on the quiz button, and the quiz will help reinforce what we were showing you in the video to kind of help get you up to speed with it that way as well. So again, we've got a lot of different ways that we can help you, and I'd love to see you come on board. Now, for those of you who are interested in receiving the formulas today, all you need to do is just drop me an email. The email is admin@learnmetastock.com, and I'll be happy to get you those formulas. All right. So that's what I've got here for you today, and I'll go ahead and turn it back over to Jeff and have him take it from here.
Do you have time for a question or two?
I do.
All right. Well, I actually have a question in the comment. Bill wants to know, what advice do you have to prevent over curve fitting when doing back testing with parameters?
Oh, that's a great question. I mean, we could go on and on about this, but optimization is a very slippery slope. And what optimization allows you to do, of course, is allows you to test a group of data, right? And the nice thing about that is you can see the results, and then, of course, then sort on the results. And for example, like take the most profitable one. The problem with that is, or the problem that people have run into or will run into, is by taking the most profitable ones, what you're saying is that I tested on this historical block of data, and unless the next block of data behaves like what I tested on, I'm probably not going to be happy with the results. More often than not, it underperforms like what you tested on. So then the question is, well, what can you do? One of my favorites that I actually like as far as like testing is doing what's called walk forward testing. And walk forward testing just means that you go backward in time, you develop a trading strategy on a block of data, and you literally lock in the parameters at that time. And let's say your parameters are 5 and 38, like what we kind of came up with. Then what you do is then you test it on another block of data that the system hasn't seen before, and then you compare them against each other. And you just see how they do against each other. And what's really important is that you're always testing in good markets and bad markets, sideways markets, flash crashes, COVID markets, take your pick, but you need to throw everything at it. And quite honestly, the more that you do and the more objective that you can do or be at doing that, I think the more robust type of trading strategy that you'll end up with, rather than just going with the most profitable one. So I hope that helps, but we could go on and on about system testing and optimization and curve fitting and all kinds of things, but there's a lot of things to kind of be aware of and be careful of, to say the least.
All right. And then actually 2 comments now. Ricky's like, incredibly powerful, exclamation point. So, and then Andrew said in the chat, Kevin's a great teacher. So there you go. Which I think is a great compliment. In terms of powerful, maybe he's talking about MetaStock, or maybe he's talking about the lesson. But I think either one would be correct. In any case, though, let me talk a little bit more about that. Kevin, I want to say thank you for coming in. I appreciate your time today. I'm going to go ahead and talk a little bit about the promotion that we've got for the conference and all that kind of stuff. But before I dismiss you, I wanted to say thanks for coming in. And actually,
well, thanks again. Thanks again for having me. I appreciate it.
Of course. All right, very cool. Oh, also, thanks for hiring me. That was cool. All right. So one of the things that I like to talk about when it comes to Learn MetaStock is it's such a handy tool. And Kevin does a really good job of showing kind of everything that's available, all the stuff that's available on the site, all that kind of stuff as well. But what I want to do is actually just kind of, there's a couple of things that I want to kind of make sure that I say here, and kind of enunciate as well as possible. One of the things that we do as kind of a training tool when we bring on a new support rep or a new sales rep is the first thing that we do is we sign them up for, we sign them on to learnmetastock.com and we have them go through videos. And if you ask any of the kind of the newer employees, that's probably a good first week or two of their actual employment. It's just coming in and watching Kevin and taking his quizzes and stuff like that, because it is really, really helpful in terms of us getting people up to speed. The second thing I want to say is like MetaStock is a huge tool. And as Kevin just showed you very, very skillfully, you can use it to test trading ideas, you can use it to scan, you can use it to forecast. And Kevin does a really good job in his training videos of showing you how to kind of access those tools. And I'm sure there are people that might be like myself in the chat that have went and bought tools that sit in their garage in their original packaging. They don't get that much use out of it, but I haven't gotten that much usage out of them. And like any tools, the better you understand how to use tools, the better they're going to work for you. And so I love this as a way to get ready for MetaStock. With learnmetastock.com, you get 3 live classes a week. You get hundreds of videos that you can go through at your own pace with quizzes and all of that kind of stuff. But in addition to that, just like he talked a lot about kind of the system that you can get there, there's actually 21 different complete systems that you can get, 9 different templates, 62 indicators, 14 expert advisors, 28 system tests, 13 explorations. All of those downloads are included as part of Learn MetaStock. And what's kind of also cool about that is not only are they included as things that you can get, each of them have videos where Kevin sits down and kind of says, this is how the system works. This is how I like it. Here's maybe some of the pitfalls of it. It does some really good comprehensive training about it. And so if you'd like to go ahead and get Learn MetaStock, the special that we're going to do is if you pay for a month of learnmetastock.com, you'll pay $99. It's a service, it's $99 per month. But we're going to give you a 3-for-1 on that. So if you buy a month, you can get a second or third month for free. And whether or not you're new to MetaStock or if you've been with MetaStock for a while, I'd recommend you do that. So www.metastock.com/learnmetastock 3-for-1. Give us a call, 800-882-3040 or metastock.com/saleschat. So there you go. All right, cool. Let's do another let's do another prize drawing. Give me a number anywhere between 1 and 99.49. And what I'm going to do is I'm going to take that number. I've got a list of everybody that's registered here. I'm going to take that number that you give me, and I'm going to actually give away a prize. While you are giving me a number between 1 and 99.49, I'm going to say thank you to AAII at AAII.com. AAII has been a good partner of MetaStock. They've supported our conferences for a couple years now, 2-3 years. We do a lot of work with their head of the active investor division, Ray Bondo. He talked earlier this week. But you can find out, they have individual chapters that are awesome. Find out more about them at AAII.com. So there you go. Bill says, great program. Thank you. I'm glad you're enjoying it. Thank you for that comment. All right. And then before we get on to Tushar, let's go here. Let's pick out our winner. Hey, Tushar, I can see you there. You're looking good. I don't have your mic on yet, though. So hold with me. I'm going to announce a winner. And it's going to be 3489. Thank you for that number. Okay, let me take a look at who that is. This is going to be the MetaStock prize. So we're going to give you 3 months of Learn MetaStock. We're going to give you 3 months of MetaStock. We're going to give you 3 months of our real-time data. We're going to give you our Unleash the Power of MetaStock. We're going to give you our white glove installation treatment, and you're a lucky winner. So 3489 is Gary S with an AOL account. So if you registered with just a Gary as your first name and S as your last name, and you have an AOL account, you probably just won. I'm going to go ahead and make a note of that, and then I'll get in touch with you next week so I can help you collect that prize. So our next presenter, though, is right here. His name's Tushar Chande. I'm going to go ahead and turn on your mic, Tushar. I'm going to go ahead and get you started. Tushar is a great technician. He wrote The New Technical Trader with Stanley Kroll. He wrote Beyond Technical Analysis, which is in a second edition. I believe those are the extent of the books that he's done. But if you've ever used like stochastic RSI, that's one of his indicators. Very, very smart technician. We love having him on here. And let's see if we can get your mouse to, let me unmute you. Okay, let's try now. Can you talk?
Can you hear me?
Oh, yeah, it's working now. I can hear you fine.
All right, I just wasn't sure you. Okay, great. So how are you?
I'm good. How are you?
Oh, great. I've been really enjoying the sessions this morning, and I've been, tuning in during the, during the week was more, and it's been fascinating. So many wonderful ideas. My God, it's terrific.
Oh, yeah. Yeah. All right, cool. Well, I can see your screen. I can see you well. I can hear you well. I'm going to get out of the way. It's your turn. Go.
Okay, you want to get started or?
Yeah, go ahead.
Okay. Hi, everybody. Good morning. So glad you can be here. I guess it's good afternoon if you're on the East Coast. Wonderful session this morning. Thank you to Jeff and everybody at MetaStock for inviting me and for putting on a wonderful conference. And it's been a great week in the market. So I hope you guys are enjoying all that. A lot of references to trend following this morning. So, I hope, we'll build on that, but we'll go in a slightly different direction. We'll think more short term than long term, but I'll show you that you can use many of the same trend following ideas. And then everything I'll talk about is included in my toolkit, and I'll refer to that briefly. So let's get started. The usual disclaimers. Most important thing to remember that past performance is not necessarily indicative of future results, and the risk of loss in trading. And then I'll show you a number of charts here, but they may not exactly match what's in the toolkit simply because we're just doing it at different points in time. Okay. So in terms of short-term trading or strategies, there are lots of different approaches. Certainly, you can use technical analysis for support and resistance, for breakouts, for moving average crossovers. You can look at order flow in terms of the order book and how the orders are stacking up on both sides, buys and sells, and try to game that. Certainly, you can have event-driven situations where you have an earnings report or a Fed meeting, and we've seen all this month that some generally, especially in the aftermarket, stocks are having big moves, up 20%, down 20%, depending on how the earnings report have come out. And then, of course, the scalping, but it needs a lot of technology, so I'm not going to worry about it. So I'm going to focus on breakouts because that's sort of my favorite style of trading. So let's talk about breakouts. So Kevin talked about systems and so on, and I think the system reference and the volume talk. So the main thing to remember is that you need to know your entry conditions, you need to know your exit conditions, and you need to know your trade sizing conditions. So before you put on a trade, you need to know, where do I get in, where do I get out, and how much do I buy and sell? So it sounds obvious, but when you're trying to do it in real time, it gets a little hectic. So in terms of entries, we're going to talk about breakouts. So it could be channels, it could be bands, it could be support and resistance, anything you want. In terms of trend following, we're going to use adaptive trailing stops. Now, what this means is that you don't know when the trend is going to end. So you're just going to use a trailing stop, and you're going to wait for the market to come back down and take you out, which means you're not going to get the exact top or the exact bottom, but you will be in the trade for the duration of the trend. So that's the important philosophy here. And then you could have a counter trend exit, which is like a profit target or a time stop. And if you heard the talks earlier in the week, a lot of people will use that in terms of either a dollar target or a price level. And a time stop would, of course, be, for example, in the options, you're buying it, whatever, 3 days before and selling it, a day later and so on. So in general, you could use all three, but I will just essentially refer to trailing stops because I think you'll see why that makes sense in a minute. Okay, so in terms of a block diagram, like schematically, what are we trying to do? We'll have an entry condition. There's a breakout of some kind. And then we'll have a confirmation, and we'll use two indicators here, both of which are in MetaStock. There's the Arun indicator and the Chande trend meter, which is in the packet. I'll discuss that in a second. And then we'll have an adaptive trend following volatility-based exit. So schematically, once you're in the trade, that is, you have an entry and you have confirmation and you're in the trade, then you don't really worry about these two blocks anymore, and you only worry about the exit. So in terms of if you're trying to do it in a day, it makes life easier if you can use the same mechanical process. So you have a breakout, you have confirmation, you're in the trade. Now you can block out all of that and then just focus on, well, where do I get out? So schematically, that's what the basic template we want to use over and over again. So let's look at a chart. This is a 1 minute chart of the E-mini S&P 500. In the upper panel, we have the Arun indicator. In the lower panel, I have the prices, and I put a simple 20-bar channel, which is sort of a default value. But you could use bands, you could use, or any way to generate a price level. And here, for example, we'll just focus on this particular trade just to show you how the elements fit together. So we had a downside breakout because prices fell below the lower channel. And you see the red line here, Arun was at 100. So normally, if you plot the default parameters, you'll see lines at 70 and 30, but I've just set one at 100 because for the purpose of this discussion, we just want to know, yes, there's a breakout, and it just confirms it. And then not every breakout has momentum, so we want to look for momentum. So the next chart, have in the lower panel, we still have the same prices as the previous chart. But here I've plotted the Chande trend meter, and I'll just to give you a quick summary, it's a combination of many different indicators. So for example, in the previous talk, they basically had one indicator, but you can imagine, and before that, they had volume as a primary driver. But imagine if you could have volume, not volume, just different type time intervals, different types of momentum measures, different type of breakout measures, patterns. And I could show you, I could plot 10 different things on the chart, which would be useless and too busy. So I've combined all those things into a single number, and I've deliberately plotted it on an RSI-like scale of 0 to 100. So it might look like the RSI, but it's not the RSI. And here I've drawn two lines at 80 and 20, and then 90 and 10. So when you have strong downtrends, the values drop below 20. When you have a strong uptrend, it goes above 80. So in terms of combining all these multiple possibilities of indicators, nothing can be simpler if you can boil it down to just one thing to look at. So you just look at this one thing. It's very intuitive. At this point, when it drops below 20, you know that there's a lot of momentum behind the move. And of course, we have confirmation that we have a breakout because it fell below the lower channel. So we have a breakout and we have momentum. So at this point, we're satisfied the entry condition. And you can enter at the open or below the low, or as your individual preference, or you can wait a couple of bars to confirm. So that's up to you. And now, once we have entered the trade, all we care about is where do we get out. So in this case, we've plotted the volatility-based indicator. So what it does is it takes the lowest low and it's adding a fixed multiple of the volatility, some measure of volatility. So these are these purple dots. So you see that when the trend accelerates, the purple dots accelerate and move. When the trend is flat, the dots are flat. So this is an indicator or an exit I invented decades ago. And in this case, you say you went short here or somewhere in this area. Now you just keep following the purple dots till you get stopped out over there. Now we're still on the E-mini, we're still on the 1 minute time frame. So at this particular point, this has been a trend following trade. It could be a daily chart, it could be a weekly chart. The rules are robust. What I mean by that is that they're market agnostic. There's no market specific information in these indicators. They don't know that they're being applied to the equity markets. And of course, you could have lots of specialty conditions or information about the specialty market. In this particular case, you could use this combination on anything, but We're just applying it to the E-mini. So again, just to put the three pieces together, we have a breakout. We have the Arun indicator at 100 confirming the breakout. Then we have the trend meter below 20 saying there's momentum. So you're in the trade. And then once you're in the trade, you don't really care about these two things. You only care about the trailing stop. Where do I get out? So again, why do you want to use a trailing stop as opposed to a profit target? Over a long period of time, having a trailing stop is more profitable than a profit target. But I'll show you why your choice depends on how you want to configure your system. Okay, so let's just sort of step back and say, if you're trading in real time and short term, there's sensory overload. There's just so many things happening. So it's easier to make a decision if you use a consistent approach. So simpler the approach, fewer the distractions. And we have tools that provide visual confirmation. That is, you can just, what I'm showing you here is a full trade. But imagine you're here, you're seeing one bar, then you see the next bar and the next bar. So at some point, you're going to decide to put the trade in. So, you're not seeing the entire picture. You're just seeing it one bar at a time. So it's very important to have sort of, you've got visual confirmation, tick, tick, you're in. Now you just wait for the trailing stop. Life is easy. Okay. I think Kevin referred to this, but I'll just reinforce it. If you just, if you look at MetaStock, there are like a zillion million things you can measure, but we're only going to measure two things or three things. One is the percentage winning trade. So this is very easy to understand. If you make 10 trades, how many did you make money on? Is it 5? Is it 3? Is it 6? And we want to maximize this. Whether you're a real-time trader or a designer or a system designer, you want to maximize this number. And then I call this the win-loss ratio. This is basically the ratio of the average winning trade divided by the average losing trade. And MetaStock does that for you. Essentially, you take the total gross profit and all your winning trades and divide by the number of winning trades. So you get this number. Then you take your gross loss in all your trades and divide by the number of losing trades to get this number. And you take the ratio to get win-loss ratio. So if the math won't lie. So let's look at the next step. If your percentage trades are 80%, this is your break-even win-loss ratio. So if you look at a long period of time, 1,000 trades, 10,000 trades, what should be your win-loss ratio to guarantee that you will be profitable at the end of that period? And you can calculate this on a rolling basis, obviously. I know somebody that has 87% winning trades, and the win-loss ratio is about 2.6. So imagine that this is about 10 times this value. So you're guaranteed to be profitable over a long period of time. And this trader has been doing it for 40 years. If you can do 87% and 2.6 for 40 years, you're going to be very happy at the end of it. Most trend following strategies on daily data are somewhere over here. They have about 50% profitable trades. And you want to be well greater than 1. So they're typically around 2 or 3. So you know that they're going to be profitable over a long period of time. And if only about a third of your trades are profitable, then you need a win-loss ratio of more than 2. So even if you don't take anything away from the stock, remember this slide. This slide is very, very, very important, because if you want to be successful as a trader over a long period of time, we're not talking of 5 trades or 10 trades, we're talking of 10 years and 10,000 trades, then you have to know what is your percentage of winning trades and what's your win-loss ratio. Those two things control the math of whether you'll be profitable or not. So, we can talk of psychology, we can talk of this, we can talk of that, but it just boils down to these two things. So just, even if you don't remember anything from this talk, make sure you remember this slide. And, most trend followers are here. Even Warren Buffett is around 50%, but his win-loss ratio is probably like 50 or 100. So obviously you can't compete with that. But if you can do 2 or 3, or if you're around here and you do 2, you'll be very happy. All right, back to the charts. And again, we are still schematic here. We are on a 5-minute chart for the E-mini, and I'm going to put the trend meter back on the upper panel. And you see that we have this long period of values of the trend meter falling below 20. So that's telling you there is momentum. And if you just look at this chart, you see that the prices are falling rapidly. Value below 20, below 10, prices stabilize a little bit, CTM rises, flat, again, trend picks up, CTM drops below, trend picks up, CTM drops below. So there's a very visceral connection between the value of the trend meter you should expect and what's happening in the market. So, using this one single indicator will really simplify your life because it does a lot of the background work for you, and you don't have to keep track of a lot of indicators. So in terms of the trend following strategy, we're still on a 5-minute chart, but we're going to be powered by having CTM either above 80 or 90 or below 20 or 10. Another chart, this is a 1-minute chart. And again, in the upper panel, we have the trend meter. And again, you see that we have periods when it's below 20, even below 10, so you have a strong downtrend. So let's say that you're looking at this level and you went short here, and clearly there's momentum. So you have a breakout and you have momentum. So you have confirmation you're short. Now, once you're short, you just ignore what's happening up here and you're just following these red dots, which is a trailing stop. And the trailing stop indicator itself is very flexible. You can set the stop wherever you want. Now, the advantage of this approach is that, remember, you're only seeing this one bar at a time. So when the market bounced up after your entry, you may have been tempted to get out because you might have said, oh, I'm going to get stopped out. You can imagine that, oh, they're going to keep going and hit my stop. So let me get out before I get there. Conversely, if you come over here and you say, oh, good, I've made profit, I can get out now. And you see, but you've given up some money, left some money on the table by not following the stop. So to go back to that chart I showed you in terms of your win-loss ratio, by using a time stop or by using a profit target, you're basically restricting your win-loss ratio. And then the whole premium will be on being right. That is the percentage wins. So if you want to take the pressure off the percentage wins number, then you got to have a trend following exit, because then that increases the favorability of having a win-loss ratio that's higher. So it's really like a balloon. You can squeeze one side or the other side. And I'm just suggesting that if you use a trailing stop, it takes the pressure off the percentage wins because you can increase your win-loss ratio. Let's take a little detour and look at the Chande trend meter. The scale is 0 to 100. There's 80 and 20 are the baseline levels. 90 and 10 are the are the favorable levels. If it goes below 90, below 10 or above 90, you got to be in. So let's go back and look at some charts as to reinforce this learning process. This was the CPI report. It came in hot. Market sold off right away. You see that again. This is a 5-minute chart. The trend meter was below 10, so very strong selling. Then people try to get a sense for, is that true? So you came back into neutral, sold off again, the value below 20. So the trend meter, in effect, is giving you a feeling for what is the downside momentum or the upside momentum. And then, for example, here, when the uptrend resumed, you see that the trend meter rose above 90. So you don't have to, again, worry about, okay, I've got to bounce up, I missed the bounce, and it's going to stabilize here for a while before picking up again. So obviously, there's some smoothing built into the indicator, so it's not necessarily picking up this rapid rebound because it's not designed to do that. It's designed to take you into the markets when you have a momentum behind the breakouts. NASDAQ futures, same thing. Say a nice uptrend here. Surely the CTM is above 80 in this case. Again, strong sell-off. CTM below 20. Strong sell-off. CTM below 20, below 10. Strong sell-off. CTM below 20, below 10. Sell-off below 10. So in terms of the trading machinery or the concept, by combining many different indicators into a single indicator, the trend meter is giving you some simplifying your life in terms of allowing you to make rapid decisions. So the CTM uses 25, 50, 75, and 100 bar calculations. I have other talks on the MetaStock channel, if you will, where I've discussed this in great detail. So I'll just touch on it briefly here. It combines many different things like returns, channels, and patterns. About 70% of the weight is for trend persistence and 30% for breakout flags. So the reason this weighting is important is, again, going back to using a trend following exit, we want to increase our win-loss ratio. So we can increase our win-loss ratio by not just giving us the initial persistence, okay, you have initial momentum, but also confirming that the momentum is for a while. So for example, here, the green line is the 25-bar RSI, and the purple dots are the 50-day RSI, and the blue lines are the 70-30 thresholds. So you can see for long periods, it just doesn't really rise above the 70 level easily, whereas the CTM will get you a signal a lot faster than the equivalent RSI. Obviously, if you go to a 5-day RSI, you'll get a different thing, but that's a different different issue. Also here, I have a counter trend system here, which I'll discuss in a few minutes. But I want to point out was there's this ribbon over here, which comes with the expert system that's attached to the counter trend system, and you can use that as a sort of a general picture in terms of the market bias. So if you come into the market and you know there's an uptrend, you can be biased towards going long, and vice versa. So here I want to spend the next few slides just talking about the volatility stops. So some of you probably are already familiar with it, but if you're not, this just gives you a chance to review. And I'm doing it on the daily data using Meta, which has had a great trend, as I'm sure we all know. So this is sort of a 100-bar channel. We're going to break out, and then you see that the CTM was very strong during this breakout. So again, just to confirm, now you have to remember two things. First is that when you have a strong uptrend, you never get a value below 20. When you have a strong downtrend, you never get a value above 80. So the idea is that the mere fact that you're at there or there automatically should tell you we have an uptrend or downtrend. There's no ambiguity about where the trend is heading. And then the volatility stop can be tight or it can be loose. So here I have a 6x versus 8x. So the red dots are 8x and the purple dots are 6x. So you see the 6x dots are closer to the price channel, and the red dots are further away from the price channel. So in a way, you can say that this is like the Supertrend indicator. I mean, if it goes above something, you're long, and you're going above this trailing stop. So that tells you that you're long, then hit the trailing stop, you can flip. But you as an individual, and again, in a goal to maximize the win-loss ratio, can set this number to anything. It can be, say, 4x or 5x or 10x. But if it's too tight, like 1x, or too wide, like 20x, it won't make sense. So some number like, say, 5 or 4 to 12 or 4 to 10 is probably a reasonable number. But this is just to give you a calibration. So how does that work? When you put it on, you'll see you have to pick a period for the channel. I picked 100 for convenience, but it could be 20. And the trailing stop multiplier is set up for a default of 6. So you get the upper channel minus 6 delta and the lower channel plus 6 delta, where delta is some measure of volatility. And so the idea we're using here is that we have a way to get out, where's the way to exit, but we want to stay with the trend as long as possible. But as we saw with this, we're not going to get the exact high of the move. We just want to catch the bulk of the move itself. So just to reinforce the learning, this is the daily chart of NVIDIA. We have the 100-bar channel, and then I can put the green dots, which are the 100 minus 6 delta. So that tells you where that is lining up. The important thing to remember is that when the price accelerates, the stop accelerates. So it adapts. And also the fact that when you're in a trading range, the volatility will increase, so the stop will be further away. And you can see when the volatility is low, the stop is closer. So in a way, it solves the problem of where should I put the stop. So again, makes life easier. I've just plotted the purple dots here to show you that that's the short trade trailing stop. And again, that works the same way, but here to add the 6 delta to the lower channel to get this exit stop. Back to the very short-term trading charts. We got NVIDIA 1 minute. And again, we have, I think this was a 100-bar channel again. We got knocked out, we went short, and look where the stops are. So you might have got stopped out here. You have to go back, you might have got short again. Now follow the thing, comes out over here. So remember, we didn't get the exact low of the move. We didn't get that particular low because we don't know where it's going to be. But once you're in the trade, all you got to do is watch one thing. Where's my stop? So it's so much easier to trade if you only have to look at one or two things to follow this thing in real time, because it's moving really fast. 5-minute chart of the NASDAQ. This time we're just using a 20-bar channel, but again, it can be Bollinger Bands. It can be, say, ATR-driven bands. It can be any type. It could be a price level. It could be support and resistance. Anything you want. Anything that you can use as a breakout. Again, here, imagine that you're, say you went long here, CTM above 90. You got the first breakout. Now we got a breakout here, but just a short move. So part of the challenge of trading with a trailing stop is that you don't know how long the move is going to last. So for example, here we got a breakout, but the value is not quite 80. So you didn't get in, and you see there's a lot of chopping going on. But here the value is above 90, but we didn't get much of a follow through. Here the value is above 90, and we got a nice follow through, and the trailing stop would have allowed you to capture the first move up, a little pullback, and then up again. So obviously it's not going to work perfectly every time, but the idea is that if you do it over and over and over again, then again we're trying to raise our win-loss ratio. Using a trailing stop will help you increase your win-loss ratio. If you use a fixed target, for example, you had say you had a particular target, so you might have exited here and left some money on the table because you didn't allow it to go through. Then you can argue, well, I got out here, but you would have gotten out there anyway. So the idea is not so much on a single trade or a trade by trade. You're talking of a long period of time, and you want to increase the odds of increasing your win-loss ratio over a long period of time, because every now and then you're going to get these great moves. And as you saw on the system test that Kevin did, ASML was huge. Why was it huge? We don't know. But because you had it, your overall results improved. So this is the same idea. We want to have a strong move, and when the strong move comes with it, we don't know when it's going to be. Example of the flip side, the downtrends. Again, NASDAQ, 5 minutes. Strong downtrend, CTM below 20. You see we have a strong downtrend. Using purple dots, these are at 6x, so they're a little bit further out. So it came back up, but we didn't get stopped out. So you need to have the discipline to stick with it. Downtrend resumes, but not much momentum. Again, little consolidation. CTM rises above 20, but we don't get stopped out. Then we have one more leg down, and eventually we get stopped out. So where you set the stop and your stop discipline is very important, because ultimately, again, remember, we're trying to think of trading for a long period of time. We're trying to manage the win-loss ratio, and the longer we stay in the trade, the better it is when you think of hundreds and thousands of trades. So 1 minute chart, again, same pattern. It's below 80. We have a downtrend. We get stopped out. Below 80, strong downtrend, no doubt about it. Follow the stop, and you'll get stopped out eventually. Again, see, we didn't get the exact low of the move, but we got out, not too far away from the exact low of the move, only 3 bars away, so not bad. And again, the same consistent logic every time. We're using a simple 20-bar channel, so there's no doubt we have a breakout. We have CTM below 20. There's no doubt there's momentum. At this point, if you're serious, you got to be in. So we're just trying to simplify the decision process, but there's a lot of complexity in the CTM, which we are all hiding and underneath the hood, because we don't really need to know the exact details, and we just want to understand how it works. Again, remember that these are the rules themselves are agnostic. They don't really care what market they're being applied to. So this is an example of this, a daily chart of SOXL, SOXL, which is a very volatile but tremendous volume. It's sort of based on the SOXX index, and with all the NVIDIA and AMD and all the chip stocks and Micron doing well, the SOXL index has enormous volume. It's a very convenient thing to trade. But again, remember, we can use the same logic, but you see it's very volatile. But in general, when you have an uptrend, you'll have the CTM above 90. Back to a 1 minute chart of the S&P. Again, the same idea. We get a breakout, confirmation, trailing stop, we get stopped out. Downside, you could use, this should be purple dots, but I haven't replotted it. And you'd get, you'd have a strong downtrend, you can get stopped out somewhere over there. So the same rules, the rules themselves don't care about what time frame you're applying them to. We're just trying to show you the comfort factor that yes, you can use them on any market, any time frame, and we're just applying them or showing him how they could be applied to a very short time frame. Same logic again. S&P 1 minute CTM below 20, strong downtrend. Sure enough, markets falling. Red stop will take you out. But sometimes you can get a strong downtrend, but not much of a follow through. So you see, you get this chop in the market. But that's just how trading is. Not every single trade is going to go, super fast. And here I've shown you 4x dots. So if the market's choppy, you can use a 4x stop. It'll get you out sooner. But just because you have momentum doesn't mean there's going to be follow through. So there's this additional requirement that we have. Of course, on a day like this, a profit target is perfect. But then when it trends, the profit target will take you out sooner. So that's the basic trade-off. And I just want you to understand that there are situations where one seems better, there are situations where the other seems better. But you really have to think long-term because you want to increase the percentage wins, you want to increase your win-loss ratio. And you're trying to find the combination that you can comfortably trade that will both maximize your percentage wins and maximize your win-loss ratio. And that's how you will be successful over the long term. Again, same thing, 1 minute chart, very strong downtrend. Clearly, we got a break, got stopped out. A shallow downtrend, with momentum, got stopped out. So the market will sometimes just chop around, and you can see that we got a few breakouts here, but there was no momentum. So there's also a value to using a momentum filter. Just avoids taking some trades that you don't have to. So that's part of the charm. Like for example, here, there's a downtrend, and then you got stopped out, and then maybe a brief penetration here, but no confirmation. We got a first breakdown here, confirmation. You could be short here, and then follow it through. Now you have a relatively long period with essentially a downward bias in the market. But again, you see that the problem here is that the market is sort of going a stair step down. So obviously the strategy will not work great if you have a stair step down, because it's basically taking a short hike down, then flattening out, stop, flattening out. So again, stop discipline is very important, because you see that the stair step stop will accelerate when it's going down rapidly and go sideways. So again, this is a 4x default stop, but you can see that you really have to be patient and wait for the market to come back and take you out. And if you're doing this and you're saying, should I be short? You just have to look up here at the CTM, because you'll see that, yes, the market is pushing lower with some momentum, but then it's always going sideways and chopping around. So again, when you do this over and over, you're going to see some days that look like this. And then you still have the stop discipline to stay short, and then you can look to the CTM for encouragement. This is the opposite side, strong uptrend, CTM over 90, again same 20-bar channel 4x exit, and you see then it just went sideways, and eventually you'd get stopped out, and then you got a little breakout here, possibly a losing trade there, and then again you got a breakout here, but no real momentum confirmation, so you'll have to sit it out. Again, very strong uptrend here. You see that the market kind of goes up very nicely. You could be in here at the very beginning, and then you're out somewhere over here. This is a daily chart. So clearly, even with the strategy, you could be here for several months at a time. So that just, again, the point is that that's the whole purpose of a trend following strategy. We don't know where the ultimate high is going to be. And all this chopping around didn't really affect where we got out. And similarly, we'd follow the trend and just have to sit through this volatility, because eventually you might get stopped out, but maybe the trend will continue as it did over here. So philosophically, the difficult part of using a trailing stop is you have to wait for the market to take you out. And that sometimes is not a pleasant experience, because the trade is moving against you. And then you tend to second guess and say, gee, I knew it was going against me. I could have gotten out 10 minutes ago or whatever. Again, the idea here is not that we are looking for perfection. We're looking over a long period of time. We're trying to maximize the percentage wins and maximize the win-loss ratio. And so you have to be patient and let the system do its thing. Back to a 5-minute chart, strong breakout. You see again, CTM well above 90, and then we have a trailing stop, get you out. only 3 bars, from the high of the move. So for a mechanical system, it doesn't get any better. And a little bit of a sell-off, but didn't quite get momentum. So it saves you a trade potentially. So again, it's just a matter of thinking about it and thinking in terms of what's like here. This is a 6x stop. A 4x stop might have gotten stopped out there. So it's a matter of finding the balance that you can live with, and only you can decide what makes sense for you. Just a couple of other charts to show you that the technology doesn't really care. This is a 5-minute crude oil chart, and the downtrend, confirmation, trailing stop, you get knocked out. So a little bit of an uptrend here, and then on the right you see that the CTM is above 80, so you could potentially be long with a trailing stop. So again, the logic doesn't really know what you're applying it to, and it doesn't know the time frame, but it's just designed to keep you on the right side of the market, so you're not counter trend. You're long when it's going higher, you're short when it's going lower, and then once you're in, you're just using a trailing stop because you don't know where the lows are going to be or the highs are going to be. And it's really difficult to do. It's very easy to look at the chart and say, gee, I can do it, but it's not. It takes a lot of patience and commitment to say that I'm going to do this over and over again in this particular way. And you don't have that immediate satisfaction of holding the trade for 2 days. The 1-minute chart in the crude oil, again, you can see that definitely momentum, stepping higher. So then you just keep waiting for it to come back and take you out. This is a 10-year note. So trade this market a lot. Tremendous volume, execution is never a problem. Strong downtrend, trailing stop takes you out. So there's not much amplitude in the bond market. They do 20 ticks. Everybody's sweating. So this is an example of actually applying it. With some decent downward momentum. We're back to the E-mini. We are back to the 1-minute chart. Same logic here. You see that there's definitely an upward bias on the market. A breakout, we're in, you get stopped out, breakout again, and then you get stopped out there. And then you can see here, this is again what I want to point out here. See, we're getting these very wide swings. So typically, if Jay Powell is giving his news conference, you get these big swings in the market. So you see that the CTM is keeping you out of trouble by generally not allowing you to take too many trades. So there's a value to having a filter. So this whole question of, okay, there's a breakout, should I take it? This filter, should I use it? And obviously, I can use situations where without a filter, you'd have done better. This is a situation where with the filter, you'd have done better. So again, we're thinking long term. We're trying to say that if you have a lot of, if you have lots and lots of opportunities to trade over and over and over again, then that's how we'll do it. Another example, again, a breakout on the S&E mini. We're using a 1-minute chart, breakout, nice, follow through, trend is higher, just using a trailing stop. Again, a little bit of a breakdown here, but no real, no real breakout here. And then CTM above 80. Now, the reason I showed this chart is this is a very shallow trend, right? We've got a momentum, but it doesn't quite break above 90, and this kind of a shallow uptrend. So again, a wide stop will keep you in the process, keep you going. Okay, I have some time. Again, this is a 3x vol exit. The reason I showed you that is this is a very tight exit. And you see that if you have a good trend, it'll work on a 1-minute chart. But then when you get chopping around, you see you get chopped out right away. So what's the advantage of having a very short time frame and a very tight stop? The answer is that combination doesn't always work because it can always reverse very quickly. And a 3x would be almost too tight for practical purposes. The 5-minute chart, again, sharp sell-off or a 4x exit, 4x vol. And you can see that here we have downside momentum, but no real follow through. So then a stop will help you to get you out. But here we have a sell-off, good momentum, well below 90, follow through, you get stopped out again. So again, it's just a matter of thinking about all the different ways the market can trade on any given day. This is a good one, the NVIDIA effect. When NVIDIA reported strong earnings, the whole market rose with it. And you can see that, the very strong uptrend, well above 90. So you could have traded the NASDAQ 5 minutes and, just use the trailing stops as you go along. So sometimes when I talk about an event-driven market, certainly, the week before, it was all about NVIDIA's earnings. When they came out, there's a sigh of relief, everything rallied, and sure enough, you know it's coming. So as soon as you get the report, you don't need the breakout to be confirmed. And again, I want to show you here. I can't see it too clearly. There's a little dip here. There's a big initial reversal, so you could have got stopped out. So, and of course, after hours, there's not maybe as much volume, so you got to be a little careful. Let's see. I'm going to skip ahead a little bit to the 5-minute again sell-off. This is a good thing to look at: a 5-minute strong sell-off, but a very quick one, you get stopped out. So the same terminology and technology over and over again. I just want to kind of get you comfortable. So if you want to use it, you see that it should make sense in a particular way. And then this is the PCE report, same thing, event-driven. Market was waiting all week. As soon as it came in, met expectations. You knew that if it met expectation, you know there's going to be a rally. So you almost certainly miss the first bar unless you put a trailing stop, unless you put a stop entry here. I mean a stop order to get in here. But even if you got in on the next bar, you could still have followed the trend up, and you would have captured some of it, and then a reversal to get you out. So sometimes the event-driven markets can give you opportunities, but it's really hard to get in on the first bar unless you already have a pre-placed order. So if you're expecting an event like an earnings, then you really have to get ahead of the market and put a stop, so you know that if you. But of course, there's always a risk that you could be stopped in and it could have reversed. So that's a possibility. So then there may be safety in just waiting and saying, okay, I'm going to puke the first bar and get it on the next bar. So for example, you could have put a stop above the high of this bar, assuming that it wouldn't go higher if it didn't want to go higher. So which means that there's confirmation the trend was going to continue. This AMD, again, a strong breakout yesterday. So again, this would be an example of where you knew this level, you knew that was going to break out at some point. You can pre-place your order or get ready for it. And you see that, you probably had to puke the first bar. Even if you didn't get the first few bars, you could still have gotten in, say, here and, taken advantage of the strong trend. So again, this depends on what you want to trade and how you want to trade it. Okay, so that sort of helps me wrap up the trend following portion of the thing. I also have a counter trend system. So a counter trend system essentially buys weakness, and I have a very consistent way to do it. I have other talks on it. I'm just going to use it very briefly here to just give you a flavor for it. It can be applied across any time frame. So this is a monthly chart. You see that the market was down, and you bought it here on a show of strength after the weakness, and then you use a trailing stop. Same thing here. Then this is because COVID. You got sold, you got in and went up. This is a weekly chart. This is the COVID sell-off entry, trailing stop. Got out near a high. Daily chart, again, same thing. You're buying weakness, buying weakness, buying weakness. Now, it's very important to remember that for the strategy, you have to, whatever time frame you're on, you got to have really good stop control. So, for example, here it went in, but then the market reversed or kept going lower. So then you have to have a stop to be stopped out. So obviously, what the strategy needs is something like this, where you get an entry and then the market follows through, and you can use a trailing stop to get out. And again, we're using a trailing stop just so that over a long period of time, we'll have a higher win-loss ratio. There's a 4-hour chart. Same thing, we're going to break out here and a reversal. So stop discipline is important. Breakout, reversal, stop discipline is important. Then a breakout and a very nice rally, and you could catch it there. Same thing, 1 minute. What's the difference between those two charts? Maybe nothing. Again, you're going to signal, trailing stop gets you out, but then you're going to have consolidation. So the main problem, so we have this very nice sell-off, we buy strength, a little bit of rebound, and then we don't know exactly where it's going to go, and you have a trailing stop. So the main challenge, and remember, this is a 1 minute time frame. The main challenge with a counter trend strategy is that you don't know if the trend has really exhausted itself. So the previous downtrend can resume. So the only way to be sure that you can protect yourself is to have very tight trailing stops, and that's why these red dots are important. And so the biggest risk with the strategy is that you could be in this kind of a range where you can have 3, 4, 5, 6 losing trades, and then you were relying on having this one big trade to help you make money. And this tests beautifully. If you test it on daily data on, say, Apple, you'd be quite pleased with the result over 10, 14-year period. I call it a swing system. This is, again, you can combine that with, the reason I plotted the CTM here is that I want you to see that, look at this trade here, where it broke out and reversed, so you got stopped out. It broke out, reversed, but didn't stop you out, but then it had followed through and the trend became very strong. So then this is where you win with this strategy. That is, you have the initial breakout, maybe a little bit of a pullback, but then the uptrend resumes and becomes very strong. And that's when you really make your win-loss ratio attractive over a long period, is when you get this kind of a move. You buy weakness and then the market follows through on the rebound and gives you a very nice swing trade. And of course, as I've said before, the biggest risk with this strategy is that you'll be early into a potential rebound. And so you have to have very good risk control for this thing to work. This is a 5-minute chart for E-mini. Again, downtrend, we got a bounce up, we buy the bounce up. You see, again, the same behavior. The CTM strengthens, eventually becomes an uptrend. And so, you're going to make money on this because you bought near a low, and now you just have a trading stop. It take you out wherever you want to, wherever it goes. Now, again, this is a strategy. In this strategy, there's a temptation to use a profit target. But again, the same logic, and in many ways, you'll have trades where the profit target works great. So this is another option for you, where you could say, okay, I'm going to use profit target and a trailing stop. So again, it's a matter of how you want to set up the test and so forth. Sorry. Now, I'll sort of end with this one. The reason I want to touch this one again, this is a daily chart, but you see that when you apply this expert system, there's a rather expert advisor. It also puts this ribbon down below, and the ribbon is a real handy reference on what's happening to the overall trend. So for example, here you see there was a downtrend, briefly up, then weak or down, then there's a downtrend here, weak or down, and of course there's a strong uptrend here, tell you strong up, strong uptrend here, strong up. So in terms of planning your trading strategy for the day, like you're getting ready for the day, what should be your bias? Is there a bias for the trading day? Assuming that there's no report or no economic data expected, then you can use this ribbon down here to give you a general sense of what to expect. Of course, the market will do what the market wants to do, but just in terms of gearing up for the day, it gives you a chance to think about how you want to prepare for the day. So again, the same logic, whether using quarterly data, monthly data, or 1-minute data, these are robust rules. Kevin talked about this. Robust means that there's no market-specific information in these rules. We're using the same thing mechanically, and can be used on any instrument and time interval. So it's very, very important to understand that we don't have any market-specific information. So Jeff, this is a chart just for you. So this is not related to my talk. We're just having a little fun here. We're almost at the end of the day here. I did a comparison for you between the RMO and the CTM. So the red line is the CTM, the green line is the RMO. And I just put them on the E-mini futures contract. And I know you're a fan of RMO, and I was just looking at it myself, and I realized that there was like a very strong correlation, especially at the key turning points. And the main difference is that the CTM is on a fixed scale, so it goes from 0 to 100. The RMO is on an open scale, so it can go to any value, high or low, positive or negative. But so in many ways, being on a fixed scale, when you get a strong breakout, you see it's easier to spot that with the CTM because it rises above 90. So strong move up here, CTM above 90. You don't have to have any doubts that other than the risk for reversal, there's no doubt that there is momentum in the market. Because obviously, if you look at any particular day here, you're looking back over, say, 100 days or 100 bars to give you a snapshot value. And of course, you can use the CTM for scans and so forth. So Jeff, just a little fun for you. Summarize, the package has sort of the trend meter, which is the primary tool for answering the question, is this object trending? Is it trending? Just tell me, is it trending? So that's the answer for the trend meter. And then there are 3 systems. There's a long-term system, and there are 2 shorter-term systems. There's a volatility breakout system, sort of like if you watched the options talk yesterday, she was selling the gap down, this buys the gap up. So sort of the converse of what the strategy she was using. And then of course, they have different type of exits. So you can use them as constructed, or you can break them apart. For example, you can use the trend meter with a delayed exit, or the trend meter with a volatility exit, that I showed you for all the different charts. So really interesting system. The trend meter is really the best measure of trend strength available in the public. It's very comprehensive, multi-time period, multi-indicator, but it's very simple to use, and it's apples to apples. So when it's 100 on this instrument, it means the same thing that is 100 on any other instrument. So you can compare anything from one exchange to another exchange, or from one type of equity to another type of equity. And the systems are very cut and dried, very rule-driven. They're algorithmic, so you don't really need any trading. You just apply the rules. And overall, this is an important thing to remember. Again, we're trying to affect our win-loss ratio. So we're using top scola, take our profit slowly, and cut off losses at once. So this is the basic trend following philosophy. All right. With that, I'm going to end. Please look at the packet. It's very easy. It's powerful. It's clear. You can use it on any exchange, and it's very easy and easy to use.
Tushar, before you. Audience, Joseph. Oh, a couple of questions coming in. Just to know, can this be used to trade Dow cash market and forex?
Oh, anything. You can use anything with it. Absolutely.
Is there things that require volume data? Like, can it be used on stuff that doesn't?
No, I mean, I know this. I don't. Okay, I'm not a fan of volume. I don't use volume in any of my trading because, of course, we saw this huge presentation just earlier today, like a little while ago, where there's so much emphasis on volume. I came from my background is primarily in the futures markets, where the volume was not a driving function, and I think that we are trading price, not volume. So I personally don't use volume, but of course, the talk before shows that volume does have information, and of course, you're welcome to use it.
Kenneth asks, Chande, I don't believe you mentioned your stochastic RSI. Would this fit well with the strategies you talked about today?
Yes. Just there are only so many things I can refer to, but yes. So for those who don't know, stochastic is a bad label. Stochastic is basically a range location oscillator. So if it's at the top, if you look at say a 10-day interval and something is at the top of the range, then you get a stochastic value of 100. If it's at the bottom, it's at say 0. So I use that same logic to apply to the RSI itself. Now the problem with the RSI is that it has very heavy internal smoothing. So it's very difficult to get the RSI above 70. So if you have a 14-day RSI, for example, which is sort of the default value, it's very, very difficult to get the value of the 14-day RSI above 70 or below 30. I mean, whichever way you want to look at it. And if you change the number of days to say 30 or 50 or 100, RSI just flatlines. I mean, there's no way it's ever going to rise above 70. But there's information in there. And the way you can get around that is by using the stochastic RSI, where you're looking at, say, a long-range RSI, a 70, 50, 100-day RSI, and you're saying, is this value near the top of its range or bottom of its range over the last X day? So that's where the stochastic RSI is useful, because it tells you where the RSI is above or where the RSI is at the top of the range or the bottom of the range. And so that tells you, is the momentum to the upside or to the downside. So the stochastic RSI by itself is a fabulous indicator. It's a very great counter trend system idea. You can test a stochastic RSI based system where you're pushing against the market and buying near lows. But again, that's a discussion for another day. And there's all this, there's again the same value you should use, what day of value you should use. But yes, the stochastic RSI will work with this. When you get a breakout to the upside, the stochastic RSI will be 100 or say above 0.8 or 80. And if it's down below, it'll be near 0 or below 0.20. So you'll get essentially the same or similar information. The main difference is that the stochastic uses only one time period, so 14 days or 20 days or whatever, whereas the CTM uses 4 different time frames. It uses many different internal indicators. So if I plotted one below the other, you'll have 10, 15 indicators, on the chart. Like, it's hard to interpret. It's impossible to, make sense of it. So it's easier to combine them all into a single indicator. And then it's just a matter of how you're weighting it. And I've weighted it more towards trend persistence, because ultimately, I think that trend following is a better way to go for the average investor, so that over a long period of time, you can move your win-loss ratio to a higher value.
Perfect. Thank you, Tushar. Really, really do appreciate that. We can talk a little bit more about that, but thank you very much for coming and spending some time.
Thank you for inviting me, and have a great weekend, everybody. Great, great time in the market. So enjoy.
All right. Thank you, Tushar.
Thanks.
All right.
Bye.
And do this. Okay. And I'm going to make me the presenter here, and I'll show my screen. And let me go ahead and move this out of the way. Okay. All right. So Tushar did a really good job. He talked about the methods that he used. The toolkit, Krem asks what kind of training or what kind of information comes in as part of the actual toolkit. And it does come with a very, very extensive user's manual that goes through all of the systems and that kind of stuff. So thank you for your interest in that, Cam. Appreciate that question. As we're kind of talking about, he's got the 3 systems that come included with that. The long-term system, the swing system, and the volatility breakout system. Those are all included as part of it. As part of it, they also have explorations, scans, indicators, system tests, everything that you need to go ahead and implement that. And he does a really, really good job. So normally it's $4.99. Here at the conference, we're going to do a special at $3.99 for it. We are going to give you that money back guarantee where you can try it out for 30 days. If you don't have MetaStock, you need MetaStock to run this. MetaStock has been rated the best software in its price category for 31 years in a row. And you can get that too as a free trial or as an extended trial if you want. We'll also give you the bootcamp training. There's a bootcamp training that we created with it also, Cam, that's included. So go to 800 or give us a call, 800-882-3040. Go to metastock.com/saleschat or visit us online at metastock.com/Chande. So, and with that being said, it's time to do a bit of a prize drawing first. Bobby's getting ready to come over here. Not yet. All right. Now for this will be actually the final prize drawing of the today. And so, but what I want to do is I want to reward somebody that's here in person. So instead of what I've had you do is actually give us a name and pick a number off of my spreadsheet, I'm just going to have you, we're going to do a quick poll. And so what I want to know is the poll that I'm going to have you do is I want to know what type of an order that you place. When you place an order with your brokerage, it's okay if you don't trade, type don't trade, not trading yet. But do you do a market order, a limit order, or something else? Type it in the comments. I'm going to pick somebody that types an answer randomly, and they're going to win a prize. So you might want to be curious. You might be curious as to what that prize is going to be. Buff Dormeier is going to send you a very, very nice looking coffee tumbler and a copy of his books, Investing with Volume Analysis, both at the same time. So Buff Dormeier came in, he talked. The coffee tumbler looked really nice. Actually, he sent me a picture of it, and I'm not going to lie, I was almost the winner. So, but I decided maybe I'll ask him to send me another one instead, and we'll give away the prize as part of it. So, market order, limit order, let us know in the chat. I'm going to actually kind of just pick one of you guys randomly out of YouTube or go to a webinar. So while we do that, MetaStock has been rated #1 31 years in a row. It helps you scan markets, test trading ideas, do forecasting, get real-time alerts, commentary. Pricing starts at $69 a month. If you buy a month, you can get a second and a third month for free. We're going to throw that in. We're going to throw in training. We're going to throw in a white glove installation appointment where they'll sit down and talk you through any questions you've got. $69 a month into 3, that's about $23 a month to try the software that's been rated #1 by the readers of Stocks and Commodities. So you can scan you can scan the QR code there. You can go to metastock.com/conf-promo. You can give us a call at 800-882-3040 or metastock.com/saleschat. So Sinky says, can we have Jake Bernstein again anytime soon? Let's see. I will. I was actually going to have it on my list to invite Jake Bernstein in again. He's a great thing. All right, so lots of questions, lots of answers, lots of different things. Just randomly. I'm going to go with actually Neil. Neil in the comments says, when I'm trading U.S. securities, I do market orders When I do Canadian securities, I do limit orders because of liquidity. So I should throw that up as a thing, just to kind of give you some of the answers. We have market orders, limit orders, always limit orders, limits on entries, limit, market, limit, and sell limit orders. So, and then market orders. So very, very interesting. I think limit order wins in that flash poll. Neil, let me go ahead and kind of make a note of who you are so I can get that really cool coffee tumbler. Let's see. Oops. No. Okay. And very good. Our next guest is our very own Bobby Hiller. I'm going to stand up. It's going to be an awkward transition, but what can you do? Bobby's actually going to kind of talk about the power of Zenith. You know, we talked a few times about how the data with power with MetaStock is an institutional trading strength, and how much news and how much data, how much stuff you can get out of it. They spent $1 billion designing it. It's got 3,000 reporters and 300 different news bureaus. He's going to come in, show you the Zenith toolkit, show you how it works, show you some of the stuff that you have access to with MetaStock real time, and it's all included in the pricing. So to just kind of introduce Bobby a little bit, Bobby has been here for how many years, Bobby? 7 years. He works with a lot of our international partners. He does a lot of presentations as part of that role, and he's a pleasure to work with. So I'm going to sit up, or I'm going to stand up. I'm going to move. Bobby's going to come sit down, and he's actually going to finish out the day. So Bobby, turning it over to you. Thanks, man. All right. See you guys all tomorrow.
All right. Thank you, Jeff. Hello, everyone. Glad to be here today. A big thanks to Jeff. Honestly, he's been doing a great job all week long, doing all these presentations, helping host everyone, bringing everyone through. He honestly does such a fantastic job with this, so we're so glad to have him here. And I'm glad to be able to work for him. Honestly, he's my go-to here, my mentor. So I've really learned a lot from him. And yeah, he got it right. I'm going to be showing you guys Zenith. He gave you guys the quick broadcast, really, the overview of it. And I mean, even as you can just see by looking at the screen right here, there's a lot going on. This is just one simple page inside of Zenith. The retail version of Icon basically is what it is. And they did literally put over $1 billion into the creation of it. So there's no way I'm going to be able to touch on everything that it can cover today. But my goal with you guys here is just to share a lot of the popular features, show you some of the things that you can do in there. And if you think any of this is interesting or might be able to help you with your own trading, I'm going to encourage that you do a trial and you test the platform out for yourself. Dive deeper into some of the features I'm going to be showing you guys today. Don't let yourself get overwhelmed by anything that I'm going to be going through. Again, this is just a demo where I'm going to be showing you guys a bunch of different features and things like that. If you have questions throughout, I will be happy to answer them. Sometimes I forget to look over at this other monitor over here to answer them all timely, but I will definitely be looking at it occasionally, and I'll for sure be able to answer all of your questions before the end of my presentation today. And I can dive in and look at certain pages for you guys if you have specific companies or symbols or things like that that you want to look at throughout the presentation. Don't hesitate to type them into the chat, either GoToWebinar or YouTube. Before I get too deep into things, we do quickly have to go through this disclaimer. I'm sure you've heard it a couple of times already, but this demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or information provided in connection with the company. Jeff did a really fantastic job of kind of introducing me here. But yes, I do work in business development here, and my primary focus is working with all of our international partners. So kind of a unique thing about that I really like about the position is that I'm able to learn from so many people that are in so many different unique situations. So I get to work with a lot of professional traders that understand the markets in different ways. And, you know, I'm hopeful that a lot of that can kind of rub off on me and I can learn different things from them. But one thing, all able to utilize all these different techniques within our platform. And that's something that I love too. So there really is so much to do in there. And there's so many different workflows that you can utilize that might work best for you. One thing I like to touch on, I'm guessing Jeff has probably gone through some of this guy with you guys as well, but I think it's pretty unique. So I always like to mention it. So MetaStock, you know, we've been around for a really long time. We were founded back in 1982. So we've been in the technical analysis software business for over 40 years now. And a lot of people didn't even, you know, have a computer in their home back then. So it's really unique. We were purchased by Reuters back in 1995, and we released our first real-time data feed based on their technology for MetaStock in 2005. And then in 2012, we released MetaStock Zenith, and that's the product I'm mostly going to be kind of talking about and showing you guys today. So it's been around for you know, over a decade now, about 12 years. We did actually divest from Thomson Reuters back in 2013, meaning they no longer own us as a company, but it's still a lot of the same people. A lot of people here at MetaStock have been here for decades. I'm actually one of the newer employees, having been here for only 7 years. And something else that I should mention is now that we're no longer owned by them, we're actually able to move a lot faster. There's less red tape, less levels of management to get through for us to be able to push out updates and things of that nature. So it's been a really positive change. I won't be spending all day today inside of a PowerPoint, don't worry guys, but just to give you some of the big highlights here. You know, so Zenith, the platform we're going to be going through, it's powered by Refinitiv, or actually I should update this slide. They've gone through a lot of name changes. You saw Reuters, Thomson Reuters, Refinitiv. They're now owned by LSEG, the London Stock Exchange Group. So we have pricing data on over 70,000 different globally listed companies, and we have research items, over 40 million research items available inside the platform. So much information in there. There's over like 300,000 symbols, I believe, as well. Here's some of that data here. So yeah, we have, you know, FX is included in this with over 150 different currencies. We have the news package. That's one of the biggest things that Reuters is really known for, is their Reuters news. And so you can imagine that all of that is going to be included in here. Cross-asset data. It's very intuitive. You're going to see as I'm kind of going through things in here. You can do sector and industry analysis. There's a lot of like unique built-in workspaces, and I'll be showing you guys a little bit how you can kind of create your own custom and unique workspaces too. And it's also really easy to kind of just streamline from one computer into another if you need to. All right, so this is my reminder to jump inside of, the software. So I think Jeff was nice enough to get this opened up for me. So I'm going to go ahead and close this down. This can actually be a little confusing with my slideshow behind it, but that's okay here. Let's see. So the first thing I'm going to do with you guys is just kind of show you the home page and do a quick demo. Like I said, my goal here is just to kind of showcase some really unique features in here. The hope is that you'll see something that you think could really benefit you and help you, you know, to make better decisions in your trading and do better analysis, really. And if you like it, then we'll hook you guys up with a trial at the end. I'll give you a link for that. All right, so right here in the search bar, I can pretty much type anything I want in here, and it is extremely intuitive. It'll be able to help populate anything, whether that's a symbol. In my slideshow, that's showing Ford, which if I just typed F, the symbol for that, I can now hit enter and I would open up that same page you see behind, or I could also type in Ford all the way, etc. So that's kind of a unique, easy to follow function there. But what I'm actually going to do is type in home, and what that's going to pull up here. You can see right here it says app. It's going to take me to the home web page app, basically. One way that I like to describe Zenith, if I was trying to explain this platform, kind of how it works or what it does, is I like to compare it to a web browser. It's basically like having access to the World Wide Web, but for everything trading. Everything in here is related to trading, basically, and can help you to make better, wiser decisions, or help provide you with information. And the amount of information in here is so vast. Some of this stuff in here you might be able to find just on the regular web, like some news stories and things, but you're not going to get them generally released as fast as you will through here. And it's also, you can dive so much deeper into everything within here. And there's access to a ton of data that you won't find online. But navigating the platform, it really does feel like kind of like I'm in a web browser. I can open up multiple pages, actually. So let's also open up Ford here, just to kind of give you an example. So you can see it opens up in different tabs like this, and I can kind of put tabs within the different pages and things of that nature and kind of arrange them how I like. That's something I guess I'll touch on a little bit later when I'm showing you the workspaces. But yeah, it works very similar to like a web browser, and that's also why I think it's so intuitive, because when I open up a page like the home page here, I can basically hover over and click on anything, and it's going to bring me more information or dive me deeper into that category. And so let's go ahead and do that. Let's check out what we have here. So on this home page, I have this set up as like with equities being, kind of one of my main asset classes that I monitor. So that's why the equities is kind of in this home bar here, and it has information here. And then it's taking me into additional quick links as well. If I come down a little bit further, you'll see right here, there's politics, policy, and risk. And then I have news stories regarding this. I have commodities here, and then it's highlighting some commodity news stories and information within it right here. There's FX. This one's called front page. And you'll notice there's these little setting icons here where I can click this. It says edit, and it'll allow me to change this. So, maybe I'm not interested in including politics or policy or things like that in my trading analysis, and instead I'm more interested in industry news, technology, media, and telecom. So I'm going to go ahead and click there, and I'm going to hit save. And now instead of having this be like politics news stories on my homepage, it's customized to technology, media, and telecoms. This is another common thing you're going to notice throughout me going through this demonstration is so much of this is customizable. So maybe it's not set up exactly how you might want to have it, but there's a really good chance that you can change it so that it is. And then another great thing about this, and another reason I don't want anyone to get overwhelmed, even though I'm throwing so many features at you today, is we have a fantastic support team. So if you guys end up signing up for like a trial to kind of test things out for yourself, and you want help customizing some of the web pages or help navigating through the platform, we're more than happy to help you out with that. We can do it over the phone. We can do it via live chat. We can do it on email. We can screen share with you and do like a product demo with you. Those are all things that we do on a daily basis to help out our customers. So let's go keep kind of diving through this, and I'll show you guys some more kind of unique features. So I showed you how you can change these headers to kind of customize this homepage to be more interesting for you. And as I mentioned, you can come in here and click on pretty much anything, and it's going to open up into whatever it is that you clicked on. So I clicked on this news story here, and it's giving me the full story here. It's letting me know kind of what symbols or companies are affected by this news story, as you'll see right here. And then I can actually click on this too, and then get more information on that specific symbol and more news related to that specific company. So if I want to get additional information regarding like this security here and the different news behind it, this opened up the News Monitor app. And then something else that I really like in here is, say maybe you don't have time to read all of these stories. Well, in this view here, it's giving you the headline, which kind of lets you know what's going on at just a quick glance. And then it also is giving you market sentiment about it. So just by looking at the symbol right here, I can see it's 75% roughly in the red. And and then about 20% or so in the green. And that lets me know like this is a negative here. And it's giving me a quick market snapshot as well of the Glen.L, the security that I'm looking at in here. But you know, I wasn't specifically trying to look at that company or anything, so I'm just going to click back and go back into my homepage so I can view more stuff here. And then there's a lot of additional things I can access here as well. So those are just, a lot of this is kind of news related here, but this is also an easy way to jump into some different applications within the platform too. So right here under the equity quick links, I can go into the time and sales app. So I'm going to go ahead and just click on that. And this is going to open up the time and sales for, you know, one of the previous looked at symbols when inside of this application. So you can get all sorts of different pricing data within the platform. Zenith is the data feed that powers our MetaStock real-time software. So when you're doing like charting analysis inside of MetaStock real-time, you're using the Zenith data feed here. But this is just an example of the time and sales app. I can come in here and I can change the symbol like we were looking at Ford earlier. So if I wanted to look at the Ford time and sales, I can do that. It lets me know what exchange it was traded on, what the last price was, what the trade price was, the trade volume, best bid, bid size, best ask size, etc. I can kind of full screen this. You see there's even more information in here within this application. I can see, you know, very easily whether it's been going up or down here. Also from within this time and sales app, another really popular feature I know a lot of people utilize is like volume at price. I can go in and I can look at the volume at price within here. I can also calculate the volume weighted average price from within the time and sales app and then get it in a graph formatting here. As well as I can do a chart of volume at price too. So this is giving it to you kind of in a table view here. But if I wanted to get it in like this chart view, I can get it that way as well. You can also look at the money flow and get like the lift or ask and hit bid logs, etc. So again, you guys, I know I'll kind of be doing a feature dump today by showing you guys so many things, but I want to let you know how much is available inside of here so that you can then kind of get into it and play around with it yourself. Okay, and so I see someone ask me, how is news sentiment measured? And off the top of my head, I don't know the exact answer to that, but what I'm going to do is jump back into here. Oh, let's go into a different story. Which one was I in earlier? Let's just go directly into a news monitor, and I'm going to hover over that sentiment link, and I believe it should tell me. So here we go. Let's full size this. I thought, there we go. So by hovering over this, that's another thing. If you ever have a question of what's going on inside the application, there's normally a pretty easy way to access information about it. Oops, I just right-clicked. Let me undo that. So this explains the market sentiment better. And it says sentiment indicators are not intended to interpret the effect a story might have on financial markets, companies, or economies, nor do they or reflect on any bias. Okay, well, that didn't tell us, I guess, exactly what we wanted to see. So if I am remembering correctly, I believe it utilizes like artificial intelligence in order to gauge the story. I know that we also had access to a social media sentiment gauge in the past, and that would basically go through social media and see if people were like Twitter or X, I should say, and it would test to see if sentiment was positive or negative around symbols, and it would be using, like AI to read the different stories, picking up on keywords and things to see if a story is reflecting positively or negatively on that, and then it posts that here. But again, you have to be careful because someone might be talking in a negative manner or something of that nature, but actually have a positive outlet. But I feel like it filters through that pretty well. And I've generally found this personally to be very accurate when going in and reading like the story or something of that nature. So actually, I'm sorry, I don't have a better answer for that. I thought that it used to show you here, and it might in another location, but it is still a very useful feature to have, the market market sentiment. You can also pull this up in other areas too, not just inside of the news application. So if we see it again later, I'll hover over it again later and we'll see if we get a better answer. All right, let's go back to the home page. And just because we are doing a demo here, let me show another way of doing that. So instead of going into the search bar here and typing in home and clicking back, I'm going to go into like the menu here, and you can see it has this list of my apps. So here's a lot of like just the popular apps utilized. This is actually the demo computer, not my personal setup. I guess I should maybe mention that. But again, I have the home app right here, as well as several other recently used applications. So I'm going to go ahead and click into this home app. Sorry, I have an itch on my nose. And all right, we're back to the home page. And so to kind of keep going through some of these just kind of popular applications that are just quick linked from the home page, company overview. So you've actually somewhat seen this before. So this is kind of what I used as my screenshot when we were on Ford. So let's actually go back into that. So I just changed this by putting an F right there. Now this is somewhere where you can spend a lot of time, or honestly, you could even spend just a little bit of time here and receive a lot of information from it. So this is the overview page for a company, which in this case is Ford. And you can see there is a lot of information here, but let's not let that overwhelm us. Let's just kind of take it section by section and see what all we're kind of learning just from this one page alone. So we have a business summary here. Probably a lot of you are familiar with Ford, but this can also be really useful for, you know, some of those other symbols that you may not be as familiar with, some of them that, you know, aren't some of the biggest companies out there. You'll get a brief business summary of it here. We can go down, and again, news is like a really key feature of this because you can get a lot of information from news. So that's going to be on the overview page here too, and it's letting me know stories kind of as they come in and they're updating, and these are like bigger breaking news events and things of that nature. You can also see events, so upcoming events as well as past events. So Ford has cash dividend being paid out on March 4th. You know, there's other information and things here that I can look at, and I can even go in and add these events to my calendar if it's an event that I think, you know, might be affecting price or something of that nature. You can see recent developments. You can get some other things here, like see laws and recent developments, I guess is the best way to put it, things that are coming through for it here. We can also come up and see this is a price performance page. And something else, again, if I wanted to, you know, get more information on this price performance, or this is a section I'm really interested in, you can see it also has a chart that I can easily come in here and change just some common periods if I just want like a general overview of the price. It also has other more in-depth charting services and views that you can go into as well, but it's nice to be able to just get an idea, okay, how has this looked over the last 5 years type of thing. But if I want even more information on this, I'm going to go ahead and click on that header to go into that, and now I'm looking at, you know, price and performance information here, and it's showing me how it's performed intraday over 1 week, 1 month, 3 months, 6 months, etc. I can see the percent and net change, so all really kind of useful information to look at here. I can see the highs and lows. I can see its daily volume and the averages for different ranges here. I can also see the relative change percent, as well as get into more technical kind of indicators and features here too. So this is something I kind of really like. You can get, when you're setting up your own custom monitors and things of that nature too, which I'll show you guys later, but you can also just have like indicators kind of listed throughout your tables too. So this is showing you the RSI values here, the volatility, you can see Bollinger Bands, things like that you can put into your tables. And as I mentioned, and something I'll show you guys later on, you can put these, you can put pretty much any information that you see in a table like this. You can create your own custom monitor, and you can grab basically the RIC or the symbol for that indicator and put it into your monitor, and it'll track that for you. So you can track RSI in a monitor, or Bollinger Bands in a monitor of your security. Something cool. I'll show you guys that later on. And all right, so I'm going to go ahead and hit back. That time I hit back on my mouse, so you didn't see me go up and click this button here, but just to show you, very much like a web browser, really easy to navigate. If you want to click on something, check it out real quick and go back, you can. So that's price performance. There's fundamental data. There's a ton of fundamental information in here. There's also like a fundamental or like an advanced search, so you can search for different fundamental aspects and things of that nature. You also get analyst recommendations, like just the general overview of them. It doesn't give like the super in-depth reports on them, but it lets you know analysts currently 4 rating this as a strong buy, 4 as a buy, 13 are hold, 4 is a sell, 1 is a strong sell. So it's primarily kind of just a hold right now, according to analysts. If I wanted to get more information on that, again, I can click into that and it's going to give me more info here. Lets me know the current rating for the recommendation of those buy, of the strong buy versus strong sell and what's in between. And it also can give you price targets and things of that nature in here as well. You'll also notice that on a lot of pages, you're going to have this symbol right here, which lets you go in and export values and you can put them into Excel. Zenith also links directly within Excel, so you can actually go inside of there and kind of create your own custom pages linked as an app inside of Excel, so you can get live pricing updates in Excel, and then maybe you have your own custom formulas inside of there, providing you with additional information, as well as I mentioned earlier, you can have like your own monitors set up to give you different values and bits of information. Well, you can put that information into Excel too. So it doesn't just have to be like within this platform. You can also do a lot of stuff in Excel, which I know for some people, that can be really important and really useful. Excuse me, I have a tickle in my throat here. So I'm going to go ahead and get a drink and keep going here. Okay. So we're back on our overview page. We've just looked at some of the recommendations. You also have estimates here, environmental, social, and governance, all sorts of different things. Something I really like to look at are these StarMine models. And so StarMine models basically give you like different ratings for different criteria. It can be bullish or bearish. And this overview page is letting me know, the most bullish indicators based on StarMine models, as well as the most bearish or most important ones here. And if I don't know what they are, I can kind of click on this little question mark that pops up. And so this tells me that value momentum, this is ranked on a 1 to 100 percentile rank of the security based on value momentum model. Value signals exploit the tendency of stock prices to exhibit mean reversion. Over and undervalued securities tend to revert to more moderate valuation levels over time, et cetera, et cetera. And also something just to point here, if I'm looking at this value momentum, if this is something that's important to me or that I want to track, et cetera, you'll see right down here, Excel function. So I kind of mentioned before, there's, you can take this and put this into Excel, and then you'll have, and then in that Excel spreadsheet, you can open up different symbols that you want, or however you have this listed out, but then it'll give you this StarMine model inside of there. Some other ones that I guess are easier to understand, credit risk. So I was to click on this one. So this is the percentile rank of a company's 1-year default probability based on the StarMine combined credit risk model. The model blends the structural, smart ratios, and text mining credit risk models into one final estimate of credit risk at the company level. Higher scores indicate companies that are less likely to go bankrupt or default on their debt obligations within the next 1-year period. So stuff like this can actually be really useful too for smaller companies or symbols or things that you're not familiar with, but if you're going to go long on a security or something, you might want to, and you're planning on investing in it long term, you might want to make sure that it's not at risk to go bankrupt in the next year or other things like that. And again, these are just some of the highlighted StarMine models here, but there's much more that you can get into. So if I click on all models here, I can get more information right there. This also gives me a quick list of the different peers that show up. So if I want to look at just the automotive industry in general, or just see kind of how Ford is compared to General Motors, et cetera, really easy to get all that information just right here at a glance. And then there's also just so much more. Again, this is just the overview page. This is not even going that into detail yet. This is just giving you all of this info at a glance. And so something I personally really like to do after I've done a scan inside of MetaStock and done a lot of my technical analysis inside of there, I might take my list of results that I got from there and bring it into here and kind of put it into a monitor or something of that nature, and then I'll check it in here. Because say I got 5 buy signals based off my scans today, but I only want to be getting into like 2 trades a day or something of that nature, then I can, do this quick company overview. I can learn about their credit risk ratios, things like that. I can see how they've been performing historically. I can look at their earnings ratios, things like that to decide which ones I actually want to go into and trade. And with that being said too, I kind of touched on it there. If I'm interested in like their financial information or something of that nature, you can dive deeper into that. So on this overview page, there's a ton of things you can go into here. Like there's also different kind of ways of looking at the overview page, I guess I should say. So I could look at a summary. I could look at click into valuations here. I can get business info, et cetera, et cetera. And then as I go down the line, it's going to give me more information on all these different tab things. I'm pointing with my hand. Got to make sure I'm using my mouse so you guys know what I'm talking about. So I can get more news on it here, either just general news. I can pull it up in the News Monitor app. I can look at it sector news. I can get information on price here. And this is going to show me several different like price and chart applications or things for me to easily dive into. We were talking about like volume weighted average price earlier within the time and sales app. Well, if I just wanted to look at VWAP here, I can do that by clicking on it there. I can also access the time and sales for it here as well. So here's opening up the time and sales app for Ford by just doing it from its company overview page. So if you go into the overview page, it's really easy to get all the information you want on that specific company. Again, like estimates, we looked at some of this stuff before. This is allowing me to dive deeper. One thing I find really interesting is looking at like financial statements for different companies and things like that. A good way to get an overview of it are with those star mine models. But if I, really wanted to dive deeper into this, I can come in and I can look at their income statement. And I can look at it going back several years. I think you have at least 5 years of data in here for these income statements. So I can look at, their total revenue. I believe this is annual in millions of US dollars. So you can see how much total revenue they've had, the cost of that revenue, their gross profit. And then you can dive deeper into all of that too, guys. That's kind of the really unique thing about this. Again, there's a settings icon here that I can click into, and then I can start playing with a lot of that here too. Looks like I can even load more periods here, or I can do like a show all here. So let me update this and see if it gives me more. So yeah, you can get further history by kind of going into it that way. And then you can also look at like a balance sheet, or look at their cash flow, or see their major customers, or look at the different ratios they have, like their profit, value, risk, et cetera. All that's really accessible. You can get all sorts of different financial and fundamental data inside of here. There's also events. So if you want to look at corporate events that are coming up, or big, as you see here, like company deals or transactions that they've done, or look at their corporate actions or things of that nature, you can dive into that as well. If I come over to ownership, you can look at the shareholders report. You can look at an ownership summary. You can see the fund ownership summary. So knowing like which funds are holding on to this security, et cetera. So the normal investor type for this. So this kind of gives you a graph of that here and a breakdown of it and how all that works. So really unique information here, guys. You can use this to dive as deep into some things as you can possibly think of. You can also look at their debt structure, peers, etc. And then also derivatives information. So this is not just for companies or navigating equities, things like that. You also get FX data. You can look at futures data. You can look at options. So let's go ahead and look at some of that. So here is Here are some options for Ford that I can go into, and I can change, you know, if I want to look at puts or calls, the expiry date, etc. I can kind of change all of that and look at it here. And I can dive deeper into these as well by just kind of clicking into them. Can also come up here, and if I just wanted to type in like options, I can do that, and then it's going to open up like an options application. And from there, I can dive into like certain types of different option things that I want to look at. Another thing you can do to access stuff like this. So if I just typed in Ford and then a space and then options, it's going to automatically populate this for me. It's very intuitive. It'll also give me like the quick code I can put in, or if I wanted to see like the most traded options for it, it gives me that option too. So I'm going to go ahead and click on that. And now you can see it's taking me exactly into what I was looking for without me having to remember, okay, I got to go to the overview page. I have to navigate to derivatives, go into options, click on most watch options. I can just type it into the search bar and it'll figure all that out for me. That's one of my favorite things about this platform, is really just how intuitive it is. You can think of the search bar as basically like Google for trading, but built right inside of the platform for you guys. Okay, yeah, so I'm seeing there's another question, a couple of questions that have come in here. Excuse me, let me grab another drink of water. Does it include short sell info? I believe it does have some data for that. You know, personally, I actually don't work with any of that data myself, so I'm not extremely familiar. But I believe I've had this conversation with people in the past, and they were able to get some information on short sell and listings. So I'm trying to remember the name of some of the applications used for that. That's actually maybe a really good question. I should say this too. So I'm definitely not the expert on all things Zenith. I have my own kind of workflows, and I'm just doing an overview. If you guys have real specific questions that I can't answer, like this one potentially, you can jump into our chat room, and then we have a whole team of actual experts that can determine everything, if not on their own, by working together there, and they can answer those questions for you. So you could come into sales@MetaStock. Or sorry, that's the email, but metastock.com/sales chat, and they would be able to get more specific on some things or some indicators and features that I might not be aware of, because again, there's millions, there's 40 million different research items in here, so I can't remember them all myself, but our chat room will be able to help you out with that, because if one of them doesn't know the answer, they'll just ask somebody else next to them while not doing a live presentation, so forgive me if I don't know all of them. So, all right, let's keep going, guys. So we have derivatives here, we have filings, we have the 360 menu. So the 360 menu is also really useful, kind of like the overview page, a little less clutter, where you can dive into here and then kind of get access to anything you might want. This might actually be a good page for like finding that short sell info. But if you pull this up, it'll kind of let you look at some of the different applications you could easily dive into that are related to Ford. But again, pretty much anything you see here, you can pull up for any company as well. So if you wanted to do like an option pricer or historical return analysis, or if you wanted to get into charting, you can access all of that here as well. So that kind of covers the main like company overview page and how you guys can dive into all of these details. But that's not it. So there's some other things I still want to show you guys. And I'm realizing now I've already spent a lot of time going through that, but that shows you kind of some of the bread and butter of things that you can access. But I want you to know this isn't limited to just companies. You can also come in here and type in countries. So now I can go to a country overview page. So I just put in USA. And so I've clicked on that. And now I'm looking at an overview page for the United States of America. And this is very similar to the company overview page, but obviously it's based around a country, and you can type in pretty much any country that you want, and you'll get the information on it. You can then go in and look at its overview page, as well as get news and events focused in that area, or learn about its markets, whether that be equities or futures or FX. If you wanted them related to the US, you can do that. You can also get central bank information here, as well as debt on a company. You can look at economic events and things here as well. and then can do different country comparisons and things of that nature too. All right. And now, just to make sure I'm not skipping over too many things, I'm going to jump back to the home screen here and show you guys some more really cool features here. Let's see. So again, so I had this page is mostly focused on equities, but we can go in here and look at some other asset classes. So I'm going to jump into like the foreign exchange homepage, and now I can look at different FX rates here. I can see spot charts for them. I can look at the current. This is also showing me other current like top commodities or 10-year government bonds, the top equities, etc. You always have access to news pretty much anywhere that you're going. If you want to look at world crosses, you can click into right here and get access to that. Another app that I really like to use, I'm going to pull it up. I have it saved on my other monitor here, so forgive me while I'm clicking around. Address. I really like this. So this is like an FX heat map. This is kind of like a specialty app for the FX. So you can come in here and like look at a heat map of things, and there's lots of different unique visual charts and graphs and heat maps and things like that that you can access. I know that I wanted to share that one with you guys. Oops. And jumping back into our home page. So there's also money markets, commodities, funds, real estate. If you want to get information on real estate, you can do that too. That's a page I'm often reviewing myself, as well as there's several different news applications and outlets in here for you guys as well. So now what I maybe want to do for the last little bit here is I'm going to continue to show you guys some of the features, but I want to show you what how these different workspaces work inside of here and how you can really start to kind of customize some of this information to best suit you. So to start, all right, so we have the United States here in a tab, this page, and as I mentioned, these are, like you can move these around, these pages, and I'm actually gonna close down my PowerPoint so I don't have it open in the background. Oh, there's actually two PowerPoints open in the background and MetaStock. So we'll get that all closed down so you guys can kind of better see how I'm navigating these workspaces. So I have like the United States here, and then I also have within this window here, I can open up another tab and monitor multiple things in here just by clicking on this new tab here, or by like clicking and dragging something into here, much like you would with a web browser. If I wanted like time and sales open here, I can do that too. And so I have all these saved in a tab, and I can move this around. But then I can also take other pages and dock them to it. So this one here has top news, and I'm going to drag this and connect it to that bar there, as you saw. And now when I click and move on and move this around, these are linked together. So you can open up multiple different applications and link them together to create your own custom workspace. So this is just the home page workspace, as you see up here. I'm not sure what's in these ones, but we're going to click on one anyways. Let's see what they have. So these are other workspaces that are open, and you can easily jump in between them. So I'm not sure what they were looking at on these, but I just wanted to show you guys how easy it is to navigate through these. So you could have like a workspace set up for Forex, and then one for equities and commodities, and easily jump in between them and kind of customize these to show what you want to show. And you can have multiples of these open too. So if you have multiple monitors, you can arrange them on multiple monitors to look at them that way. And I kind of showed you guys earlier, but yeah, you can do things like click the new tab, and then it lets you choose an app to open up to have them be linked together. You can also come inside of here and you can access things in here. And one thing that I wanted to show you guys, where I actually do start a lot of my analysis from, is within the monitor app. So let's get that opened up here. I'm just going to have these open, in the background. So here's a monitor. And what you can do with this monitor is pretty much type in any symbol that you want. So I'm going to put in like Ford. We'll put in Tesla. Enter. You can also put in things like Bitcoin. So that's BTC equals. I just type in BTC and it kind of knows what I'm asking for. So BTC equals, click on that. We have Ethereum. So put in that. If I wanted index, I can put in like the .spx. And then this is really cool too. So just basically, let me actually make this big here. So when you're looking at this, it has basic things like last, percent change, net change, the close price, currency, etc. But what's really unique about this is you can come in and add any of those tens of thousands of other indicators in here as well. So if I actually just click on this, it's going to open up the universal data item picker, and I can save favorites in here. If I wanted, you can see there's so many things, but if I wanted info on activism and defense and things of that nature, I can click into these and further select things. I can get events added into here. You can add indicators, like something as an example. I can put in the Bollinger upper band, and if I wanted to monitor that, and it'll let me monitor that. I can put in 52 weeks high and low range, and I put that in, and now it's showing me the high and low range over the last year in a little chart here. Something else that's unique, so if you do have like an index like this, if I just click this arrow, it's going to populate everything from within that index. So now I'm looking at everything from the S&P right here, the S&P 500, and then I can just keep going and putting in whatever it is that I want to kind of monitor here. And again, there's thousands of different things. And now something that's really cool. All right, so I'm going to make that a little bit smaller. And okay, we were playing around with time and sales and top news here. Well, let's go ahead and connect these together. So I'm just going to make this a little bit smaller. Oops, I made that one too small, and it's letting me know. And let's say I just want to dock this monitor down here on the bottom. All right, and we'll open this back up here. Now, so these are all connected, but it gets better, guys. So kind of what I wanted to show you here is you can come in and connect these on another level where you're linking the pages so that they're looking at basically the same securities within. So if I click this link here and I say I want this one to be purple, and then let's actually open up another application like the News Monitor instead of just general news. So I'm going to open up the News Monitor here and dock it here. And I'm going to make this one purple as well. And then I'm going to come into my monitor and make this purple. Now, you'll remember I put in Ford for this time and sales here, and then this News Monitor. Let's actually close that one and just have this one be here. And then here's one of our News Monitor applications. So I have all of these linked together. Now, if I come in here and I click on Bitcoin, it's going to change everything in the time and sales to Bitcoin. It's going to change my news feed here to show me everything related to Bitcoin. And so there's hundreds of different applications in here that you can go in and add. You can look at quote lines, you can get a sidebar, top news, different sort of calculators and things of that nature, different sort of monitoring things, and just really kind of make this your very own custom and unique page that suits you. It's also really easy to kind of come in here, and if I wanted to create like a certain layout, I can just go into the menu and click layouts and say I wanted to have, 4 panels, a 4-panel template. I can click on this, and it's kind of quickly creating one for me. And now I can say, okay, I want the home page here, time and sales here, a sidebar here, and this calculator here. And now I've really quickly kind of created my own kind of custom layout. And I can go in and edit these additional things that way. So it's very customizable. You can then come in, I could save this, I'm not going to for this one, but you can save them and have multiple different work spaces. Then it's really easy to just kind of click on them here to navigate in between the different spaces. And again, you can have this on multiple monitors too. And this is actually, this has showed up before, but so world crosses on the foreign exchange. This was also open on the workspace, but was minimized. So when I navigate back to the home page workspace, it kept popping up, but I could have this on like another monitor over here. So every time I'm clicking through it, it's changing all of them for me. So I have everything set up just how I want it. So that's one of my favorite things about it too, is just how much you can kind of customize it. We also have a lot of partners, kind of those other actual professional traders, unlike me, that have their own unique workspaces and things like that inside of here. And some of them make their workspaces available to the end user. So you can sometimes follow along with some of that as well. And those are some of my favorite apps in here. Let me kind of look at my sheet that I have here to see if there's anything really big I wanted to show you guys that I missed out on. Because I know there's so much. Every time I do this, I try not to follow a very strict guide because I want to show different things in case people come back and watch some different like Zenith overviews. I want them to be able to notice different things each time. But also, I don't want to miss out on anything too big. So I guess something I haven't shown you guys that, you know, that's very likely you might want to add to like some of your custom workspaces is like one of the charting apps. So we have lots of different types of charts. I come in and open up a chart. So this is going to remember the last thing I was looking at was Bitcoin. So it's opening up this financial chart on Bitcoin. There's multiple different types of charts in here for you to look at. That actually reminds me of one thing I wanted to show you. You can also look at the seasonality. If I can spell it right, and open up a seasonality charting app. We'll see if this is going to load for me. I think I can just pull it up from here, but that's another favorite one I like. And do note that Zenith is only restricted really by your computer, and this is our demo computer, and it actually doesn't have any issues opening apps or things like that generally, but when we're streaming, that upload process kind of really slows stuff down. So let's actually just open up this regular chart. Let's try again. Okay. This time it opened up much faster. You also have like basic charting that you can do and utilize in here, and you can come into analysis, and there's a lot of different indicators and things in here. Personally, when I'm doing my very advanced charting, I'm using MetaStock because there's so many more features and tools available in there for charts, and it's really easy to work inside of MetaStock and Zenith at the same time. Zenith powers MetaStock real time. But if I'm just looking for like a general chart where I want to look at some like moving averages and have like a MACD or something like that, then I'll just look at it inside of here. You can still kind of come in here, double click these, and you know, go around and change them. One thing I do like to put on here sometimes is like I can add events onto my chart. So that's something I really like. I'll show you guys that. If I do that, and then I'm going to have to zoom out. Oh, I'm zooming in. And you can have those different indicators placed on your chart. I actually did not include them all the way, but you can then come in and like see like this is where a dividend occurred, or this is where that occurred, etc. Keep clicking into the wrong things. And then there's also like a lot of different drawing tools in here for you too, as you can see here. And I can go in and I can look at a 1 minute chart, a 5 minute chart, etc. Let's go back into a daily to show you guys that. And then there's a lot of different kind of just unique ways to go in and edit this and look at all of this info here. I can come in and add trend lines too, etc. So really cool. And again, there's multiple different types of charts in here. You guys can kind of play around with them yourself. I have like my own workspaces that I'll use for some of my charts, because then I can dive into it and I'll have, you know, all the different time frames that I want open. I'll have one with like events coming up and things like that. Or of course, you can pretty much combine a lot of that stuff onto just one chart as well. All right, with that said, I'm going to make sure that I'm checking on questions here. If you guys have additional questions or things you might want to see, or like a company you might want me to pull up, just let me know. And I'm happy to kind of do that for you guys. But something else I should say, if you guys are watching now, if you're interested in some of this, I recommend going in and checking out Zenith on our YouTube channel. A lot of you are probably watching on YouTube right now, but I'm actually going to kind of navigate there and show you guys. If you go to youtube.com/MetaStock, and then you come down to the search bar here, not the one up here, that's just YouTube. But if we come down to the search bar here, this is going to search our channel. And you can type in Zenith here. And you're going to have a lot of videos. Like I said, I've done some of these in the past. They're all a little bit different. But there are like some really good like training videos and things in here, or just videos on specific apps. Right here, we have a playlist with 27 different videos in it. If I click view this playlist, I can come in, and if I want to learn specifically a little bit more about market data and news, or the options watch feature, or the equities guide, or the economic monitor, or basic charting, etc., you can come in and watch more focused videos instead of having like, this hour-long demo going over all sorts of different things. It can be really useful to check some of these out, or some of the other videos that we've done in the past on Zenith. But don't limit yourself to just Zenith, I guess. As you've seen, we've had a lot of great speakers this week so far coming in and showing us things. So you can check out all sorts of different videos and things that we've done here in the past on our YouTube channel. So I highly recommend doing that. But with that said, let me now jump back into the correct PowerPoint, hopefully, and kind of go through some of this. So we touched on a lot of this. I mean, you have access to global markets in here, over 300 different thousand symbols, 40,000 research items. I mean, so equities, FX, metals, commodities, agriculture, etc. You're going to have all of that. You can really kind of customize it to your settings. I didn't really go too deeply on any of the individual apps. I was really just going through like our overview pages, showing you guys stuff. But I'm certain that there's some useful information in there that could probably help improve your trading decisions. So if you think some of this stuff has been useful, or if you want to learn a little bit more, let's get you set up on a trial. Or if you have more specific questions, come into our chat room, metastock.com/sales chat. We can answer any of your specific questions and help set that up. This right here is showing like the icon application. So again, Excel application. So you can connect into Excel and do a lot of further analysis in there as well. And again, this is kind of just going over some of the numbers that we touched on earlier, but you guys might be curious, how much does this cost? Well, that's one of the beautiful things. So as we mentioned kind of at the start, so Zenith or Icon itself, over $1 billion, you guys, went into the creation of that. And it's designed, the actual Icon version is designed for professionals and institutions, and they have to pay anywhere from several hundreds of dollars to several thousands of dollars a month to get access to very similar data. We're the only ones that offer a retail version of this via Zenith for retail private traders such as yourself. And you can get access for as little as $110 a month on our FX package. This still includes global delayed other stock markets, so you can still get all the countries, the equities, all of that, etc. But the pricing data is at a 10 to 15 minute delay. Or if you want to have live data for live analysis, you can get that starting at $165 a month, plus there's exchange fees that are just set by the exchanges to get access to that, just a few dollars for most like stock exchanges. But that of course can go up if you're like looking at live futures or something of that nature. And that's at just $165 a month. And what we're going to do as part of like our promotions throughout the week, and because you guys had to sit through that whole hour with me here, if you're still hanging around, I want to make sure you get a good deal. So we'll let you have 3 months access for the price of 1 month. So you can have 3 months to pretty much everything I've shown you for just $110 on the lower package here. And if you were interested in signing up for that, go to metastock.com/EK3for1, or maybe even easier to join in our sales chat, metastock.com/sales chat. In case you have other questions, we're happy to answer them for you, and we can help get you guys set up. We're also available on the phone, so don't hesitate to give us a call on the phone as well at 800-882-3040, or if you're international, we have Greg available who will post the international number, I believe 801-506-2000. We'll get you directly there. All right, and so that pretty much completes my portion of the demo, but we still have another speaker and some other things to show you guys. I'm going to go ahead and close that down. We will jump back into Jeff's slideshow that he's left me with here. So again, if you guys are interested in some of the other things, or like getting MetaStock, or taking advantage of our other promotions that we've been doing all week long, you can go to metastock.com/promo. And there's ways to sign up for like a trial of MetaStock there too. Or again, our sales chat can answer any questions you've had throughout the entire event, not just on the information that I've gone through. That was me speaking. So I also want to give a shout out to some of our sponsors. So AAII, the American Association of Individual Investors, has been sponsoring this event, and we're happy to have them on as a sponsor. We also have had a couple of other sponsors too, like Stocks and Commodities Magazine, etc. But I know that I am going into Mark's time a little bit. And I believe we already have Mark in the room with us when I was looking earlier. He's the man. He was the 2019 Timer of the Year with Timer Digest. And I know he does a lot of analysis on with volume and volume reversal. And we have a great trading system with him kind of built into MetaStock as an add-on that you guys would probably be interested in checking out. But I'm going to let him, the master of it, kind of take over and talk to you all about that. Hey, Mark, are you with me? I see you're in here as a panelist, but it does look like your mic is muted. Are you there, Mark? And also, is my volume up? All right, Mark, I'm going to send a request to unmute your mic. Oh, I might have just muted you when I did that, actually. Okay. Yeah, I just unmuted. I'm not sure. Are you there, Mark? I'm going to try this other one too. Hello? Oh, I know I went over by just a couple of minutes, and I hope I didn't make him think that he was up later.
I don't know.
Well, maybe what?
Do you know any songs?
I only know a few, and they're probably trademarked, like "Happy Birthday." So.
Okay.
Well, I know that he was going to be talking about his volume reversal toolkit, and I hadn't prepared myself to do a demo.
There he
of
is.
it.
There he is.
Oh, well, here he is.
Well,
Mark, I can
video
see
anyway.
you, but I can't hear you.
It looks like he should be good to go now.
Nope. Yeah, so I see that you muted and unmuted yourself, but I still can't hear you. I wonder if
Mark,
maybe you could.
give a thumbs up if you can hear us. Okay, why don't you have
Okay,
you
that's good.
the Jeff Gibby's patented fix for this is unplugging and replugging in your microphone on your computer, assuming you have a dedicated separate microphone. If that's not available to you, you might want to log out and log back in. Barbara, are you still there?
Yes, I am still here.
Okay, just my screen froze up a little bit too.
Yeah. Also, if you have like the GoToWebinar pop-up, if you click into audio, there's an option to like set your microphone. Maybe you're set to a different microphone, but Greg had a good idea to log out and log back in might be a good option. We still can't quite hear you here.
Looks like he's got an.
Sorry guys for the technical difficulty here, but we should have him up here in just a couple of minutes.
Maybe I can take a second at this point to tell people that they can. They'll be receiving emails within the hour with all of today's presentations offers, and to for sure take advantage of that. Also, if you want to still register for tomorrow's event and still be eligible for the prizes that Jeff's going to be giving away tomorrow, you can do so at, is he coming back? Still no sound.
Mark, I can see that you're talking and that your mic's not muted in GoToWebinar, but can't hear you.
Yeah, and the little speaker
symbol isn't coming off from his mic, so it's at his end.
Yeah, if you have the menu for GoToWebinar, there's one that says audio, and you can click the arrow next to it, and it'll open up the audio list. And then it should have your microphone listed as well as your speaker, and maybe you need to change your microphone.
Have you offered him the screen yet, Bobby? Maybe that'll help. Because we're still on your screen.
Yeah, I can try that.
I'm sorry, Mark. We can see you're trying, but we still can't hear you. He's muted.
Yeah.
Well, as I was saying before, if you want to register for today's event, just go to our homepage. From the top of the homepage, you'll see a banner. That banner clicks over to metastock.com/traders-conference, and you can register there. We do have one more day tomorrow. I guess it doesn't do much good for me to show on this end because then nobody on GoToWebinar would see it. But the speakers tomorrow, let me look at them really quick. I'll tell you what they are while we're waiting. They include, again, if you want to see these yourself, just go to metastock.com/traders-conference. A.G. Brown is the first speaker at 10 a.m. Eastern. Rick Sadler is the second speaker at 11. He'll be talking about trade simple to make more money. Marino Villatoro will be speaking at 12, 4 steps to simplify your day trading. Zahir Anwari will be speaking at 1 on Sublime Trading's Market Trade Advantage Toolkit. And then our own Jeff Gibby, 2 p.m. ET, Powerful Candlestick Strategies. And then Rob David will be speaking to, I think he's the last speaker. Nope. And then Jacqueline Monroe, I believe. We got a lot of speakers tomorrow. We got 8 speakers tomorrow. And then Barry Burns will be the last speaker at 5 p.m. Bobby, you're getting anything over there?
No. So, Mark, were you able to go into that audio and select your mic? Did you see that? I can't hear you.
As I say,
he's saying phone. I could maybe try calling you.
This is kind of a fun game. We could just do this for an hour. I don't have Mark's cell number.
Mark, do you want to type in your phone number and I can give you a call? If you just message it to me inside of.
Hey guys.
Oh, Jeff.
Is that you?
Jeff joined us.
Oh, that's Jeff. Yeah. Have we had Mark get booted out of the room? We can boot him and have him rejoin.
He did
logged
disconnect
out
himself. Go ahead. I'm sorry.
Okay.
Yes, we kind of tried that.
I can see his lips are moving, and it does look like he's calling me. So let me talk to him a little bit.
He can hear us, but we cannot hear him.
Yeah, okay. All right, hold on.
I'm trying my hardest to think of any dad jokes I have, Bobby, and they're just not coming to me.
Jeff has a book somewhere with dad jokes. I'm not sure where he's hidden.
By the way, this is a good time to point out that we have 48 speakers over 6. The fact that we don't have more issues like this is astounding to me, especially for the guy sitting in the control room, because it's not just things we can control, which we can never really control everything, but it's also the 48 individuals in their homes, and they've got their technical issues and their internet problems and their knowledge issues, and it's obviously frustrating for Mr. Lebovitz. I don't see he's getting any. Doesn't seem to be getting anywhere. But Jeff's a pro at this. He's done this forever. So if anybody can help him, it's Jeff. Again, while we're waiting, how about this, Bobby? On this end, I'll go ahead and play a video for the folks, and when you're ready, I'll keep an eye on you and just break back in, okay?
Okay. Yeah, just for those in to webinar. Bear with me here.
I'll keep your audio on so you can
we
break in it when you need to.
Yep.
Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you.
Probably just give me a big thumbs up when you're ready to go. I can see you, but not necessarily hear you.
MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Sorry, I'm not sure. So we appreciate your patience. I am still monitoring Bobby and Mark.
Okay, go ahead and click on slideshow.
Yeah, it doesn't look like
Okay.
they're yet.
Yeah, this will be
for us.
only kind of good, but I'm going to go ahead and we'll bridge the audio in through my phone. So you'll talk into the phone, okay?
Oh.
All right, no
Jeff's-
problem. I'm going to go ahead and mute me.
Jeff's got something worked out.
All right, guys,
Here we
can you
go.
hear me?
Yeah, we can hear you, Jeff.
Okay. We're gonna do an audio bridge from my phone. It's just like the best option we've got right now. So, Mark, go ahead and start talking.
Thanks for your patience. Sorry, we're having an audio problem, but here we are. So,
Jeff, you need to turn
Oh,
off
that's
your
not
speakers.
working.
Well, it would work except your speakers are on and it's reverbing.
Published VRTrader.com, and we're running a little behind here. One of the things I'm so proud about is our forecast for the year.
Bobby
These are
turn off
Jeff,
his
if you have
speakers.
speakers on.
rated partially through cyclical analysis and by volume work. And it's called VR Forecaster. This is available at our website. I'm looking, for example, right now at the annual forecast for the fabric. We've been doing this only since 1987, just to let you know.
Where the fuck's that reverb coming from? Oh, I beg your pardon.
I can't hear him. I think he needs to turn off his speakers if he's going to play through your phone, Jeff. When I'm pressing mute and unmute for myself, it's turning Jeff's on and off. Yeah, I'm not sure.
So,
Yeah, I mean, I think it might be best if we try to reschedule another one
okay.
at this point.
That's your. I
We
just
could
don't. I don't see this happening in the way that Jeff intended. It was a
Muted.
good idea. And somebody just muted me, so I don't know what's going on now.
Jeff and my login might be interfering with each other. But yeah, guys, it looks like we're just having some technical difficulties, and I think it might be best if we try to have Mark come in another day, either maybe tomorrow if that can be worked out, or another webinar in the very near future. We're more than happy to get him on once we've kind of gotten this all sorted out. I know we are about 20 minutes past the hour now.
Bobby,
we'll get this sorted out and have a redo,
the
rain check with Mark for another time in the very near future. We'll make sure everything's working so we're not having any issues tomorrow, but keep in mind we do have several speakers coming back tomorrow, so we hope to see you all again then. If you're really interested in what Mark has to say, which I think you should be, you could go onto our YouTube channel and see some of the videos we've done with him in the past. But for now, I think it's been a pretty full Friday, and so we can just plan to continue on tomorrow with the speakers then. Jeff will talk to Mark and see if we can either add him on to the end of the day tomorrow for you guys. Otherwise, we'll get another event scheduled with him really soon. But once again, I wanted to thank you all so much for being with us today. Let's go ahead and show my screen here, actually, while I'm saying all of this. So we've had a lot of really great speakers so far. Let me move these onto the other window over here. All right. And yeah, if you guys are interested in anything that you have seen so far, I recommend you check out metastock.com/conf promo. We've put a lot of the different special offers and things up on there. You can also sign up for a trial there. If you guys have questions about any of the specific speakers or things that you've seen throughout the event, come into our chat room. We still have a full team of guys that'll be here for a few hours at metastock.com/sales chat. And we will get the kind of hiccups worked out here so that we can have another full day tomorrow with you guys. And we'll make sure that we get Mark on again soon. Unfortunately, it looks like, we ran into some technical issues, which like Greg had said, with, 46, 47 different speakers, you're bound to run into a problem at some point. But thank you guys for bearing with us through this, and we'll definitely make sure to get this sorted out in the very near future for future events. So much for coming. Like I said, metastock.com/conf promo if you're interested in
kind of reviewing any of the offers or things that we've gone throughout the week so far, because we've been doing this all week long. And once again, be sure to join us tomorrow, as we'll have a whole new set of speakers joining us tomorrow for you guys to attend. And MetaStock.com is going to let you check out all of that stuff as well. We have a link on there to like register and to see the different speakers and everything that are coming out tomorrow. But I hope you guys have a great rest of your day, and I hope you have a great weekend coming up as well. MetaStock, as always, is so thankful to have these events and to be able to get so many great minds together to not only speak, but also participate in chat and everything. So thanks to all of you for watching and participating. And until next time, bye.
Hi, Kelly Clement here from MetaStock. Before you go, I have two quick things for you. One, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us, and keep on trading.